Hi guys, and welcome to the fast track tax version of it. Today we're starting off 19th November and looking to cover both GST and DT. Yes, I don't know what thinking you've come up with, but honestly, it doesn't matter where you've taken your classes and who's taught you before, because our agenda in fast track is slightly different. Let me tell you what we're targeting first. When you start learning a chapter, we focus more on concepts. Example, let's take the example of supply chapter. We understand what is supply, etc., all that definition, etc. While in this chapter or in this fast track course, of course, we're going to cover all those concepts more briefly, but we are going to target doing sums. And the sums that we try to avoid are the sums we are going to do today. That basically means one eye is on the Jan 25 exam and one eye is on ICI material. So back to back, we'll be doing all the illustrations, all the examples, all the sums that are in ICI material. Now, when you give an exam, it doesn't matter who's taught you. You know, the exam sums are the same. Same way, when you're doing this fast track course, if you learn from some other faculty, I would say even better, no problem, because that understanding plus whatever I explain plus both the shortcuts together will help you understand better. And the intention is to do more sums. As a CA student myself, guys, I remember studying the concepts very well. We study a chapter really well, set off chapter, okay, I know where it's going to be set off, etc. But by the time we end the concepts, we are so exhausted with the concepts that we don't land up doing as many sums. And that reflects when we hit the exam. Yes. Most people, when they walk in the exam room, they know the chapter, but they have not practiced too many sums. So our intention here would be to do more exam centric and more sum centric course. Yes. If you have a background, I'll be announcing every day what chapters we are going to be doing. If you have a background of those chapters, great. Otherwise, the morning time would be a great time for you to actually brush up on those chapters. If you want me to tell you where to brush it from, I'll give you notes also where to brush it up from and come back to class so that our discussion is more tailored to concepts in brief and then more sums. Yes. Every chapter we'll try and target to do all the ICI material sums, all of them. Yes. And if possible, we will at least try to do 3 sums in detail writing, like how I would probably do in the exam. Yes. So the idea is that, and as and when we move ahead, if there is a concept which is a pain point for you personally, example, let's say you've not understood RCM, reverse charge mechanism, and you feel you want me to throw more light on RCM, you let me know and we'll throw more light on that concept. Yes. So we'll tailor it to that. And now, assuming that you've done this before somewhere, I'm not saying you've done it 100%, but you at least begun studying that course or the subject. I think it'll be a more meaningful discussion, more interactive discussion, because you'll know exactly which you've not understood, which you understood, and we'll take it up from sums. And the more sums you do, honestly, guys, the better your concepts get. So that's a very good correlation. Sometimes during our regular course, we don't spend so much time doing sums, and that is what we'll cover. That ground we'll cover today. Yes. Looking to start with GST. I was thinking of starting with GST, but if all of you feel we should start with DT, we can start with DT also. So I'm perfectly okay starting any. I'll be sharing some notes with you guys. In fact, I'll be sharing a drive link. I'll just show you and introduce you to the drive link here. So this is CA Inter, let's say IDT. And for IDT, there's a CA Inter IDT crash course for Jan 25. I'll just show you what all are there. Per chapter, there are some handwritten notes. So if you feel that you don't know where to read from, etc., I have handwritten notes per chapter. So every chapter, whether it's introduction, whether it's value, supply, there are some handwritten notes which you could refer. This is one thing. Next, all the sums we are going to be looking at ICI material. So all these ICI materials that you see, we will just be opening them, going to one illustration after illustration. The concepts we don't need to read from ICI material. The concepts we'll discuss. We'll use our books to read the concepts, and sums we'll use ICI material. That's second. Third, we'll be looking at past papers also. Yes. In the past papers, I've highlighted which chapter they are from. Example, let's take November 22. When you see a paper, let's go to GST, because I'll be talking about GST today. So if we go to GST, let's see, this is the GST part. So we'll be talking about particular chapter. If we finish one chapter, we'll be talking about that. Let's say this first one is from ITC and payment chapter. So when we do ITC and payment, we'll be looking at these kind of sums also. So that's the third level of past papers that we'll be doing, RTPs, MTPs. And then there is a quick book. I'll introduce you to this quick book also. This is a quick book which basically is about, I'll tell you how many pages here. I think about 41 pages. And what this quick book does is basically helps you do a very quick revision of everything, every chapter. So right from introduction to all the chapters here. And while you revise, example, let's say it's one day before the exam and you want to revise a chapter called value of supply, you can actually use this book to revise. And every time there is a sum here, this is question number 2 of ICI material, question number 3 of ICI material. So you can stop exactly here, go to ICI material, solve that sum, read that sum, come back here. So we can do that, switching with this quick book. And it's all of 40 pages for GST and 40 pages with a lot of gaps. As you can see, I've kept a lot of gaps here. I've not like completely filled it up. So there's still a lot of gap. If you can see here, I've kept all the space empty and still it manages to finish in 40 pages. So that's the GST QuickBook. Same way we have a DT QuickBook also. That's about 60 pages or 65 pages. So these are quick revision books. I'm not saying you have to study from here, but if you're looking for an alternate to wherever you've studied from, then this could be a good alternate as well. Yes. So while I was mentally thinking of starting with GST, I'm equally happy to start DT also. You guys let me know, guys. What do we want to start with? So should we start with GST? Should we start with DT? DT here. GST. Okay. How many people for GST? How many people should we start with GST? Okay. So it's a mixed thing. Let's at least start with GST. Okay, let's start with DT, no problem. So if you guys are looking for DT, let's start, it's anyways the same. Let's start with DT and then we'll move to GST. What I was thinking was that GST is a smaller portion, so we'll finish that first and then we'll move to DT. But no problem, we can start with DT also. And once we finish DT is when we move to GST as well. There's absolutely no problem. We have to do both anyways, and we have to do both well anyways. So that is the intention. What am I expecting out of you guys? You should have one book where you solve a lot of sums and make your markings, etc., so that you can go back to those sums whenever you revise later. And also when we look at DT, I want to just before we start DT, I just want to talk to you guys about what are your pain points, which chapter did you find difficult, anything, just a freewheeling, so I know where to also put some more energies when I teach. Yes, so let's start with some chapters. I'm going to tell you some chapters and you can also tell me which chapters which you found difficult in DT if you can think about it. Anyone? Yes. Deductions. Okay. My favorite chapter, actually. You'll not have any problem with deductions. So deductions under chapter 6A. Absolutely amazing. That is something that we'll easily cover. And after this, you'll have no problem with that. Anyone else? Yes. Salaries and the last few chapters of GST. So like right now, okay, let's make DT. And since you mentioned GST, so I'll put GST also here. Can you name like last few chapters means what? Accounts records. Okay. Accounts records, e-way bill. Okay. Anything else that comes to your mind? Okay. Yes. Anyone else? PGBP. Okay. In TD, PGBP. PGBP, is a very different animal. It looks very different, and in the exam, it's very different. Yes. So the way we prepare ourselves for PGBP and the question which comes in the exam are very different. So I'll probably teach you PGBP and then take you to the exam question to see how it comes in the paper. Yes. TDS TCS. Very good. In fact, actually, both the chapters that you mentioned, whether it's deduction or TDS TCS, are compulsory questions. I don't know if you're aware. As TDS TCS is every year in the exam, and so with deductions every year in the exam. Salaries also, PGBP is also there. Salaries, 1-2 attempts is there, then 1-2 attempts it disappeared. Yeah. So these are some chapters. I want more people to tell me. Yes, here. Any pain points? GST. Okay. Anything else? Yes. Yes. Okay. So perfect. So we'll put those things also. How do you revise for one revision strategy? This time you all had 2.5 days. That was a good thing for September. But the paper, of course, was difficult. So how do we revise that? We'll target 1.5 days. How do you revise that? So we'll talk about that also. Yes, I want a little bit more so I can know focus clubbing. Oh, wow. The easiest chapter, of course. Very easy. So we'll tackle that also. Okay, clubbing of income. Anything else? Yes. Yes. What? Yeah, the clubbing exam. Oh, set off. That is set off. Yes. Anything else? While you were studying, you probably found that too big or you found it too confusing. Which questions to practice, which question not to practice. We found it difficult. As in from the book, which ones to practice as in write? Okay. So, okay. We'll talk about that revision strategy. Questions to practice. Honestly, 1.5 days before the exam, you ideally should not practice even one sum. Like you should not write, because what happens is in that much time you can finish like one chapter. So but of course leading towards the exam we will be practicing, And I'll tell you also which, probably I'll give you an idea of which kind of questions you should practice a little bit more. Yes, I've not heard in the middle there. Yes, any? Yeah. TCS. Oh, that is so simple. Nice. I'm liking the fact that your pain points are simple, except one PGBP, which I think is a pain point for many people. Otherwise, these pain points are very simple. Yes, somewhere there behind. ITC. Good. In GST, ITC. Again, very logical. I have some nice shortcuts I could teach you some very logically, and also ITC. I'm not sure if you're aware, but the first question of GST, which is of how many marks, guys? Yeah, so that question is mainly on ITC. So we'll talk about that as well. Yes, anything else? Anyone else? Sir, your yes, any chapter which you found difficult? PGBP. So we're covering that as well. Yes, the girl there. Yes, any chapter while you were studying GST, DT, PGBP. Okay, collectively PGBP is something that we'll tackle. Yes, haven't heard from you. PGBP. Okay. TDS, TCS in DT. Okay. All right. Perfect. Yeah. This sounds good. Set off no one has mentioned. Return of income is simple. So, okay. While all this is great, I'll also do a little ABC analysis, and of course, ABC analysis being A being the top chapters. And while we do this, we'll also predict the paper. We'll kind of predict the paper as to which kind of chapters are always there, so we can focus our energies more on those chapters. And there are some chapters which are not so important, so we should not focus. No one's asked for capital gains, but that also a lot of people find it difficult. But if you guys are okay, we are anyways going to cover almost all the chapters. Yes. So this is what it is. Let's begin. Yes, today's session. Um, we'll start with DT. I'm just going to save this so that we can revisit it on the last day if we've covered all these points. Yes, this is for the fast track course. This is my to do. All right. People who met me know me. The others, my name is Sourabh Mutha. Of course, late introduction, but here it is. And I love teaching tax. That's a simple introduction. I've also been breathing, eating, sleeping tax because since my articleship days, I've been doing tax. I did tax at PwC first, did my articleship there. Then again worked with PwC for a while, and then again moved to EY, which again was in tax only. So somewhere tax for people is a pain because they have to pay a lot of it. For me, I enjoy it because, of course, even though I pay it, I also teach it, so I enjoy it. And I feel tax in India is very, very aggressive, but there is some method to that madness. There is some amount of logic which we can bring in. And I just feel that we'll do much better after this crash course than what we've begun on this crash course. Whenever date we finish our crash course, whether it's tax, after a few days also, if you feel you have any doubts, etc., we can have another session here if you want, like before the exams, a few 1 week before the exam, if you all again want to have a session, we can also, or we can do like a Zoom meeting where we can collectively discuss doubts as well. Yes. So on that note, although I mentally came prepared for GST, but I'm of course always prepared even for DT. So we'll start with DT. All right, guys. What I will do is first, every chapter we'll discuss the concepts. Yes. And while we discuss the concepts, I'm going to take you to my book called the Quick Book. Yes, not marketing any book. It's the smallest book I know. So we'll take it from that book. That book will be shared with you as a PDF. But if you've been studying from some other book also, I'm happy for you to open that book and study from that book. That's perfectly okay. But once we finish the concepts and we look at the Quick Book, then we'll look at questions from ICI. And do you guys all have the ICI material, the DT book? Can you bring it to class regularly? So that what happens is, of course, I can show it on the screen, but we can also mark. Like his question was which questions to solve, which not to solve. So I can help you which ones to solve. We can do a marking. So from tomorrow onwards, if you can get the DT book, it'll be great. And let's target right now. It's about 3:30, and we're looking at the start. Let's target 2 hours per chapter. If possible, we'll of course bigger chapter like PGBP will take 4 hours, 5 hours maybe. But let's target first. Let's target 2 hours. In that, let's discuss all the concepts for half an hour. And then for 1.5 hours, we'll solve sums. Of course, this is just a ballpark number. It's not that after 2 hours, suddenly, it'll go off. It's not like a Netflix subscription, which will go off or something like that. We can continue till whenever we finish the concepts. Yes. So we'll start off the entire DT journey. And DT journey, if you've been a part of my lectures, guys, I take the example of this guy who's a surgeon. So we'll keep using his name. So if I use surgeon, you know that he's the main guy. And from his angle, we look at it. And also one very good way of learning DT is start thinking from the government's perspective, that The government wants to run a country like India and they want to apply tax. More and more tax they get, they can run the country better. Because the moment you go anti-government or you think like, why are they applying the tax? You don't understand the logic of tax. So every time there is something to be taxed, example, dividend tax. Do the companies already pay tax on their profit? Yes. And when we get dividend, are we taxed again? Yes. So is there double tax? Now, oh, why there is double tax? That's not the way I want to think. I want to think that way, that the company has paid its tax, we are paying our tax. So we both are equally paying our taxes. That's how I would like to think from the government's perspective. So that is there. And we would like to just first give a snapshot of where it all lies. So let's take all the steps. I'm looking at the first chapter called Introduction or Basic Concepts already. And it will not take us more than 10-15 minutes to have a little introduction to the first chapter. So the first chapter, Income Tax Act, guys, first up, Income Tax Act, you will write it like this. Every time you have to write it, Income Dash Tax Act is capital, and which is the year? 1961. And which are the rules, guys? Which year is it? 1962. Mainly, we'll not be looking at rules, we'll be looking at the act. And by the way, I've not spoken about it, but we also have to learn DT sections. So as and when I'll keep plugging in sections. And in the end, I'll give you some top 50 sections. I already have a Word document, and you can buy out those sections for the exam perspective. All right. Next, guys, there are different persons. Example, all of us in this classroom, who are we? Individuals. Can we earn our own money? Yes, and we will pay our own taxes. Straight away, like that, there is something called HUF. Even they earn their own income, even they have their own PAN number, and even pay their own taxes. Yes, if you didn't know it, now you know it. Next comes partnership firm. Guys, a partnership firm also has its own PAN. They also pay their own taxes. Example, guys, this lecture I'm taking right now, the money that I'm making as a person who's teaching, guys, I have an individual, I pay my own taxes. But back in Mumbai, I have a partnership firm, which is the CA firm. That partnership firm earns its own money, has its own PAN number, pays its own taxes. Yes, in case you didn't know, you should know. In income tax, partnership firm and LLP, technically are they different? Yes, but from a tax perspective, they are exactly the same, bearing one difference, which I'll teach you ahead. Next, there is something called company. A company registered in India is called Indian company, domestic company. A company which is registered abroad is called what? It's foreign company. So these are all companies. And then we have something called AOP, Association of Person, and something called BOI, Body of Individual. Let me give you an example of AOP. AOP basically means that if I as a faculty join hands with some academy and we run courses across India and we make money, we will be called an association of persons. Who will pay the tax? Me as a lecturer or the academy? No, guys, there's no profit sharing ratio. So when we have an entity called AOP, which is the entity, the AOP will pay the tax. Yes. But what if we put a ratio? Example, I'll take 60% profit, the academy will take 40% profit. Then this AOP becomes a partnership. So it's very close to a partnership firm. And BOI is body of individual. Here it's not a planned effort, but involuntary, like three people got a flat together and they started earning rental income. That's called body of individual. Guys, all this takes you away from the exam. While we learn all of this from the exam perspective, the only thing that comes in the exam is what, guys? Individual. So what I want to do in this fast track course is not deviate from that and focus only on what comes in the exam. So in the exam, mainly all the questions are from what perspective, guys? Individual. Next, guys, while we're talking about it, there are some steps to tax. These are the steps which you should know. First, we want to determine the legal status of every person. In this class, everyone is a individual. Everyone is a individual. Your exam question will also be on a individual. Next, once you know the legal status, we need to find out the residential status. Everyone okay? What are the two kinds of residents that we know? One is called resident and one is called non-resident. In resident also there are two parts. One is called ROR and one is called RNOR. Full form, guys, here ordinary resident, here is not ordinary resident. Now the difference being here, guys, NRs are hardly taxed on incomes. In fact, they're only taxed on 4 incomes. How many? 4. We'll see in that chapter called residential status. Next, RNOR. Are they not ordinary? They are also taxed only on 5 incomes, everyone. NRs taxed on how many incomes? 4. RNORs taxed on how many incomes? 5. And ROR, unfortunately, because they are in India all the time, like we are in India, they are taxed on all incomes. Let's take a simple example. I'm a resident and ordinary resident. If I have an apartment in London, which is given on rent in London, will UK tax it? Yes. Why will UK tax it? Because the income is where? In UK. But India will say that, listen, you're a ROR, you're a resident and ordinary residents, so they will tax me. So I basically will pay tax twice, one in UK and one in India. Guys, that's wrong. We will get a relief in CA final. There's a chapter called double taxation relief. But for CA inter, ROR is taxed on which income, guys? All incomes. While this is sad as a ROR, as a student, this is great because in the exam, the question comes on what, guys? ROR, you will tax how many incomes? All. Yes. Next, after residential status, guys, you need to figure out which incomes are taxed in India, and that is called scope of income, guys. What is that called? Scope of income. Example, I'll take an example of, let's say, Trump, Donald Trump. Let's say Donald Trump is setting up a Bangalore building in Bangalore called Trump Towers. He's making some building in Bangalore and he's selling apartments here. Will he be taxed in India? Yes. Why? Because the income is in India. But can we tax his US income in India? Guys? No. So scope of income means all those income which may be taxed in India. All right. Next, guys, your incomes are divided into how many categories, guys? 5. They are called heads of income. How many heads of income, guys? 5. If you have a job, salary. If you have a house given on rent, house property. If you have business, PGBP. If you have capital assets like gold and you buy and sell, capital gain. And all the additional income goes in IFOs. So how many heads of income, guys? 5. And each head of income, guys, when we offer income to the government uses a golden rule, which you will learn right now, guys. It's called give and take. What is the golden rule called? Give and take. What is this golden rule? It's a shortcut to understand tax better. In each head of income, when I offer income, example, in my business, can I offer PGBP income? Yes. Let's say this month I offer income of 2 lakh rupees. How much? 2 lakh. So the government says, because you're offering this income to us, the government gives me something back, and those are called deductions. What are they called, guys? So what do we offer to the government? Income. And what do they offer to us, guys? Deduction. So in PGBP we have deduction. Example, guys, to take this lecture, let's say I've got a Wi-Fi connection. Can I take that as a deduction? Yes. My petrol expenses, can I take that as a deduction? Yes. So all the expenses connected with that, I can take a deduction. Are we okay with that, guys? So we'll be talking about each head of income and the deductions under them. Next, the final net income. Let's assume it's all 2 lakh. So 2 lakh into 5 is how many lakhs, guys? 10 lakh. They will go into a waterfall and they will reach a stage called clubbing. Now, let's briefly talk about what is clubbing of income. You guys have an idea, but one person found it difficult, so I'm going to talk a little about clubbing. My income should be taxed in my hands. Is that right? Yes. But unfortunately, I am taxed in the 30% tax bracket. But my spouse, she right now, let's say she's a homemaker and she does not have any other incomes. And you all know, because you've studied tax before, that up to 5 lakhs you get rebate. Up to 5 lakhs you get what? So she has a rebate up to 5 lakhs. So is it possible that I make an FD in her name? Yes. And the interest who will earn? She. And the government will get tax of 0, because up to 5 lakh the government will not get any tax. Now this the government doesn't like. They say, if it was your FD, then why did you park it in your wife's name? And even if you did, the income will come back to you. What my shortcut is, my shortcut basically means a memory technique. The dog always goes back to the owner. Everyone, the dog always goes back to the owner. So it was my dog, I kept it to someone else, but they will come back to me and it will be taxed in my hands. So that FD which was in my wife's name, guys, who will earn the interest? My wife. In whose bank account will the interest come? My wife. But when I file my tax return, that income I have to show in my IFOS and I have to pay the tax. Yes. So this way people cannot manipulate this basic exemption limit and the rebate. Next, guys, while we have profits, which is great, the government says don't worry. If in case you have losses, what do you have? Losses, you can set them off. Set them off basically means I have two businesses. One is a profit of 100, one is a loss of 20. Can I minus it? So I'll be taxed on the net income of 80. And if you can't set off the loss this year, then you can keep it for later and you can carry forward. So what is this called, guys? Set off and carry forward. And then guys, finally the number which you get is a number called gross total income. There used to be a time when people used to pay tax on gross total income, but not anymore now. Now the government has come up with another way of pleasing people. They said after gross total income, if you contribute to something like medical insurance, etc., then you will get a deduction which is called deductions, under which chapter, guys? 6A. Now, how do I remember it? What is my shortcut? How many heads of income, guys? 5. So have you already got 5 deductions? So this is the 6th one. So this is not the 5, this is separate deduction. So this is the 6th one, and it has no connection with business or house property. Example, I pay medical insurance. What do I pay? Is it connected with my house? No. Is it connected with my business? No. Still, I will get deductions here. So the government has said that if you take care of yourself, like pay medical insurance, life insurance, etc., we'd like to give you a deduction here. Are we okay with this, guys? Yes. So this is deduction under which chapter, guys? 6A. After the number we get is called total income, guys, and this is the number to watch out for because the government says that we will tax you on which number? Total income. So this is the number in which you are taxed on, and you don't pay your tax in one shot. Yes, you paid in parts. One of the parts that you pay is called advance tax. Everyone, what is the one part you pay? Advance tax. Some tax you pay through TDS and TCS, and whatever balance tax is whenever you file your return, you will pay. That is called self-assessment tax. Everyone okay? So the tax is the same, but I paid in different parts. Example, if my tax is 1 lakh, can I pay 20,000 here? Yes. Can I pay 20 more here? Yes. So how much total? 40. So can I pay 60 here? Yes. That's how the government collects the tax. Yes. And ultimately, all this happens in the previous year. What is PY, guys? Previous year, and your exam previous year is 23-24. What is your exam previous year? 23-24. The Jan exam, what I mean is your questions will be on previous year 23-24, which is nothing but assessment year 24-25. I'm just showing you diagrammatically what this means, guys. This is what it is. This is previous year 23-24, and connected to that is which year, guys? Assessment year 24-25. Now how do I look at it? I look at it like my name and surname. If you say Saurabh, that also means me. If you say Mutha, Mr. Mutha is also me. So same way, if I refer to this year also, it's the same. And if I refer to this year also, it means which year, guys? Previous year 23-24. Are we okay? So in the exam, whenever you want to refer, ideally use assessment year, or what I do, I use both. So at the top, when I make a table, I write previous year and bracket assessment year also. Yes. So most of your exam questions are going to be in previous year and assessment year. And by the way, guys, your previous year is a leap year. Yes, just saying, guys. 23-24 is which level? Because whenever we have to calculate number of days, we'll have to take how many days, guys? 366. Are we okay with this, guys? Yes. So this is almost like the first chapter, introduction of basic concepts. Honestly, there's nothing much to do in this chapter, but ICI material in this chapter is tricky. Because ICI material in this chapter, they put 115 BSc, they put everything in this first chapter only, which is actually not right. So I'm going to make this chapter and keep it separate. So this is our chapter. From this chapter, what are the key takeaways? That your exam paper will have individual, everyone. All the sums will be on what, guys? Individual. Second key takeaway is, guys, there are different steps. Third key takeaway, previous year, assessment year. Income tax act, which year? 1961. Yes. All right. Now, guys, while this is the first chapter, this is pure introduction, nothing more to do, and exam importance is 0. Ideally, 1.5 days before the exam, if you want to save time, this is a chapter you will completely avoid. Everyone. Now, what I have done is, while the first chapter talks in the ICI material, talks about this also and rates of tax, I have segregated both. So this was the first chapter. I'm just going to, as and when we complete the chapters, guys, conceptually, we'll write it down. So which is the first chapter that we did, guys? Introduction to DT. I also give it importance. Importance is 0 on 5. Yes, that means this is a chapter which you'll keep far away when you have to revise. You will save like 15 minutes of your life ahead if you don't revise this chapter. It's good. Nothing comes from this chapter except the concept which you already know. Now the second chapter that I want to start with is called rates of taxes. What is this chapter called, guys? Rates of tax. This is no chapter in ICI material. In fact, ICI material has put this in the first chapter. Yes, but I am segregating it, and this is called rates of tax. The importance is 5 on 5. Yes, I'll tell you when to flip to that page, but right now this is rates of tax. Now, while we make a lot of sheets, we'll make, guys, we'll also make a prediction list. So this is CA inter, this is DT, and we are making a prediction list of what comes in the DT paper so that we can score our marks easily, guys. One of the first things that you will see in question number 1 is find out total income. There'll be a person called Mr. A. Find out his total income and his tax liability. What will happen, guys? Total income, and so for that, guys, you will need to know what rates of tax. So this will come definitely in question number 1, and you will get roughly around 4 marks for it because the total question is for 15 marks. Out of that, at least 4 marks will be reserved for rates of tax. So there is no way you can skip this chapter. You should know how rates of tax are working. All right. So now this is DT prediction. I'll keep making these sheets and I'll keep uploading them on the drive link. This is again fast track Jan 25 prediction. All right. So ending this here, this is chapter list. Now, guys, let's focus our energies on rates of tax. Rates of tax is a chapter which has many things from the old scheme, new scheme, everything. What we will do is we can't do the entire thing right now. We'll do a lot of it, but we'll not do the new scheme right now. We'll do the new scheme only after we finish deductions. Yes. All right. So I think a lot of you guys know rates of taxes. Whatever you can recollect and contribute, that will help me understand you better as well. All right. So this is the second chapter, guys. Let's inaugurate the chapter which is called rates of tax. Guys, in India, all of us are individuals. Are we taxed in a particular manner? Yes. HUF? Yes. Partnership firms? Yes. Companies? Yes. So each one pays slightly different taxes. Again, from an exam perspective, guys, the most important person for you is who, guys? Individual. Your exam question, you can take the last 10 years paper, guys. Every time the rates of tax or the calculation is only for whom, guys? Individual. So if you're looking at partnership firm, companies, etc., majorly too much, you're wasting your time. Of course, we'll go through them, but not major. Major focus should be on what, guys? Individual. Yes. So let's talk about individual and let's start. Whenever you take in your classes, I'm not sure when you taken, but right now, guys, the scheme is such that an individual has two options: Zomato and Swiggy, Uber and Ola. And which one will the individual choose? Whichever is cheaper. Same way, guys, here also, as an individual, you have two options. One is called the optional scheme, guys. What is it called? Optional, which I called as the old scheme. This, which is the scheme, is old. And then there is a new scheme which they call as what, guys? Default. I call this the new scheme. This is my shortcut bracket, guys. So for people who don't know, this is how I use my shortcut. So this is whenever I say old means optional, and whenever I say new means default. And this is under section 115 BAC. This we will do later. Right now I'm doing the optional one next, because for the new scheme I want to talk about deductions. Only then it makes sense to do the new scheme. Yes. In the exams, or which one will come, I'll tell you surprisingly, guys, this last paper, guys, or the last to last paper did not ask about the new scheme. They only focus on which one? Old one. So that's the ICI examiner's choice. But I'll tell you what will happen. Most questions now will be either on the person has opted for which scheme, default, and rarely they will say that the person has opted out of which scheme, default. Opted out means old scheme. Are we okay? First, let's focus on optional and then we'll go to default scheme. Yes, guys, a lot of this you already know. Individuals, guys, who are below 60 years. Below how many years, guys? 60. All of us in this classroom are below 60 years. How are we taxed? Guys, we first have a basic exemption limit. Up to how many lakhs? 2,50,000. And how much are we taxed on that 2,50,000, guys? Zero. This is called rates. What is this called, guys? Rates. And this is called slab. So from 0 to 2,50,000, how much are taxed? Zero. Then, guys, if you earn more than 2.5 lakh, to how many lakhs? 5 lakhs, then you are taxed progressively at what rate, guys? 5%. That's why income tax called progressive. As and when we progress, they also progress with us. Next, if you earn more than how many lakhs? 5 lakhs to how many lakhs? 10 lakhs, then the government taxes that at what rate? 20%. And if by chance we earn more than how many lakh? 10 lakh, then the government taxes us on what percent, guys? 30. This number that I'm talking about, what are these numbers? Are these gross total income or total income? Total income. Guys, this number is which number, guys? So this entire chapter of rate of tax focuses on which number, guys? Total income. Unless we know total income, we cannot calculate rates of tax. Lots of students ask me and tell me that, sir, I want dividend income. At what rate will I be taxed? I say, no, you're not taxed on dividend income. You're taxed on total income. You get the total income and then you have to apply the tax rates. Are we clear about it, guys? Yes? All right. Next, guys, in the exam, they say age. And if the person is how many years, guys? 60 years or more, then what does he become? Senior citizen. Yes. And in that, only one change happens, guys. Up to how many lakh? 3 lakh, 0. 3 to 5? Same. So I'm not writing it again, guys. We are saving time because it's a fast track course. Yes. And if it's 80 years or more, guys, then what happens? Then the first two slabs disappear. Up to how many lakh? 5 lakh, he pays how much? 0. 5 to 10? 20, and more than 10? 30. This is never asked theoretically. They give you a sum, they tell you a number, and you have to calculate. So please get your calculators for tomorrow so that whenever we calculate, you are ready, well versed with it. And for someone who's a non-resident, that means, do they stay too much in India? No. So we don't give them too many benefits. We tell them the only benefit we'll give you is how many lakhs? 2.5 lakh, no matter what your age is. So if there's a non-resident who's 62 years old, what is the basic exemption limit? 2.5. What if it's 82 years old? Stay 2.5. Now, while this is called basic tax, what is this called, guys? Basic tax. So everyone has to pay some basic tax if you earn income in India. And while this was happy, people are happy paying tax about 2.5 lakh, the government suddenly gave a nice bonus. They said everyone who earns up to 5 lakhs, up to how much, guys? 5 lakhs. The government said, listen, people who are earning up to 5 lakh rupees, you don't make too much money in India. So as a gesture, we are going to give you a rebate. What is this? Rebate. Rebate means a discount. What is it, guys? discount, and this is a section called 87A. Everyone, what is rebate section? 87A, and they said that if you earn up to how many lakh? 5 lakh, then I'm not interested in taxing. We'll calculate your tax, but we'll minus the tax as a rebate. So if I'm earning 4 lakh 80, guys, everyone, if I'm earning 4 lakh 80, will I have some tax? Yes, but then I will get what, guys? Rebate. The rebate is maximum 12,500, guys. What is the maximum rebate, guys? 12,500. Everyone, do you guys have a calculator today? Yes. Whoever can get come out, yes. Let's do a simple maths and let's see if a person who earns 4 lakh 80, how will they get the rebate, guys? Up to 2.5 lakh, 0. 2.5 lakh to 4 lakh 80, what is the gap? Guys, what is the gap? 2 lakh 30. So on your calculators, please take 2 lakh 30 into 5%. 11,500. So total basic tax is how much, guys? 11,500. But you will get a rebate of how much, guys? 11,500. Everyone okay? So rebate, when do you do rebate, guys? The shortcut is BR. Guys, what is the shortcut? BR. Basic tax, rebate. Everyone, what is BR? Basic tax and rebate. They go hand in hand. Are we okay with this, guys? Yes. Next, guys, in the exam, rarely, but if it comes, if a person is earning more than 50 lakhs, or if the person is earning more than 1 crore, or if they earn more than 2 crore, or if they earn more than 5 crore. So if the person is earning such high incomes in India, the government says, listen, you'll have to pay a small tax more, and we call it what? Surcharge. This is only a rich person's problem. And in the exam, you won't even bother this unless the incomes are high. Otherwise, don't even bother with surcharge. The rates are 10%. If this is the case, 15, this is the case, 25, and this is the case, 37%. Now, surprisingly, this is not a tax on your income. This is a tax on your tax. So if my income is 52 lakh, just wait, guys. If my income is how much? 52 lakh. First, you will calculate what? Basic tax. And let's say the basic tax is 11 lakh. Then my surcharge at 10% will not be on 52 lakh. It will be on what, guys? 11. And my shortcut is we all look back. We all look back. Basic tax looks at income. Basic tax looks at income. Surcharge looks at basic tax. So they all look back, guys. Are we okay with this? Yes. So surcharge, this is the thing. I just have a question to ask you. What if I'm earning exactly 50 lakhs? No surcharge. It only starts above 50 lakhs. All right. Guys, while I talk about surcharge, there is a very useless thing which a lot of people focus on, and that's called marginal relief. Yes. If you're earning 50 lakh, 50,000, you get some marginal relief. Guys, marginal relief, your DT paper is how many marks, guys? 50. Out of that, MCQs are 15. So what is the other marks? 35. They don't have the marks to give you marginal relief. It involves a lot of calculation. And we have 13, 14 chapters to ask for the 35 marks. So guys, another way of solving sums and saving that 1.5 day, don't focus on margin. I'm telling you, it has never come before and it will never come again. Yes, so marginal relief. I'll tell you what happens is there are things which we focus on which don't come in the exam. Instead of focusing on marginal relief, if you focus more on the default tax, do more sums on default tax, it'll get better. That time will be well worth the investment. Yes. Anyways, and then we come to HEC. This is the third part. What is this called, guys? Health and education cess, which is what percent, guys? 4%. Everyone. All. Guys, while this is for individuals, let's also talk about HUF. Hindu undivided family. Same way. They also have slabs starting at 2.5. 2.5 to 5. 5 to 10. More than 10. Same rates also. Only thing is, because it's a family, there's not one person, there is no 60 years, 80 years. Everyone gets how much? 2.5. Are we okay? I surcharge also the same. 10%, 15%, 25, and 37%. HEC is also same. I'm also telling you something here again, guys. Because of so many papers having seen over the years, I can tell you that HUF is never a sum in a big paper. All that HUF companies, all that CA file. That CA entrance only whom, guys? Individual. Focus, become like that horse with blinkers and focus only when the marks lie. Yes, so individual it is. You should know, have a good grip on individual. Yes. Next, so we are done with individual. We are also discussing which one, guys? HUF. Two things HUF don't get. Guys, they don't get a higher basic exemption limit. So that means their basic exemption limit is fixed at 2.5 lakhs. Are we okay? And guys, another thing which they don't get is rebate. Because guys, as a family, we've already given rebate to whom? Individual. So we don't again give it to whom, guys? Family. So these are two differences. But I'm very confident HUF will never get you any marks in the exam. Doesn't come in the exam. Yes. Next one again is a thing that we have to only learn here, but does not come in the exam again, is partnership firm and LLP. Guys, again, there are three things: basic tax, surcharge, and HEC. Even a partnership firm like Yeshas Academy, I'm not sure if you know, Yeshas Academy is a partnership firm. When they make money, guys, it goes to total income and they have to calculate which tax? Basic tax. It is a flat tax of 30%. No slabs. So what if Yeshas Academy, if they earn a profit of 2 lakh also, 30%, 2 rupees also, 32 crore also, and 20 crore also 30. So there are no slabs here, guys. It's a flat tax of 30%. For a student, very easy, but as a firm partner, guys, very painful. Because even if we make whatever money we make, we have to pay how much percent, guys? 30%. Next, surcharge is very simple. If it's earned more than 1 crore, more than how much, guys? Surcharge is 12%. And HEC is always the same, guys, at what percent? 4%. Now, guys, all of you guys who will forget this, it's even better. Never comes in the exam. Yes. Why I'm trying to tell you this is when the more CA papers you see, the more you'll understand what I'm trying to tell you. That all these, while they're taught to you, in that 35 marks, there is only so much scope to ask you. And they ask you more from an individual perspective. Yes. But now with MCQs, can they ask you a little question here and there? Yes. So we should know it, but our energies should be on individual. Yes. And last, guys, is company. Guys, there are two kinds of companies. One is Indian company and one is foreign company. All right. Guys, Indian companies are taxed at a flat rate of 30%. Foreign companies are taxed at a flat rate of 40%. Are we aware of this, guys? This is not right. This is a discrimination. Guys, 30 and 40. But guys, foreign companies are told that, listen, are you Tesla US? Yes. Then why don't you become Tesla India Private Limited? If you register a company in India, you will tax you at what rate? 30%. McDonald's US, 40 if they have income in India. But McDonald's India, 30. Starbucks US, 40. But Starbucks India, 30. So we are inviting them indirectly to come and register in India. Next, guys, the surcharge rates are very different here, guys. For a foreign company, if they earn more than how many crore? 1 crore, and more than how many crore? 10 crore. They pay only surcharge of what rate? 2 and 5. Yes. Again, I'm not focusing here because honestly, guys, I'm tailoring this entire course towards the exam. And none of the exam courses questions have asked this. But anyways, what is the surcharge? 2 and 5. Can we add 2 and 5? How much is it? 7. So here it is what, guys? 7 and 12%. More than how many crore? 1 crore. More than how many crore, guys? 10. Are we okay? So the surcharges are very low, and HEC I'm not even writing is the same. What rate, guys? 4%. Yes. While we've spoken about all this, focus your energies where? Individual. So in the individual, guys, can we repeat basic exemption limit? 2.5 or 3 or 5. Non-resident, 2.5. Are we okay with that? BR. Basic tax and rebate. They go hand in hand. Then surcharge. We all look back. And then HEC. HEC is 4% of what? Yes, 4% of the tax. That is basic tax plus surcharge. Yes. If my basic tax is 0, surcharge will also be 0. HEC will also be 0. All right. This is rates of tax. We've just begun rates of tax. Some more things that will be required in rates of tax, guys. There is a rate called MMR, guys. What is this rate called? MMR, maximum marginal rate. Everyone. Very simple, small concept. What is the rate called? Maximum marginal rate. Now, sir, why are we learning this? I'll tell you. In some chapter ahead, we will be using, this is a punishment rate almost. Whenever the government wants to punish us, they use this maximum rate. And this maximum rate is basically, as an individual, what is the highest rate? 30. Then what is the highest surcharge rate? 37. And what is the highest HEC rate? 4. If you apply all these rates on a number of 100, then not total it up, but apply it on which number, guys? 100. So if you have a calculator, we can do that right now. As on 100, 30% is what? 30. 37% of 30 is what? On the calculator, 30 into 37%. 11.1. And 41.1 into 4%. 1.64. And if you total all these up, guys, these three numbers, 42.74. In a nutshell, guys, this will never come. This calculation will never come. But the overall percentage you should by heart. 42.74 is a number which is called maximum marginal rate. This is the maximum rate a person in India pays tax. Are we okay, everyone? So, guys, as a fast track course student, you should know MMR, maximum marginal rate. And what is the rate? 42.74%. So ahead, whenever we use marginal rate, you should know this is the rate. Next, a very small concept, but a very important concept called round off. Guys, what is this called? Round. Guys, how many heads of income? 5. You don't round off any of them. Next, where do they go? Clubbing, then set off, then GTI, then deduction, then total income. The first round off you do is at which stage, guys? Total income. Very simple round off, guys. Example, your income is 6,22,482.17. No round off till total. Now, how do you round off, guys? First, ignore the decimal. How much is the decimal? 7. So you ignore that. And what is the last number? 2. If it's up to 5, if it's less than 5, then it will go to the earlier number. So 482 will become how much, guys? 480. Are we okay with this, guys? Yes. Changing the number, 487.97. So first ignore what? 97. So completely ignore that. And 7 becomes what, guys? Is it 5 or more? Then it will become 490. Are we okay? Putting some other number, guys. 7,77,776.99. First ignore what, guys? 99. And then 776. Focus on the last number. Is it 5 or more? Then it will become what, guys? 780. This is called rounding off to the nearest 10. And what if it's exactly 5? Still also it will go to the next number. Think like the government, they'll get some extra tax. Yes, everyone. So 775 will become what, guys? 780. So this is the first time we round off. And then, guys, we have basic tax plus surcharge plus HEC. And let's say that comes to 1,17,222.17. Now, how do we round off this, guys? We don't round up individually. Total tax, guys, we round off. So please tell me, guys, again here, what do we do? Ignore decimal, and this is 1,17,220. What if this was 229? 230. So, guys, every time in the exam, so how do you round off? I'll tell you a pro tip. Whenever in the exam you're writing total income, just check the last digit should be 0. Everyone, that's a small pro tip. Every time you write total income, the last digit should be, if it's not 0, make it 0. And the tax calculation also, the last number should be what, guys? 0. So what are the two places you'll round off? Total income and total tax liability. All right. Next. All these concepts are in my quick book, guys. So where I'll share the quick book, and you can see the quick book, and you'll see all of these listed out there. All right. Now, guys, a very interesting concept and something which has been asked before for a 4-mark question is this next concept, guys. You earn incomes in which year? Previous year. And for the previous year, you pay your tax in which year, guys? Assessment year. Everyone. So does the government wait for you? Yes. Yes, they do. You earn income in which year? Previous year. And when you file a return in which year? Assessment, and they check you in the next year. But in 5 cases, how many cases, guys? 5. The government says, listen, I can't wait till the next year. You might become a Vijay Mallya. Yes, you might run away. And in 5 cases, they are really scared that you might run away from the country. And in these 5 cases, they tax your income in which year? Previous year itself. They don't wait for which year, guys? Assessment. Maybe you've not heard of it, but this question came for 4 marks in one of the papers, and it might come again, so you should know. The question is, which are the incomes of the previous year which are taxed in the previous year itself? Repeat. Incomes of the previous year taxed in the previous year itself. Which are those incomes, guys? There are 5. I have a shortcut for that, guys. Here is a shortcut. Ships eventually leave. What is the shortcut, guys? Ships eventually leave, avoiding danger. If you're wondering, how will I remember this one day before the exam? I'm not writing this. All this is in my quick book. I'll show you also on my quick book. So you can refer it, you can revise. In fact, as early as tomorrow, you can revise on my quick book. No problem. Ships eventually leave, avoiding danger. So these are 5 income which are earning in which year? Previous year. Taxed in which year? Previous year. Guys, first, if your business is discontinued, guys, what is D for? Discontinued. Any business which is discontinued, you may be taxed in which year? Previous year itself. Next, if you're permanently leaving India, guys, what is this? If you're permanently leaving India, you may be taxed in which year? Previous year itself. If your government feels you're avoiding certain taxes, you're avoiding what? Tax. Next, if you have basically established yourself for a particular event, example, guys, right now, Coldplay concert. If you are the organizer of Coldplay concert, and after the event, guys, you might run away somewhere. Not exactly run away, but be difficult to hold you after that. So if you're a AOP BOI, who are you? AOP and BOI, and basically you are making money from a particular event, then they may tax you in which year? Previous year itself. And last, guys, If you are in the shipping business, which business, guys? Shipping basically means a ship going from Mumbai to Singapore, Mumbai to US, and you're a non-resident. Who are you? Then you might be taxed in which year itself, guys? Previous. So this came, and when we see ICI papers, you'll see this question also, guys. Incomes of which year? Previous year. Tax in which year? Previous year itself. Tell me the five incomes without looking at the screen, guys. Ships eventually leave avoiding danger. Non-resident engaged in shipping business. Eventually is event. Particular event AOP BOI. Leave. Any person permanently leaving India. Next, avoid any person avoiding tax. And last, guys, discontinued. In these five cases, they may, it's not compulsory, they may tax you in which year, guys? Previous year itself. Are we okay with this, guys? Yes. And I'll show you the quick book here, guys. Just have a look and see if you can see the same concepts from the quick book here. Here, um, oh, this is GST, sorry. All right, guys, this is a chapter called Computation of Income. I put some rates of taxes here. Guys, previous year's income, generally taxed in which year? Assessment year, except the following. Ships eventually leave avoiding danger. So just exactly this is what you can revise from the quick book. I'll share this quick book link with you guys also, so you can also revise. Yes, so this is one thing. So just recapping, guys, what all we've done in rates of tax. MMR, maximum marginal rate. Five incomes which are taxed in which year? Previous year itself. Rounding off happens in how many places? Two. What is a pro tip? Total income last number should be zero. Rates of tax last number should be zero. Now a very new thing for most of you guys will be at this one, next one. And again has come in the exam and might come in the exam because this concept is slowly taking traction in India. There's a lot of us as a student, we say that no, we're not studying, we're not studying, we're not studying. Or we all have that one friend who says, you know, I'm not studying, I'm not studying. Suddenly in the exam he tops. Yeah, and we wonder what happened. Same way in real life, guys. A lot of people say that, listen, I don't have any income, I don't have any money, and suddenly they go and buy a huge house. Suddenly they buy a fancy car. So the government notices such people. They say on the screen, guys, is an example. They say that there is an individual who every year is showing an income of 5 lakh rupees. How much? 5 lakh. So over a period of time, let's say 10 years, so 5 lakhs is showing every year. Into 10 years, how much total wealth would he have made? 50 lakh. And of course, he would have spent some money also to live. And suddenly he's saying, I have income only of how many lakhs every year? 5 lakh. And suddenly, guys, in one of his children's marriages, he spends 10 crore rupees. Is it possible? Yes, happens. Guys, can you tell me how is that happening? A person who's only showing 5 lakh rupees, how is he spending 10 crores on a children's wedding? Black money. Guys, what do they have? Black money. So the government says these kind of expenses I want to explain. The government will send you a notice. They said please explain. And if you can explain it, then listen, I didn't spend money, my son only spent, etc. Okay. But guys, if you can't, these are called unexplained. What are they called, guys? Unexplained. What is the word, guys? This word is very important. What is it called? Unexplained expenses. What is this called? Unexplained. How much did you spend? 10 crores. Could you explain it? No. So the government says, listen, if these kind of expenses which you can't explain, the government has a very interesting tax rate on it. And the tax rate, they say that we will tax you a flat tax of 60%. And what is the flat tax? Straight, no slabs, nothing. Straight what tax? 60%. Plus, we will apply a surcharge of how much percent? 25. And we will apply HEC of how much percent? 4%. This is a flat rate of tax if they catch you. Yes, I'll tell you the section also later. I'll plug in the section. But right now, guys, this is called unexplained expense. Same example, guys, but they find some gold in your locker worth 10 crores. Unexplained asset. What is that called, guys? Unexplained. The consequence is the same, guys. 60% plus 25 plus 4. But the concept is the same, application is the same. But first is unexplained expense or unexplained asset or unexplained credit. In your bank account is a credit, but you've not shown it only. Guys, so repeat: unexplained expense or unexplained asset or unexplained credit, or unexplained investment. Your demat account has 10 crore worth of shares. You can't explain. If it's unexplained, what is the word, guys? You will try to explain. If he understands it, no problem. But if it's unexplained in the exam, it will be unexplained because they want you to calculate this rate. Then the government will tax you at what rate, guys? 60 plus 25 plus 4. Guys, 25 standard. Even if it's 5 lakh of unexplained, the surcharge will be what rate? 25. So flat, these are all non-negotiable rates. And this section is called 115BBE. What is the section called, guys? 115BBE. Everyone okay with this? Yes. So this 115BBE is something that you have to remember. In this, what you'll remember? Unexplained expense, unexplained assets, investment credits. Any of this which are unexplained, the government will tax you at what rate? 60 plus 25 plus 4. Yes, section is 115BBE. Everyone. All right. So this is another concept that we're looking at. People online, I'm so sorry, I haven't looked at your chats, but welcome to class as well, and I'm hoping you are understanding. Any doubts, feel free, just put them on the chat box. As and when I look at the chat box, I will be addressing those doubts, and happy to take any doubts at any time. Yes. All right. Any other important thing in rates of tax right now? Guys, I'm going to completely avoid marginal relief. Yes, if someone wants to know marginal relief, guys, I have a handwritten note that you can look at marginal relief. But honestly, sitting on 19th November looking at a joint exam, I would happily leave marginal relief. Yes, it's a concept that will confuse you and you will lose out on these concepts. Yes. Another concept which I want to teach you, probably optional scheme will come ahead. Which one? Default scheme we can do only after deductions actually. Old and that is in salaries. That is in salaries. That is called relief. That is salaries. Not here. Yes. All right, guys. Rates of tax. I'm not finishing rates of tax entirely. I'm keeping it here. We will add up some more concepts of rate of tax. Mainly, I'll be looking at default because I know, guys, question number 1 will question you on the optional also and the new one also. So optional we understood. New one we'll park it and we'll look at again when we just after deduction chapter. Yes. Are we okay with this, everyone? All right. Now, I want to take you to some papers to show you how rates of tax is asked and where it's asked, right? Everyone, I have a folder for ICA material. All these are there and stored there. Let's go to the last paper that happened, guys, before your paper. That is May 24 paper. Guys, have a look. The only place they ask the calculation is here, guys. Who is this person? Sahil. How many marks? 15. And look at the last line, guys. What is the last line? Compute total income and tax. Guys, mostly this is the only place where they'll ask you for tax. But unfortunately, this question is compulsory. So we can't avoid it. And nowhere else, guys. Check this one out. Compute what? Total income. No tax calculation. Next one. Applicability of what? TDS, TCS. No tax calculation. Next one. Compute the amount of income. Guys, there's no tax calculation. Next. Compute the deduction. No tax calculation. Assuming that he has not opted for which scheme? Guys, not opted for default means optional, old. Yes, all right. What I'm trying to show you is that tax calculation, while people are not worried, guys, it only comes in which question number 1. And guys, at this stage in November, we should also be able to understand where questions come, which chapter questions come there. Yes. Next, Mr. Surinder. Here, compute what? Taxable capital gain. Have they asked you to calculate the tax? No. Next, again, compute total income. So, guys, this, of course, this is only one paper that we're looking at, but if I have to look at another paper, which we will, because the more papers you look at, the stronger your concepts will get in terms of which chapters are asked where. Again, here, guys, who is this person? Pramod. Guys, compute total income and income tax paper. Again, it's only here. Nowhere else, guys, will you be asked a question on tax liability. Here also, guys, compute what? Taxable income. Discuss the liability of TDS. So, guys, only question number 1 is where rates of tax will come. Be prepared for individual. Yes, if your individual is strong, walk in the exam room confidently. Are we okay with this, guys? Yes. Optional is done. Default tax system we'll discuss. Yes. All right. So, ending this here. Let's do 1-2 sums on the calculation so that we are well versed, and then let's move ahead. Everyone, I'm putting some numbers here, guys. You will calculate the tax liability. Everyone, I'm putting three numbers. You will calculate the tax liability, and we'll see how well we understand tax liability of people. There is person A whose total income is 4,95,000. There is a person B whose total income is 97,50,000. And there is a person C whose total income is 2 crore. Yes, all these are total incomes. Do your maths, talk to your neighbors, discuss, no problem. I want the final rounded off tax liability. Basic tax. If there is surcharge, add that also. If there is HEC, add that also. I want the final number rounded off. Huh. All of them assuming below 60 years. Also, ideally, guys, if you can sit like together, like you're sitting, you sit with people, right? We can discuss also. You can share some calculations also. Like, Yes. HEC. Yeah. On basic tax plus surcharge. Yeah. All right, everyone, answers here, guys. What is the tax here? Because we have to show the rebate, guys. We can't show zero. So, what is the basic tax here? 12,250, and then you got a rebate of how much? 12,250. So, final tax liability is zero. What about here, guys? Yes, basic tax surcharge at what rate did you calculate? 10%. And HEC at what rate, guys? 4. A question is asked, HEC is on what number, guys? Both these together, there'll be HEC on. Yes. Anyone having a problem, I can calculate it also. Should we calculate it? Yes. Anyone not getting this? Guys, don't feel awkward at all. If you've not got it, tell me, raise your hand, let me know, we can calculate it. You got it? Yes, everyone? I purposely gave 2 crores to check, guys, here, basic tax. What will be the surcharge here at 2 crore? Guys, above 50 lakh, 10%. Above 1 crore, 15%. Above 2 crore, 25. But exactly 2 crore is what rate, guys? 15%. That's why I purposely gave 2 crore. And HEC is at what rate always, guys? 4%. Yes, everyone comfortable? Yes, everyone. Okay. Yeah. Yeah. Carry. Yeah. Yes. Answers. Okay, guys. This is zero. Anyone here? What is the answer here? 3-1. 3-1. 31 lakh. 31,700. This is the number here. Everyone confirm. Is this the right number? Yes. And what is the answer here, guys? 69 lakh. 51,000. 750. All right. And this is zero. Yes, these are three numbers. This is your rates of tax. This calculation you will be have to do in the exam, guys, for an individual, whatever his name is, you will have to calculate this. All right. So we now move from this chapter. It's 4:30. We began about an hour back, and we are here. We've got a strong hold on rates of tax, a little bit on optional. On default, we'll again move ahead. I want to start a new chapter. And I'm choosing a chapter which has certain amount of importance in the exam. There have been questions from this chapter frequently in the exam. So after everyone finishes, on a fresh note, we will start this new chapter. Yes. Everyone, okay? Your first bench. Yes. Is he doing okay on the calculation? No problem, guys. The more we do right now, the better it gets every time. Yes. Where did you get stuck? Where did you get stuck? It was correct. Uh, the surcharge you have to be a little careful about. Yes. So I gave two surcharge numbers there. All right. Now, guys, I'm not starting with residential status and scope of income right now. I'm picking up a chapter the way I teach in my curriculum also. I'm picking up a chapter where if you buy a house in India or abroad also and you give it on rent, will you earn some income? Yes. And which head of income will open up, guys? Income from house property. I'm looking at that. What we will do is first we'll discuss the entire chapter. Yes. At the end, I'll give you the sections. So we'll plug in the sections also. Sections, how I look at it, are they like a covering on a gift? We'll first prepare the gift and then we cover it up. So with sections. Of course, I'll tell you the sections which are most important so you can by heart it. And then we'll do all the ICI material sums on that chapter. Yes. We'll try and practice 3 questions in fair, but we'll try and do all other questions, at least in calculation. Let's start. Uh, New chapter getting unlocked here. So rates of tax 515. We have still some amount pending. But now we'll do IFHP and we'll do the entire IFHP. Again, guys, not from a PhD angle, not from becoming an ace at house property angle, but from an exam angle. Yes, so what exam expects out of you, at least that you should know from house property. The importance is somewhere around 4 on 5. Why is it little less? Because some years they don't ask this chapter in the exam, so hence it is 4 on 5. But again, a chapter which is interesting and we should learn it well. Yes. All right. Just taking up a fresh sheet. Yes, and while you are fewer students, guys, I still can't read your mind. So if there's something that you've not understood while I'm explaining, you have to raise your hand and ask me, and I can explain it. Yes. All right. So starting off a new chapter, this is a chapter which is called income from what, guys? House property. Now the logic is pretty simple. You go out and you buy a house. If you can't buy, can you construct a house also? Yes. So we'll be looking at those houses that we buy or we construct and then we rent it out, and that property is called LOP, let out property. A property which is rented out. Next way, we'll also look at a property which is not rented out, but you and your family stay in it, which is called SOP, self-occupied property. We'll also be looking at a property where part of the year you let it out. So someone is staying in for part of the year, example 9 months, and after that he vacates and you stay in that, guys. It is called LOP plus SOP. And then, guys, there are many rich people in India who have multiple houses. Example, there's a person, let's say, who has 4 SOPs in his own name. Then for those people, after the 2 SOPs, it will be considered as deemed LOP, guys, DLOP. And there's one more person which is only applicable to builders in India. We'll talk about all these 4 from an exam perspective. We'll see how it is asked. Let's first start with LOP. Yes, everyone. First bench, we'll move here. We'll do that. Don't worry. If you've got stuck, we'll again address it. In house property, guys, we're offering some income. Let's talk about the first one, which is called LOP. Let's address that issue first. Guys, let out property means, is it given on rent? Yes. Let's take an example, guys. You give a house on rent and the house rent is 1 lakh per month into 12 lakh. So that's your rent, but they don't call it rent. They call it GAV, guys. What do they call it? GAV. So I'm first talking about LOP. In LOP, they don't call it annual rent or etc. They call it gross annual value. Example, how much is the gross annual value, guys? 12 lakh. The government says, listen here, thank you for offering this income to me. And because you're offering this income, I would like to offer you deductions. Give and take. What are we offering? 12 lakh. And they offer us 3 deductions. How many deductions, guys? 3. They say if you have a house in Bangalore, Mumbai, Delhi, wherever you are, if you have a house, then you also have to pay some taxes to the government called municipal tax or called property tax or called sewerage tax. Different names, but meaning the same. They say that's the first deduction. So which is the first deduction, guys? Municipal tax. But the government says we'll give you a deduction only if this tax has been paid. If it is payable, no. If it is paid, so from 1st of April to 31st March, if you pay, what if you pay next year? Then you'll get the deduction next year. What if last year some amount was paid this year? Then this year. So example, I paid for this year 20,000 and for last year I paid this year 5,000. So I'll get deduction of how much? It's 25,000. Are we okay? So this is called municipal tax. Another word is property tax. Another word is sewerage tax. They all mean the same. All right. Now let's say I'll take a bigger number, guys. Let's say my municipal tax that I paid is 1 lakh rupees. So can I minus that 1 lakh? Yes. The next number that I go to is called NAV, net annual value. And how much is that, guys? 11 lakh. Now the government has said, listen, yeah, you're giving a house on rent. You must be doing some painting also. Every time a tenant leaves, you must be repairing the locks also, changing the window door also. So for all those small expenses, I don't want to keep a count. I'll give you a random 30% deduction, guys. So this, just one second. Hello, 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 hello. Yes. So the government says, I don't want to keep a tab on small expenses. I will give you standard deduction. What is that word, guys? Standard. So they give you a standard deduction, guys. I'm not giving a section right now. I'll plug in the section later on. And the standard deduction is always how much percent, guys? 30. Can I take 33%? No. 31, 25, 21? No, guys. Exactly how much percent, guys? 30. And after 30, nothing else. After 30, if you say I want some extra repairs, insurance, ground rent, nothing. They will confuse you in the exam, but don't take anything, guys. So 30% of this is how much, guys? 3,30,000. Next, guys, most houses in India are bought on a loan, which is called housing loan. Which loan, guys? Housing loan. And if you have a loan on it and you're paying what? Interest, whether it's to HDFC Bank or to your brother or to your father or to your uncle or to a rich relative, doesn't matter whom you're paying interest to. Whatever interest you pay, you'll get a full deduction. Let's say you're paying interest of 3,60,000 in the year. This is only interest, not principal. You'll get a deduction for that also. So how many deductions? 3. First, municipal tax only if it's paid. Then standard deduction of 30% and interest if it's paid also and if it's payable also, guys. This is called accrual basis. Which basis? Whether you pay it or whether it is payable, you will still get a deduction. Are we okay? And the final number, guys, whichever we get, everyone do the calculation. 11 lakh minus 3,30,000 minus 3,60,000. How much is that, guys? 3 lakh? 410. 4,10,000. This is my income from house property. Are we okay with this calculation, guys? Now let's go into details about the 3 deductions. Everyone, let's follow the details in this deduction. Guys, first deduction was which one? Municipal tax. Guys, it has to be paid and paid by the person, guys, who's the owner. Everyone who's the owner. Guys, it is my house and I've given to him. What's your name? Akhilesh. I've given to Akhilesh on rent. Guys, I have to pay the municipal tax. Only then I will get the deduction. What if Akhilesh pays? Then I will not get deduction. So should be paid by whom, guys? The owner. Second, guys, how much standard deduction? 30%. Guys, the exam will give you 2-3 extra expenses, but don't get in the trap. You will only get how much? 30%. And third, guys, you will get interest, which is paid also, payable also. And guys, interest can only be from a bank. No, it can be from anyone. In fact, it can be even interest you're paying abroad. As long as there is interest paid or payable, you'll get a deduction. Guys, this is interest. Now, interest, there is one more part called PCP interest, which I will talk in some time from now, but not right now. Yes, everyone okay till you have all these 3 deductions? Yes. Now, let's go into the second part, guys. The second is SOP. What is the second part, guys? SOP. In SOP, who's staying in the house? You or your family. Guys, owners are staying in the house, so you or your family staying. If I ring the bell, you or your family members will open the door. Now, guys, when you stay in the house yourself, guys, is there any amount that you earn yourself? No. So the amount is what? GAV? 0. And because you don't offer anything to the government says give and take. You're offering how much? 0. So we'll also offer you how much? 0. So guys, are you paying municipal tax for this house? Yes. Guys, are you paying municipal tax for this house? Yes. But how much reduction will you get? 0. So default NAV also becomes what, guys? 0. This is my favorite calculation. You can see why. Yes, all the numbers are very easy. And guys, 0 standard deduction of how much? 30 is also what, guys? 0. So everything is 0, but the government then says that, listen, yeah, thank you for buying a house in India. And because of that, we'd like to give you a deduction of what? Interest. Are you taking a home loan for this also? If you have interest, we'd like to give you a deduction. But what is the point of deduction? Example, if my deduction is 1 lakh here, guys, wouldn't it lead to a loss? Everyone, wouldn't it lead to a? But loss is good because this loss can be set off. If my salary is 11 lakh, suddenly 11 lakh minus 1 lakh. So guys, this is a benefit, everyone. SOP is what, guys? Benefit. Because what are you offering the government? 0. But they're still giving a deduction of how many lakhs maximum, guys? 2 lakh or 30,000. How much, guys? 2 lakh or 30. That limit is not there in LOP. The limit is only there where, guys? SOP. So in SOP, guys, interest, there is a limit of what is the limit, guys? Either 2 lakh or 30,000. How will you get 2 lakh? How will you get 30,000? There are 4 conditions. How many conditions? 4. If you fulfill all 4, 2 lakh. Everyone, if you fulfill all 4, 2 lakh. If you don't fulfill even one of them, 30,000. Are we okay? We'll talk about details in some time. Don't worry. First, I'm giving you a brief, then we'll go into details. So PCP interest will go into details. This also will go into details. But if I fulfill all the 4 conditions, 2 lakh. If I don't fulfill the condition, 30. All right. Now, while this is an SOP, the government says, listen, yeah, you want one more house, what? For your family. Family is getting bigger. You want one more house. They said that not just for one house, they will give me an SOP benefit for how many houses, guys? 2 houses. Means I can have a house in Bangalore, plus I can buy a house where in Mumbai, and both houses will be considered as what, guys? SOP. As long as I'm not renting it out, it will be considered what? SOP. Here also, guys, what is the number? 0, 0, 0. Here I will get what deduction, guys? Interest. And let's say my interest deduction here is 1 lakh. Here it is 2 lakh. So total deduction will become how much, guys? 3 lakh. Everyone, here 1 lakh, here 2 lakh. How much? 3 lakh. But the government says, sorry, I can't give you 3 lakh. Per person, I will give you maximum 2 lakh or 30,000. So please tell me this 2 lakh or 30,000, is it per house or per person? Per person. So everyone, here, how much did I get for the first house? 1 lakh. Here, how much did I get for the second house? 2 lakh. No problem. I total it up. How much? 3 lakh. Limited to how much, guys? 2 lakh. I'll change the numbers, guys. Here, 90,000. So what is my loss here, guys? 90. Here 2 lakh. So total 2 lakh 90. But will I get 2 lakh 90? No. I'll only get how much, guys? 2 lakh. Everyone. So this is a very big trap in the exam, guys. If they give you 2 SOPs, you will not get 2 lakh plus 2 lakh. You'll only get 2 lakh or you will get 30,000. Now trick questions. And that's what you come here for. Guys, what if one house, you fulfill all the conditions and your deduction in that house is how much? In the second house, you don't fulfill the conditions and your deduction is how much, guys? 30. Then which one will apply? Whichever is higher. Whichever is higher. Everyone. In one house, you fulfill all the 4 conditions. So what is the limit? And in the other house, 30, the government says, I'll give you whichever is higher. Are we okay with this, guys? Yes. So I'm giving an example here. Guys, here I fulfill all the conditions. So what is my limit here? Here I don't fulfill the condition. What is my limit here? 30. But I will still get how much overall, guys? 2 lakh. Are we okay with this, guys? Yes. All this is there in the quick book and the notes, guys. Don't worry. Yes. All right. So 2 lakh 30,000. We understood the concept. What are the 4 conditions? Add-on. But right now this is called SOP. Can we recap? SOP. Self-occupied property. 0, 0, 0. Will you pay municipal tax? Yes. But will you get a deduction? No. Because give and take. Only deduction you'll get is interest paid or payable. Maximum 2 lakh or 30,000. One house 2 lakh, one house 30,000. 2 lakh. Both the houses 30, 30. 60? No, 30. Guys, it can never be more than either 2 lakh or 30,000. Everyone okay with this, guys? This is called second one, which is called SOP. Now, guys, something that I'm really happy with are my shortcuts. Look at the next shortcut, guys. Everyone. 9 months I rented it out. So 9 months it is what, guys? LOP. Then the tenant said, let's say Akhilesh said, I don't want to stay in that house. So you stay yourself in that house. So 3 months is what, guys? SOP. Now this is a house which is called LOP plus SOP, but this is very problematic, guys. I'll ask you why. Guys, please tell me, can you tell me the GAV here? 9 months into 1 lakh. 9 lakh. 3 months into 0. 0. So overall is how much, guys? 9 lakh. Guys, am I paying municipal tax for this house? Yes. Will I get it? But is SOP also? Yes. So there comes my shortcut, guys. LOP plus SOP is equal to LOP. Repeat the shortcut, guys. LOP plus SOP is equal to, that means we'll do the same calculation as what, guys? LOP. Now answer my question, guys. Will you get municipal tax deduction? Yes. Whatever is paid. Whatever is, no 9 months, 3 months. Whatever is paid. And if you want to understand the logic, I'll tell you the logic, guys. Are you offering income to the government? So give and take. So please tell me what I can minus. Municipal tax. Can I minus the full 1 lakh? Yes. What is the next number? 8 lakh. From that, how much deduction? How much is that? 2 lakh 40. Guys, remember LOP plus SOP is the same calculation as what, guys? Now the next number. Everyone watch. In this, will I get interest deduction? Yes. But unlimited or limited to 2 lakh? Unlimited. How did you know, guys? LOP plus SOP is what, guys? LOP. So how much interest can I take, guys? Full. Example 3,60,000. Can I take the full one? Yes. Are we okay? Can we recap? First property was LOP. Second property was, third was LOP plus SOP, which is solved in the same manner as what, guys? LOP. Are we okay with this, guys? Next. Guys, the next is DLOP. What is this concept? I'll tell you, guys. Let's say there is a rich person who has three SOP. SOP 1 also, SOP 2 also, and SOP 3 also. Now he's saying in how many houses? Three. One house in Bangalore, one house is in Mumbai, and one is in Goa, holiday home. Can I have three houses? Yes. The government says, but listen, yeah, a lot of people cheat us. What they do is they say SOP, but they rent it out and take cash. Take what? Cash. I don't even get to know. So the government has been cheated many times before, and hence they made a rule that after two houses, after how many houses? Two. Everyone repeat. After how many houses? Two houses. The next houses will be assumed to be what? So either you rent it out, or we'll assume it to be what, guys? Rented out, and the choice is yours. Which house to keep as SOP? The choice is yours. Yes. Everyone. So how many SOPs? Three. Two of them I want as SOP. So the third one will be assumed to be what, guys? DLOP. In real life, I've never seen a case of DLOP. I'll tell you why. Because a person has three houses, they will never have three houses in their own name. Two houses in their name. Then two houses in spouse's name. Next two houses in children's name. Next two houses, more children. Yes, so they keep increasing the family and they keep buying houses. Are we okay? But from an exam perspective, guys, is this a problem? Yes. After how many houses? Two houses. Everyone okay? And now, sir, DLOP, what will be the calculation? You tell me, guys. I'll give you the shortcut already. DLOP is equal to LOP. DLOP is equal to same calculation. What will you start with? GLE. Then municipal tax if it's paid. Then which number? Then how much? And then how much? Interest, guys. Interest limited or unlimited? Unlimited, because again DLOP is the same as LOP. Are we okay with this? Yes. All right. And last, guys, is a concept which is not very important, but I'll just tell you a little brief. Guys, as a builder, Shobha builder, Prestige builder in Mumbai, Lora builders, all these are big builders. The government has told them that listen, once you make a building or apartments or houses, you have 2 years. How many years? You sell those apartments. Example, Prestige builder has made a building in the year 21-22. When was it ready? 21-22. This is the year it's ready. It's called OC. Guys, what is it? Occupation certificate. You've got the certificate. Is it ready? I'm giving you how many years? 2 years. So after that, tell me the 2 years. 22-23, 23-24. These are 2 years. Please sell these apartments or rent it out. But if you don't do anything, then after 2 years, I will assume them to be rented out DLO. After how many years? Again, logic being, because a lot of builders know, they would make an apartment building and they would rent it out and take what? Cash. The government wouldn't know. So the government has now made a rule. It's not important, but just telling you, after how many years? The year of OC, that we will not take. After that, how many years? 2 full years we'll give you. But if after that, guys, 5 apartments are left, then 5 will be considered as what, guys? DLO. Are we okay with this, guys? Yes. So these are the different kinds of apartments we saw. First is LOP. Next, SOP. Next, LOP plus SOP. Next, DLOP. And fifth one is builder. Yes, everyone. All right. Now, just adding some more elements here, guys. Guys, there is something called actual rent. I was giving my house on rent to Akhilesh for 1 lakh rupees a month. That's called actual rent. So 1 lakh into 12 months, 12 lakh. So I'm telling the government that government, listen, yeah, I have given on rent for 12 lakh. The government says, how do I believe you? Is it possible, guys, that Akhilesh is actually paying 15 lakh? 12 lakh through check, 3 lakh cash. The government says, how do I believe you? So the government has made a rule. They will always compare my actual rent with something called expected rent. What is this called, guys? Expected. Everyone, ARS, actual rent, ERS, and they'll take whichever is higher. So expected rent, let's say, is 15 lakh. What will they take? 15 lakh. Expected rent is 10 lakh. 12 lakh. Are we getting it? Whichever is higher. Now, sir, how do you get expected rent, guys? There are 3 values, guys. I'm expecting you know a little bit of it, so please continue. They will ask for municipal value. Which value, guys? Let's say municipal value is 8 lakh. How much is municipal value? According to the municipality, this value of the house, the rental value is 8 lakh. Then they will take fair rent. Which rent? In the exam, they will give you all these numbers, guys. Fair rent means neighboring houses. They are rented out for 8 lakh. Sorry, this is 9 lakh. 8 or 9, whichever is. But so that your neighboring house, let's say, is 19 lakh. very well made 22 lakh with the swimming pool 24 lakh. So that it does not go through the roof, they have kept a limit, guys. They have kept a limit which is called standard rent. And standard rent is like a MRP. What is it like? MRP. You see a packet of biscuit MRP 20. Can DMart charge 80? Yes. Can DMart charge 90? Yes. But can DMart charge 22? No, because MRP is so a standard rent like your MRP, everyone. So 8 or 9, which is higher? 9. Check standard rent. Standard rent is 10. 9. Excellent, guys. 8 or 9, which is higher? 9. This is 8 lakh 75. 8 lakhs. So MRP, guys. Standard rent is like your MRP. Everyone okay with this? So these three numbers, let's take the same numbers, 8 or 9. 9. And this is 10. So my expected rent is how much, guys? 9 lakh. Everyone okay with this? Your expected rent is just something the government is expecting this house to earn. Everyone. Just like once you become a CA, your parents say at least you will earn 5, 7, 10 lakh rupees a year. Same way, a house should earn at least this much a year. That's the expectation. Are we okay, everyone? What is this called? ER, expected rent. Municipal value or fair rent, whichever is subject to the ceiling of standard rent. Are we okay with this, guys? Yes. All right. Now, guys, we come to this number. Everyone on the left hand side. Guys, how much was Akhilesh supposed to pay me? 12 lakh. I called up Akhilesh. Akhilesh, it's been 2 months. You've not paid me rent. He said, yeah, my business is going through a loss. Sorry, I can't pay you 2 months rent. So the government says, don't worry. If you have income, there will be tax. Repeat. If you have income, there will be. If you don't have income, there will be no tax. So Akhilesh is not paying me for how many months? It's 2 months. That's called unrealized rent. What is it called, guys? The government says you can minus unrealized rent. There are four small conditions. I'll teach you the conditions. But guys, how many unrealized rent? 2 months into 1 lakh. 2 lakhs. So can I minus 2 lakh, guys, here? Yes. So what is it, guys? 10 lakh. Everyone okay? So what is UR called? Unrealized rent. In terms, it's called bad debt. It's also called what, guys? Bad debt. Something that he's not paying. Guys, what if he pays me next year? Then I'll be taxed next year. It's called arrears of rent. I will see it. Everyone okay? Now, guys, what is the next number? What is this next number, guys? 10 lakh. Everyone watch. I'm teaching you something slightly complicated. Watch on the screen. What is AR? Actual rent. You start with how many months? 12 months always. You minus what? Unrealized rent. Again, guys, is this AR? Yes. Now, guys, Akhilesh was supposed to stay in the house for how many months? 12 months. In the month of February, he tells me that, listen, March month, I'm not staying, I'm leaving the house. Guys, which month? March. And I can't shift in the house. So for the entire month of March, the house is vacant. What is the word called? Vacant. Am I going to lose money? That is called vacancy loss. Everyone, what is that called, guys? Vacancy loss. Guys, how many months? 1 month. I go to the government, yeah, I thought I'll tax it for how many months? 12. But unfortunately, 1 month is vacant. Government says, no problem. If you don't make money, I don't want tax. But there's a condition. If you want to minus vacancy loss, you can minus it only when your AR, repeat, only when your is more than your ER. Check, guys. AR right now is how much? 10 lakh. ER is how much? 9 lakh. Can I minus 1 lakh? Yes. So I can minus how much, guys? 1 lakh. Everyone. So what is my final number now? 9 lakh. And by the way, if you minus vacancy loss, repeat, if you minus, after that you have to ignore ER. You have to ignore one, guys. ER. I'm giving you another number, guys. Vacancy loss of 2 months. Feb and March. What is the loss? 2 lakhs. Can I minus it? My AR is more than my ER. So how much will I minus, guys? 2 lakhs. So 10 lakh minus 2 lakh, how much is that? 8 lakh. After that, I will ignore what? ER. Even if ER is higher, I'll ignore it. Are we okay? So what is my GAV then, guys? 8 lakhs. Can we repeat? AR and ER. Guys, dividing this class. ER. Expected rent. Tell me the three values. Municipal value, fair rent, standard rent. Yes, whichever is higher, but limit is of standard rent. AR. How many months? 12 months. Minus unrealized rent. Minus vacancy loss only if your AR after unrealized rent is more than your ER. And once you minus vacancy loss, ignore ER. Are we okay with this, guys? Yes. So this is another concept that you learned. Now moving ahead, guys. Guys, Akhilesh did not pay me for how many months? 2 months. And suddenly next year he says, listen, yeah, I'm sorry, now I have the money, I'll pay you. So I'm getting some arrears. What is it called, guys? Arrears. How much is the arrears, guys? 2 lakh. The government says, listen, if you have income, there will be tax. So in the next year, guys, this is called what? Arrears. Will the government tax this 2 lakh? In which head? Or same head, IF, HP. Even if I sell the house, it will still be this because it's connected to what? House. And guys, from this 2 lakh, I get a standard deduction of how much percent, guys? 30. Because guys, whenever you get open house property room, you always get how much percent? 30%. Everyone okay? So Akhilesh has paid me how much? 2 lakh. 30% standard deduction is how much? 60,000. So balance is how much, guys? 1,40,000. Are we okay, everyone? Next. Guys, can as a single person you own a house property? Yes. But can you and your spouse, you and your parents, you and your sibling, you and your best friend also own a house property? That's called co-ownership. What is it called, guys? Co-ownership. Guys, in co-ownership, I'll tell you why co-ownership is such a smashing, amazing thing to do. I'll tell you what. This is a husband, this is a wife. And they co-own a property and they stay in it. What is the property called, guys? SOP. Everyone. Now, guys, how many people? Two. Both have gone to the same bank. Both have taken loan, half of. And both are paying what? Interest. Everyone for SOP. 0, 0, 0. What will the husband get? Interest deduction. Let's say the husband is paying interest of 1,80,000. Will he get 1,80,000? Yes. Wife also, she's also staying in this house. 0, 0, 0. She's also paying interest of 1,80,000. How much deduction will she get? 1,80,000. So as a couple, guys, they will get deduction of 3,60,000. Because if you remember, guys, in SOP, that 2 lakh or the 30,000 is per person. So guys, two people. Everyone, I'm changing this number. Can this be 2 lakh also? Yes. Can this be 2 lakh also? So as a couple, how much deduction will they get? 4 lakh. And that's the reason, guys, most people after they get married, guys, they buy a house in joint name. Everyone. As a single person, you would get maximum 2 lakh. But as a couple, you're getting how much, guys? 4 lakh. Is that a benefit? Yes. Guys, what if 3 people buy? 6 lakh. What if 4 people buy? 8 lakh. What if 10 people buy? But guys, you should be paying so much interest also. See, there's one house, right? How much interest can you ultimately pay? But generally, I've seen comment 2 in the exam also comment 2. So guys, what is this called? SOP. You have to do separate calculation. S for SOP. S for separate. How many separate calculation? 2. But guys, what if this is LOP? Husband and wife don't stay. Husband and wife rented it out. Then what will happen, guys? Everyone same. What will you start with? Then you will get municipal tax. Then you will get NAV. Then you will get 30. Then you will get interest. And the final number is, guys, 4,20,000. Who will be taxed? Husband or wife? It will be split in the end, guys. Last. Everyone. L for LOP. L for last. Husband will get how much? 2,10,000. Wife will be taxed on how much, guys? 2,10,000. So repeating and giving you a shortcut. Co-ownership. Everyone repeat. Co-ownership. If it's SOP, separate. S for SOP. S for separate. And if it's LOP, last, you will split in last. Are we okay with this, guys? Yes. And guys, one of the small concepts I want to teach you is, guys, this is a surgeon or this is me, anyone, guys, who has a house property, and what do we earn it? Rent, and we are paying tax at what rate? 30%. Not happy with it. So we call up our spouses and we say, listen, yeah, we have a problem. I don't want to pay tax on this rent. So what I'll do is, out of love and affection, I'm giving you a gift. What am I giving you? And you give your house property as a gift to whom, guys? Spouse. Now tell me, guys, who's the new owner? Spouse. Who will earn the rent? Spouse. And let's say she's taxed at 0%. Is the government getting hurt here? Yes. So the government, same clubbing rule apply here. The government says, listen, the dog always goes back to its owner. You gave a house as a gift, we have no problem. Giving the house as a gift is not a problem, guys. But the asset is not the problem. The income is a problem. Guys, please tell me, what did you give? House. That's not a problem. But what did you earn? That rent. Who earned? Spouse. Whose bank account it came in? Spouse. But while paying tax, who will pay the tax, guys? The surgeon. Why? The dog goes back to its owner. Are we okay? Everyone. Guys, if you're not understanding this, it's very simple. People, just remember one line. If it's your income, who should pay the tax? You. If it's your asset, again, you can give the asset to someone else, but income will come back. Are we okay? Everyone. Unless, guys, they're separating. If they're separating in divorce, guys, we've heard of people giving assets, then it will not come back. The income. The spouse will also not come back. Asset will also not come back. Yes. And what if the spouse pays you money? If this house is for 1 crore and she's paid you 1 crore, then it's called adequate consideration. What is it called, guys? In adequate consideration and in separation, guys, the income will not come. Are we okay with this, guys? Yes. All right. And the same thing But instead of spouse, you plan the same thing with your minor child. With which child, guys? Guys, you are now gifting the house to whom? Minor child. Now, who's the new owner? Minor child. But still, the income will come back to you, guys. So, spouse also, minor child also. But, sir, what if a house property is given to a parent? Guys, what if today I give my house property to my parent? Who's the new one? Parent. Who will earn the income? Parent. Will it come back? No. This coming back is only in two cases: spouse and minor child. Are we okay, guys? Now, guys, very good tax planning mechanism. Right now, what is your income? Zero. Go back home today and tell your parents, mom, dad, that house on rent given in my name. Guys, excellent tax planning, but it will never happen in reality, I'll tell you, because of trust issues. But again, guys, if your parents transfer the house in your major child's name, will the income go back to the parents? No. 1 minute, 1 minute. Guys, which child? Guys, major child. You are a major child. If your parents transfer their house in your name, now who's going to earn the rent? You. Will it go back? No. Can you save tax? Yes. But who will convince the parents? Who will well the cat? That's the problem, guys. Yes. So people don't do it, but in reality, guys, the income will come back only in two cases. Can we repeat the two cases? When you transfer the asset to spouse or to minor child. Is the asset the problem? No, the income is the problem. The income has to go back to the owner. Everyone, yes. No, the final number will go. Good question, guys. What if this is my spouse? Then, if it's LOP, guys, will she get municipal tax deduction? Yes. Will she get 30%? Will she get interest? Everything will happen in her hands. The final number will come back to. In SOP, she'll get 2 lakh. Whatever the final number is, that will come back to. Yes. Are we okay, guys? So which number will come back? Final. After all the calculation, it's called the computed number that will come back. Everyone. So this is the chapter. I'll just plug in those conditions. First condition: Akhilesh did not pay me how much rent? 2 lakh. Do you remember, guys? Yes. That's called unrealized rent. What is it called? Guys, in case of unrealized rent, the government has put 4 conditions. There's a rule called Rule 4. What is the rule called? I have a shortcut for that, guys. Akhilesh is not paying me rent. So I have to legally, guys, what is it? Legally ask him to vacate our building. Guys, what is the shortcut? Legally vacate our building. Repeat once again. Legally vacate our building. Ask him to vacate because he's not paying me what? Rent. Take what action against him? Legal action. Give him no other building. What is O for? Other building, and have a bona fide agreement. Guys, that means I and Akhilesh should have a bona fide agreement. If these 4 conditions are met, you can minus unrealized rent. If conditions are not met, you cannot minus. Can we repeat the 4 conditions? Legally vacate our building. Next, vacancy loss. There was only one condition. Your AR should be more than what, guys? Your ER, and after that you will ignore ER. Alright. Next, guys, in SOP there were 2 limits. Either 2 lakh or 30,000 per house per person. Good, guys. Good. Now this 2 lakh or 30,000, how does it work? I'll tell you, guys. For that there are 4 conditions. How many conditions? 4. If you fulfill all the 4 conditions, 2 lakh. Everyone. If you fulfill how many conditions? 4, 2 lakh. If you don't fulfill, 30,000. Guys, although there are 4 conditions, one of them is the main one. I'll tell you the 4 and then I'll tell you the main one. Guys, the shortcut is here, guys. Certify 5 accounts. Everyone. What is it? Certify 5 accounts for 99. I'll tell you the conditions, guys. What kind of house is this? Self-occupied. Are you taking a loan? Yes. Do you want an interest deduction? I'll give you maximum 2 lakh. If you fulfill how many conditions? 4. Let's see what are the 4 conditions. Make sure the loan is only for acquiring the house or constructing the house. For what purpose? Acquiring or constructing. What if it's for repairing the house? 30,000. What is for reconstruction? 30. What if it's for renovation? 30. So the word should be either acquiring the house or constructing the house. That's the main one. Next, the loan should be recent loan. Guys, which year are we in? 23, 24, 25. So the loan should be after 1/4/1999, which I think in the exam will be default. Guys, the loan should be after 1/4/1999. If you're constructing the house should be constructed within 5 years. What if you take 6 years? No problem. The SOP interest will be 30,000. Any condition you don't mind, it's not a crime, but your interest deduction will be 30. And just get a certificate. If you're paying to HDFC, whoever bank you're paying, get a certificate. Are we okay? So what are the 4 conditions? Certify 5 accounts for 99. Mainly it should be for what purpose, guys? Acquisition or construction. I'm giving you the condition. You tell me how much interest I can minus. It's a LOP. I've taken a loan to repair the LOP. Unlimited. Because it's a LOP. Excellent. Well pointed. It's a LOP. I've taken a loan to acquire. Unlimited. LOP, guys, no condition. It's a SOP. I've taken a loan to acquire. 2 lakh. It's a SOP. I've taken to repair. 50. I have two SOPs. One I've taken to acquire, one I've taken to repair loan. 2 lakh and 30,000. Which one will I get, guys? 2 lakh. It's well pointed out. And last, guys, this is done, this is done, this is done. Yes. PCP. Everyone, can I sometimes construct a house? Everyone, can I construct a house? Now tell me, guys, if I start the construction today, will it get completed tomorrow? No, it takes some time. And in construction, do you need money? Do you need money, guys? Who will give you the money? Loan. Guys, who will give you the money? Bank. Everyone watch on the screen. You started constructing in the year 21-22. When did you start constructing? 21-22. And which is this year? Your exam year? 23-24. Guys, this is the year your house got completed. Congratulations. Bhumi Pujan is happening today. House is getting completed in which year? 23-24. Who's happy? With you, the government is also happy because from now onwards, the government will get what? Rent. Everyone. And let's say, of course, this date is different, but let's say this is 19th of November of which year, guys? 23-24. Are we okay with this, guys? Yes. Now, is the house completed in the middle of the year? Yes. But the entire year will be called year of completion. What is it called, guys? Year of completion. My interest is 3,16,000 this year. How much is my interest? Will I get the full deduction? Yes. Because, guys, give and take. From now onwards, you are going to give what? Income, so you'll get full deduction. Everyone repeating, this is a complex concept and hence I'm doing it in the end. When did you start your construction? 21-22. And when did it end? 23-24. In this year, forget the date. In this year did it end? This year is called year of completion. Who's happiest? So they will give you full deduction. Next year, will you get full deduction again? Yes. Next year, full. Every year you'll get how much deduction? Full. That's not a problem at all. But the government says this is one part. The second part is during this phase, 21-22 and 22-23. How many years? 2 years. Was a house under construction? Yes. And in that period also, did you take a loan? Yes. This year, your interest was 1.5 lakh. How much was your interest, guys? And this year also, your interest was how much, guys? 1.5 lakh. Guys, this is called pre-construction period. What is it called? Pre-construction period. Total interest, 3 lakh. You told government, give me a deduction for this also. The government said, listen, I can understand you want a deduction, but I can't give you in one shot. I can't give you fully 3 lakh. I'll give you in 5 parts. How many parts, guys? 5 parts. I call this not a cake, but as a pastry. So how many parts, guys? 5 parts. So please tell me what is the total amount? 3 lakh. Divide by 5. 60,000. So every year, starting from this year, I will get how much, guys? Year 60. Year 60. Next year 60. Next year 60. Next year 60. For how many years? 5. Sixth year? No. Sixth year I will get current year interest, but I will not get PCP. So just like your exam has 2 groups, interest also has 2 parts. Current year interest, PCP interest. Repeat. Current year interest. Current year starts from which year? The year you complete. The entire year? Yes. Guys, even if your house is completed on the 20th of March, and the end of the year, you will still get the full year's interest. Next year, full year. Next year, full year. And PCP will get in how many parts? 5. In the exam, if they use words like you have acquired a property. Which property? Acquired. No PCP. You have bought a property. No PCP. PCP will only happen when they say you have constructed. So your job is one. First, find out the pre-construction period. Guys, pre-construction period year is what? 2 years. Guys, it will always be yearly, never monthly. Never monthly. So when did you complete your house? 19th. Ignore that date. Go only year wise. Everyone, go only year wise. Get the PCP interest divided by 5. When we do sums, you get better. Yes, everyone. Yes. So guys, moral of this chapter or summary of this chapter, 5 kind of properties. Do you remember 5 kind of properties? Yes. SOP 2 lakh, 30,000. Do you remember that, guys? Next, LOP, how much interest deduction? Unlimited. Standard deduction, 30. Now some sections. Only the sections that are important from my exam perspective I'm telling you guys. The standard deduction is 24A. Guys, what is standard deduction? 24A. Interest deduction is 24B. B for borrowing. What is B for? And guys, the arrears of rent is 25A. A for what? Remember these three sections, guys, because more or less this is what you will be quoting in the exam. Yes. Now some additional points which I want to discuss. Guys, what if I have a house like in Bangalore where ground floor I stay, SOP. First floor I've rented. Is it possible? Guys, ground floor, SOP. First floor. Now, guys, I've divided the house into how many parts? Two. So your calculation will be divided into how many parts? Two. First, you always do SOP. In SOP, what will be the number? 0, 0, 0 only interest. For the whole house? No, half. What if for the whole house I'm paying interest of 3 lakh? Then 1 lakh 50. Yes, that is the SOP. Next, LOP. Will we get actual rent? Yes. Will we get expected rent? You'll compare and you'll get which number? GAV. From that, municipal tax. For the whole house? No, half. Guys, all the numbers have to be divided. Everyone, all the numbers have to be divided. Next 30% will always be 30%. And interest for the whole house? No, divide. That means the shortcut is if you divide the house, repeat it. If you divide the house, the calculation also have to be divided. Everyone. Guys, while this chapter is called house property, what if I rent a office? Here. What if I rent a godown? Here. What if I rent a shop? Here. Everything will go where? House property. But guys, what if it's my business to give shops on rent? Then PGBP. Anything which becomes a business goes where, guys? PGBP. What if I rent a plain piece of land? That the government says I don't want to give a standard deduction on plain piece of land, guys. Is there any expense? No. So, guys, that plain piece of land which you rent out will go under IFOS. Everyone. So, house property on rent, IFHB. Land given on rent, IFOS. I'm giving a house on rent for 1 lakh to Akhilesh plus furniture also, and Akhilesh is paying me 20,000 for furniture separately. So 1 lakh will go under house property, 20,000 will go under IFOS. What if Akhilesh and me have an agreement where we don't separate that amount? Then the government says I can't give standard deduction on furniture. So the entire thing will go under IFOS. Everyone. This is called composite rent. What is it called, guys? House will go on house property, furniture will go on IFOS. And if I can't separate, everything will go under IFOS. Are we okay? Now, common question in the exam. You have to first see LOP, very common in the exam. Second, SOP. Both you have to understand really well. LOP plus SOP you have to know really well. That after two houses, DLOP is rarely asked in the exam. Next, areas of rent. Important from an exam perspective. Um, that's about it, right? And then SOP, LOP, first floor, ground floor, that kind of concept is important from an exam. Are we okay? I'm giving you a slightly tricky question. Ground floor shop. Ground floor shop. I'm a Marwadi jail. This is very common in Marwadis, guys. Ground floor, they'll have a jewelry shop. First floor, they'll stay. And second floor, who'll climb the second floor? They give it on rent. Everyone. So ground floor, shop. First floor, SOP. Second floor, LOP. Now tell me, guys, how many? Three parts. Which is the easiest one? SOP. 0, 0, 0, and you'll minus what? Interest. Next, you'll do LOP. The ground floor, guys, is PGBP. In that ground floor, guys, the income will go under which head? PGBP, and you can take all expenses. You can take insurance also of the ground floor, repairs also, no standard deduction. And PGBP, you can take how many deduction, guys? Unlimited, as long as it's connected to what? Business. You have a security guard outside the shop. Can you take a deduction for that also? Yes. In house property, you have how many deductions? Three. But in PGBP, you have 300 deductions, as long as you can connect it to one, guys, business. Are we okay? So that's your chapter. Now, it's 5:15. We started the lecture. Of course, the technically 3 o'clock, but I came a little late. So you decide, guys. Now, what do we want to do? Do we want to start with sums? Do you want to take a break, come back, and start with sums? You all choose. Can we do sums, or you want to break? Sums. Okay. Let's start with sums. We'll take ICI material sums. And what I was thinking of doing is what is your schedule in the morning these days? Guys, are we free in the mornings? Yes. Are we studying in the mornings? So what we could do is, I'm just thinking aloud. We can do discussions right now. Yes. We do some sums here. Some sums you practice in the morning. Then we'll again discuss it. It will be a faster discussion. Yes. So let's say house property we do here. The next chapter probably you can discuss here. Try this doing the sums at home, and then we can discuss again when we meet again. Yes. All right. So let's start with the sums, everyone. Yes. I'll take 2-3 minutes. You also take 2-3 minutes, and we'll start with sums. This isn't working. Acha, now it. Yes. So now just looking at sums, and sums should be not very difficult, should be okay. Uh, we'll need to be sitting together, like all of you guys are sitting close by, which is good because we can discuss. And we need a calculators also now. We'll discuss sums, and then once we take a break, we come back. We'll also solve one two sums for practice purposes. Yes. All right. I'm just showing you this quick book, guys. Whatever we discuss, guys, is in this quick book, and it has some more shortcuts also, like legally, vacate, other building, and all. So you can use this quick book to revise. Otherwise, no problem. Whatever book you are referring to, also you can revise, as long as these concepts are covered there as well. Yes. Now I'm opening up the ICI material. This is the ICI material, and all right. I'll convert it later into Word. I can't find the Word document, but we'll continue with this only. Let's go to some illustrations. Yes. First, we'll solve the illustration and then we'll go to the sums. I'm not reading any concept, just the illustration straight away. Let's take the first one, guys. Very simple illustration, shouldn't take too much time. Guys, let's do for house 1 and house 5. Municipal value or fair end? Which one will you take, guys? Fair end, higher. And is there a standard rent? No. So 90. And what is the actual rent? 72. Which one will you take, guys? 90. Same with the house 5, guys. 80 or 75? 80. But you'll restrict it to how much? Or 72. Which one will you take? 78. Yes. Not important. Exam perspective, no. If I were you and if I had the CA ICA material with me, I would write an E here. E means easy. I'll never look at it again. Yes. So like she has an ICI material. Yes, she's writing it. Tomorrow, from tomorrow onwards, you can also get the ICI material. Yes. All right. Next, we'll look at more illustrations. Let's go to the next one. Yes. Rajesh is a British national. That means his passport is UK passport. He's a resident, and which resident, guys? Ordinary. ROR. Guys, you know something about ROR. He's taxed on which incomes? All incomes. He has a house in London, which has let out. Everyone, what kind of property is it? LOP. He's rented out at how many pounds a month? 10,000. So can we start the calculation? Everyone on the calculator directly. 10,000 into 12. 1,20,000. This is my actual rent. What is the municipal tax paid to Municipal Corporation of London? 8,000. So I'm minusing 8,000. What is the balance? Yes, 1,12,000. From that, guys, will I get standard deduction? Please minus 30% and tell me the final number, guys. 78,400, but this is in pounds. What is the conversion? 95. Please convert 95. How much is the final number, guys? 70. Everyone, what is the final number? Okay, they've only calculated till NAB. Guys, I've considered ahead also. So 78 lakh. 74 lakh 48,000. Everyone okay with this? Yes. Guys, will I get foreign municipality deduction also? Yes, guys, look at the logic. If you're offering what to the government? Income. Everyone, if you're offering what to the government? Income, you'll also get the deduction. So even at the house in London, how many deductions will you get? 3. Municipal tax, 30%, and also interest. Of course, interest was not given here, so I've not minused it. Guys, again, if I were you, I would put this E and I would move ahead. Next. Everyone, start reading here. Let's discuss. Mr. Manas owns how many properties? 2 house properties, one where at Bombay, where his family resides, and the other is Delhi, which is unoccupied. I'm writing here Mumbai and I'm writing Delhi. Both are what, guys? SOP. Even if it's unoccupied, can it be SOP? Yes. He lives in Chandigarh for his employment purpose in a rented house. For acquisition of the property at Bombay, he has taken a loan, his Mumbai property. Is it SOP? Yes. What are the numbers, guys? 0, 0, 0, except interest. Guys, what is the loan amount? 30 lakh. At what rate, guys? 10%. On 1st April 2022, he has not repaid any amount so far. So can we calculate, guys, everyone, on your calculator? Yes, 30 lakh into 10%. 3 lakh. Is it for acquisition? Yes, I'll not get 3 lakh. I'll get maximum how much, guys? 2 lakh. Everyone, okay. That's one house. Next, he has not repaid any amount so far. In respect of the house in Delhi, he has taken a loan of how many lakhs? 5 lakhs at what percent? 11. Can you do the 5 lakh into 11%? 55,000. But this is for what, guys? Repairs. So I'll not get 55. I'll get only how much, guys? 30. Now compute the deduction, guys. So 2 lakh in one house, 30,000 in one. So total 2 lakh 30. No. How much, guys? 2 lakh. Everyone check this out. How much? And finally 2 lakh. If I were you, I would mark D to this question. This is a question that I'll definitely do again. So D is for do it again. Yes. Everyone okay? Any doubts? Any doubts? Any doubts? Moving ahead. Just wanted to check how many of you all actually did this when you gave your last exam. Did you try all these sums from ICI material? No, just asking. Did anyone? For all chapters, did you? But did you manage to do all? Okay. And one day before the exam? Oh, you haven't written the exam. Okay. Anyone who's written the exam? Yeah. Okay.
I could see the question. I could not solve it.
You could not solve it. Okay.
I just saw the main question. Wherever I went from, I marked it.
Okay.
I just saw.
Saw those. Okay, perfect. Otherwise, guys, this D thing, only focus on those questions one day before. I think this should be good. Yes. All right. Next, guys. There's Anirudh who has a house property, guys. Please read this question and tell me what kind of property is it, LOP or SOP? Yes, what is it, guys? Let out. Everyone, let's take a calculator. Municipal value or fair rent, which is higher, guys? Municipal value. So 1 lakh 30 or 1 lakh 10, which is the higher one? 1 lakh 30. And what is the standard rent? 1 lakh 20. So my expected rent is how much, guys? 1 lakh 20,000. Let's say actual rent. How much is the actual rent? 11,000 into 12. 1 lakh 32,000. I'm depending on you all guys for calculation. You can't depend on me for calculation. Yes. All right. From there, guys, please tell me, is there any unrealized rent? So can I minus unrealized rent? How much is that? 11,000. What is the balance? 1 lakh 21,000. Guys, anything else? No. Please tell me which one will I take? 1 lakh 21. That becomes my GAV. 1 lakh 21. I'm not even solving ahead, guys. From that, how many deduction? 3. Can you find out municipal taxes? Yes. Do you have standard deduction of 30%? Yes. Interest on borrowed capital, 40,000. How much deduction can I take? 40. Because what kind of property? LOP. LOP, any limit, guys? No. So three deduction, guys, I'm checking here. Did we also get 1,21,000? From that municipal tax, from that 30%, from that interest. Are we okay? If I were you, I would mark E, and this is a very simple sum. I would not probably do it again one day before the exam. Yes. The next one is kind of interesting. I would want to take 2 minutes to all of you, give 2 minutes and try and see what kind of GAV are you getting. Just tell me GAV, that's it. Yes, 1 lakh, 1 lakh 80. Excellent, guys. Municipal value or fair end, which is higher, guys? Municipal value, and standard rent is 2 lakh 10. So my ER is very clear. How much is that, guys? 2 lakh 10,000. Let's say AR. How much are you renting it for? 20,000. Always start with 12 months, guys. 20,000 into 12, 2 lakh 40. What is the unrealized rent? 20,000. So I'm minusing 20. What is the balance? 2 lakh 20. Now, guys, the tricky part. Was it vacant? Guys, is there vacancy loss? Yes. For how many months was it vacant, guys? 2 months, February and March. Can I minus vacancy loss? Yes, because my AR is more than my ER. So how much am I minusing, guys? 40, and that becomes how much? 1 lakh 80. Now, guys, I will ignore what? AR. Yes. After this, it's very simple. How many deductions? Three. So, guys, this Ganesh question I would mark as D. This Purna question is fairly simple. Please read the question and let's discuss. Tell me if it's SOP or LOP. Everyone, please read the question and tell me if it's LOP or SOP. SOP. She's staying with the family. If an SOP, guys, I'm very happy because all the calculation are 0, 0, 0. Only calculation is what? Interest. Now, before I go to interest, I want to put the limit, guys, whether it's 2 lakh or 30,000. Check the loan, guys. The loan was taken for what? Construction. In which year? 2017. So overall, guys, what will be my limit? 2 lakh. Guys, I want more answers from you. Please tell me overall what will be my limit, guys? 2 lakh. Can I get 2 lakh, etc.? No. I will exactly get maximum 2 lakh. Now, guys, let's see. Guys, there is some PCP also and current year also. Read, and tell me in this year how much interest has she paid? Yes. So what is the current year interest, guys? 1 lakh 80. Everyone okay with this? Yes. Guys, current year means the year you are in, she has paid interest of 1 lakh 80. Now PCP interest, guys. Everyone. Tell me the year of completion. Not date of completion. Tell me the year of completion. I want more confident answers, guys. Which is the year? 1920 is the year it got completed. So before that period is called what period, guys? PCP. Everyone understanding this? Yes. Not the date, the year. Everyone, not the date, the year. Now in PCP, what is the accumulated interest up to that day? 3 lakh 60. So they've given us the PCP interest. Will I get the entire thing or five parts? Five parts. So divided by five, guys. Everyone, 3 lakh 60 divided by five. How much is that? 72,000. I'll get in how many years? But am I in that 5 years? 1 minute, 1 minute. So which is the first year? 1920. Then which is the next year? 2021. Next year? 21, 22. Next year? 22, 23. And which is our exam year, guys? 23, 24. 1, 2, 3, 4, 5. Am I in there? Yes. So I'll get PCP of how much, guys? 72. Please add both these numbers. 2 lakh 52. But will I get 2 lakh 52? No. I will get how much, guys? Everyone. This is a very good question on PCP. Just asking you, guys, PCP is given in how many parts? Five. Now, guys, next year, will I get PCP? No, because next year is a sixth year. I will not get PCB, but will I get current interest? Yes. All right, that's question number 6. I would do it again, guys, once. So this is D. Please read the question and tell me what kind of house property is this. Yes. Is it LOP? Yes. Very simple sum. Is municipal value or fair end, which is higher? 5 lakh. And it will be limited to how much, guys? 4 lakh 80. So my expected rent is 4 lakh 80. Guys, everyone, please take your calculators. Actual rent. The rent is how much? 50,000 up to which month, guys? December. So 50,000 into 9. 4 lakh 50. After that, what happened, guys? Guys, the tenant vacated and who stayed? So is it LOP plus SOP? Yes. So for the remaining 3 months, rent is 0. So this is 4 lakh 50. Now check, guys, is there any unrealized rent? Yes. For how many months? November and December. Can I minus unrealized rent? Yes. So 50,000 into 2 is how much? 1 lakh. Is there any vacancy loss? No. Because, guys, after he left, who came in? Owner. So, guys, there was no vacancy loss. So 3 lakh 50 or 4 lakh 80? 4 lakh 80. Everyone just showing you your GAV is 4 lakh. Everyone, okay. Guys, after GAV, life is simple. Which 3 deduction? Municipal tax, then 30%, and then interest. Guys, how much interest can I take here? Unlimited, because LOP plus SOP. All right. Guys, again, this is a question which I felt was simple. So I would write as a E here. We move to the next one, guys. Ganesh has how many houses? 3 houses. Now, a question with 3 houses to solve in the exam, I don't think will come because it will take a lot of time. But I'll tell you how this is solved, guys. If you have 3 SOPs, how many can you take as SOP? 2. And the remaining? DLOP. Sir, confusing. I'll tell you very simply, guys, how to answer this. I'll show you guys. You go to Zara and they are running an offer. You can buy 3 products. You can buy and you can pay for anyone. You can pay for anyone. These are the 3 products, guys. First product price is 2000. Second product price is 2100. Third product price is 500. You can buy 3 products, pay for anyone. Which one will you pay for? Are you understanding why? Because it hurts your pocket less. Same way here also, guys. How many properties do you see? 3. All of them you will do LOP calculation. Which calculation? LOP. Everyone. All of them, how many calculation will do? 3. Now, just assuming this comes out to be 3 lakh. How much? 3 lakh. This comes out to be 4 lakh and this comes out to be 5 lakh. Guys, everyone. If you do LOP calculations, all 3 of them, 3 lakh, 4 lakh, 5 lakh. Which is the one which will offer the least amount of income? 3. So least income means less the income, less the tax. So guys, this one you'll take as SOP. This one you'll take as SOP, and this one you'll let it be as LOP. Are we okay with this? I'm not expecting this in the exam because, guys, 3 calculation means they have to give you about 10-12 marks. They don't have 10-12 marks from 35. Yes, let's be the smart one here. But in case it comes in the exam as an MCQ, guys, you will take how many LOPs? 3. And you will do the permutation combination. Take the cheapest one as what, guys? LOP. Yes, everyone. Giving you 3 different numbers. One house 10 lakh, one house 12 lakh, one house 15 lakh. Which one do you want to pay tax on? 10. So guys, both these will be what? SOP, and this will be deemed. Are we okay with this? If I were you, again, I would do this sum just for the novel question. There are 3 houses. Yes. All right. And guys, you have tomorrow morning. You can go through these sums yourself also. Try it. If there's any doubt, I'm here, happy to take those questions and help you. Frame. Very simple question, guys. Read the question and tell me if it's what kind of house property. Portion. Guys, what is he staying in 2/3? SOP. So he's divided the house. SOP is how much percent? 2/3. And LOP is how much, guys? 1/3. Guys, if they divide the house, you divide the calculation. In SOP, all the numbers will be what? 0, 0, 0. Only take how much? Interest. But guys, let's figure interest will be 2 lakh or 30,000. Let's check. See the loan, guys. The loan is of was taken by him for what, guys? Acquiring. In which year? 2019. So what is the limit, guys? 2 lakh. So whatever is the interest, you'll take 2/3 here. And in LOP, guys, will you do all the calculations? Yes. But which proportion? 1/3. Municipal tax? 1/3. Interest? 1/3. Everything? 1/3. Are we okay? So if they divide the house, you divide the calculator. Everyone. Again, this question number 9, for its novelty, I'll mark it as D. Guys, these D questions I am assuming, but if you found it very simple, you can convert those D's to E's so that the lesser the number of questions to do before the exam. Question number 10, I'm not even reading out, I'm just telling you because I know this question. There's a person called Anand, he's getting 2 arrears of rent. How many arrears of rent, guys? 2. I'll show you guys. Guys, in June 2023, he recovered rent of how much? 10,000. Is that arrears of rent? Yes. And also in the same year, guys, he recovered, the matter was finally settled and Mr. Anand received how much? 69,000. So how many arrears, guys? 2. 10 plus 69, 79,000. Is it arrears of rent taxable? Yes. But you'll get how much percent standard deduction? 30. Please minus 30% and tell me the final number. 55,300. I'm just showing you guys here also 55,300. And for arrears, you know the section 25A, which is capital. All right. Please read question number 11. 10 is easy. In case you are marking it, 10th one was easy. This is 11. Zoom in. Okay. Is co-ownership? Yes, guys, co-ownership, but what kind of property? Excellent, guys. So how many calculations will I do? 2. Guys, S for SOP, S for separate. So I'm doing one calculation for Aparna and one calculation for Dimple. Everyone, guys, co-owns a property along with a sister where a sister's family resides. So again, guys, is it SOP? 0, 0, 0. What deduction? Interest. Same year also 0, 0, 0. And what will I get, guys? Interest. First only, let's see the interest will be either 2 lakh or 30,000. Let's check, guys. Guys, how much is the loan? 50 lakh. Is it for acquisition? And is it taken in 2022? So both of them deserve up to how many lakhs? 2 lakhs. Have you got a limit maximum? Yes. So as two sisters, you can get 2 lakh plus 2 lakh. Benefits of co-ownership, I guess. Now let's check, guys. Everyone, 50 lakh into 10%. Please do the calculation. 50 lakh into 5 lakh. Now interest is payable in respect of loan 5 lakh. And who's paying the loan, guys? Both. So here how much? 2.5. But I'll get only 2 lakh. And here also I will get how much, guys? So Aparna will get a deduction of 2 lakh. Dimple will also get deduction of 2 lakh for this house property. Are we okay, everyone? Guys, this 2 lakh is per house or per person? And how many persons? 2. That's why 2 lakhs. Everyone. But that's not the question only, guys. Aparna has another house. Owns a flat where? In Pune, in which she and her parents reside, guys. Is this the second SOP? For Aparna, guys, this was SOP 1 and there is SOP 2. But I'm not even calculating it. Because, guys, for Aparna, her 2 lakh is over. So even if there is a house in Pune which has interest deduction, you will still get only maximum 2. But still, let's do that, guys. She has taken a loan of what? 3 lakh for what purpose? Repairs. Everyone, they're trying to calculate it, but your concept should be solid. One house 2 lakh, the other house 30,000, but still you will get how much, guys? 2 lakh. So ultimately, please tell me, Aparna overall will get deduction of 2 lakh. Dimple overall will get 2 lakh. I have a few questions. Dimple, I have understood. Aparna, 2 houses still only 2 lakh. Why? Per person. One house 2 lakh, one house 30,000. Still 2 lakh, whichever is higher. Are we okay? I'm just showing you the calculation, guys, here. So here is deduction. This is whose case? Aparna. How much finally, guys? 2 lakh. Guys, never fall for this type of 2 lakh 30. It will always 2 lakh. Everyone okay with this? And Dimple, guys, how much? 2 lakh. This impartable estate, all that if you go and know, guys, I cannot get you out. and never comes in the exam. Yes. So I know when we start studying, right, in the month, let's say 6 months or 8 months before the exam, if we're studying, we can study each line. I can teach you every line. But 2 months before the exam, I have a feeling we should cater it to our exam and we should try and see what comes in the exam. So IFHP, practical question comes in the exam. LOP, SOP, those kind of questions come in the exam. And if it's deemed ownership also, there are only two relationships, spouse and minorship. Yes. All right. So congratulations guys, all the illustrations. And I think we began at about 5:20. People say ICI material is impossible to do. Of course, very much possible. All the illustrations, guys, we finished in 20 minutes. The only thing is, if you do this alone, you cannot do it. Sitting alone and doing ICI material, after two, three questions, you'll give up. You'll take a break, take a walk around, and then look at other people, some birds outside, some phone, scroll phone. So as a group here, we can do this very well. Yes. Also, if it's not a group, even if it's two, three friends, no, like these two are friends. I know they have four, five friends who study together. You'll be able to do it. Yes. Spread it out, ask out doubts. You'll get the momentum going. Yes. All right. Now here we go. While those were great questions, here there are some more questions, guys. Let's see how many questions. There is one, two, five questions. Yes. So what I'm thinking is these five questions, of course, there are solution also. Why don't you try? Because we've done a lot of questions. Yes. So why don't you try tomorrow in the morning, and then in the afternoon we can again discuss it. Yes. So we'll try and do some mix so that we can finish a lot of more chapters. Then otherwise we'll not finish too many chapters. Yes. Are we okay? Now this is our discussion on house property. Next month, next to next month, one day before the exam, how do you look at house property, guys? First, same way, you will do the concepts. Yes. More than the concepts, I have a revision video. Yes. I will send you a drive link and I will upload the revision videos on that also. So in my to-do list, guys, I'll also upload revision videos. 1 minute. So I'll make a small folder on the drive only where I'll upload revision videos. I have already recorded them. I just have to add them there. And first you can watch the revision video. You can get all the concepts back up to date along with your notes and then do sums. Yes. Don't get stuck in the notes. I have a 80-20 principle. 80% sums, 20% concepts. That means guys, whichever chapter you're doing, house property, concept should be only how much percent? 20. And 80% of the time should be spent doing sums. Are we okay with this, guys? Yes. So there are five sums. I'm expecting you to do it tomorrow and then come to class. Right now, take a break, guys. Yes. I'll see you guys at 6:15. Is that half an hour good? Yes. 6:15, guys. People online as well. 6:15 is when I'll see you guys back. Thank you and see you. Any doubts? You can use the chat box till then to transfer doubts. All right. And while we are back, we did some good work on house property as a chapter. Conceptually, we finished the chapter. Then we looked at the illustrations, but looking at the illustration and solving questions is a little different. So let's spend some time now, at least doing a few questions if possible. I'm not looking at ICI material or ICI paper questions right now because we'll have to fetch the question. So what we'll do is after we finish a few chapters, we'll start doing ICI papers also. Yes. So right now, let's continue with the material. I know I've told you to do those five questions at home, but let's take one of the questions and try and solve it here and see how we present it, because ultimately guys, whatever we know has to go down as presentation. So let's try and do that as well. So here we go. I'm just looking at income from house property again. This is the first one. This is the first question. Guys, we'll first discuss the question, and this kind of question we'll also write. So as a practice, what you could do is you could have a handwritten note open, yeah, a Holscape book or somewhere where we could practice some questions. Yes, this is purely to see how well whatever we know we apply. Yes. All right. On the screen, guys, is a question which is pretty simple a question. We'll just discuss it and we'll see how we write. Mr. Raman is a co-owner. Okay. I'll just give you a small pro tip before we even start to write, guys. Whatever the last line, if they asked, that becomes our first line. So if they ask compute income from house property, then our first line will be computation of income from house property. Yes. Let's see here, guys. This is a person called Raman who is a co-owner of a house, along with whom? Brother, holding how much share, guys? Yeah, so 50-50%. They've given us the municipal value, they've given us fair rent, and they've given us standard rent, and they've also given us rent Deceived. That means, guys, what kind of property is this? LOP. What kind of property, guys? LOP. I don't know, for some reason this is disappearing. One minute. Yes, here we go. So this is a LOP property. Yes. This is LOP. Change it to unable to. But anyways, let's discuss. So guys, municipal value or fair end, which is higher, guys? 1,60,000 or 1,50,000? 1,60,000. And is it within standard rent? Yes. So what is my expected rent, guys? 1,60,000. Now rent received is how much? 15,000 per month. Everyone into 12. Always start with 12. So 15,000 into 12, how much? 1,80,000. Now guys, just read and see whether there is any unrealized rent. I'll just zoom in, guys. Is there any unrealized rent? And no can also be an answer. Is there any unrealized rent? No. Is there any vacancy loss? No. There's nothing of that. So 1,80,000 or 1,60,000. Which one will I take, guys? 1,80,000. So guys, I can't write it, but mentally 1,80,000 is where I'm starting off. Now, is it co-ownership? But is it LOP? So I have to do the calculation. In the last, I have to split. Yes. So we'll start in mentally, guys. 1,80,000 is my GAV. From there, guys, please tell me how much is the municipal tax? 5,100. But paid by whom? Tenant. So will you get a deduction? No. So 1,80,000 minus how much, guys? 0. So NAV also becomes how much? 1,80,000. From that standard deduction, how much percent? 30. So mentally, guys, 1,80,000 into 30%. 54,000. That's a standard deduction. And now interest, guys. Everyone, this is a nice interest question. Guys, interest charged by the bank is how much? 25. Out of which you have paid how much? 21. So how much will you get deduction of? 25. Excellent. And guys, this interest on unpaid interest, will you get deduction for this? No. Guys, if you only give you interest. Interest on unpaid interest is your mistake. Penalty is your mistake. You don't get deduction for that. So will I get deduction for 450? No. To repay this loan, Raman and his brother taken a fresh loan. Fresh loan is okay, guys. Fresh loan means what? HDFC Bank was charging you 10%. So you paid that loan and you take from Kotak 8%. So this is a fresh loan. Interest is how much? 5,000. Will I get this also deduction? Yes. So total deduction will be 25 and 5. Yes. So everyone 1,80,000 minus 54 minus 25 minus 5. How much is that number, guys? 96. That is the overall house value. Raman is how much? Owner? 50. And what have they asked you to compute, guys? Compute the income for Raman. So Raman will be 50% of 96 is how much, guys? 48,000. Now this is a sum which we need to now convert into a proper sum. And let's see if we can present this sum well, guys. Yes, everyone. Let's start. This is question number 1 of ICI material. Everything. Imagine, guys, you're in the exam hall. How will you write it? Same way with working notes. Everything will write the same. Everyone. Question number 1. What is the last line? Compute income from property. So everyone, our first line will become computation of IFHB of Mr. Raman. Computation of IFHB of Mr. Raman for PY 23-24. Open bracket AY 24-25. For PY 23-24, open bracket AY 24-25. This is the heading. Now tabulate, guys. There are 3 columns: particulars, amount. Imagine you are a person who's checking this paper, guys. It should be as neat as possible. Yes. Particulars, amount. Guys, what is this property called? LOP. Is it LOP, guys? Yes. So under particulars, guys, you will start writing let out property. Of course, here we'll write LOP in the exam full form zone. LOP underline semicolon. Guys, we have 2 values, AR and ER. Yes, let's start calculating. LOP underline semicolon. Under LOP, guys, first expected rent. Under LOP, expected rent. Open bracket. higher of 1,60,000, higher of 1,60,000 or 1,50,000. I'll repeat. Heading is LOP, underline semicolon, next line, first expected rent, open bracket, higher of 1,60,000 or 1,50,000, subject to the limit of 1,70,000. Subject to the limit of 1,70,000. Close bracket. And in the inner column, guys, your number is 1,60,000. This is you telling the examiner, I know expected rent is 1,60,000. Next line, second. Actual rent. All calculation have to be shown. So what is the rent, guys? 15,000 into how many months? So open bracket, 15,000 into 12M. Close bracket. What will you write? 1,80,000. If there is no unrealized rent, you'll not talk about it. No vacancy loss, you'll not talk about it. Next line straight away. Therefore, GAV. Therefore, GAV. Open bracket. Higher of the above. Therefore, GAV. Higher of the above. Close bracket. And which one is the higher one, guys? 1,80,000. Everything is in the inner column. When you get the final number, you'll take it to the outer column. So after GAV, what is the first deduction? Municipal tax. So your next line, you write less, semicolon, municipal tax paid by tenant, less, semicolon, municipal tax paid by tenant will not be allowed as a deduction. Municipal tax paid by tenant will not be allowed as a deduction. So how much will you minus it? 0. Instead of writing 0, guys, you should write ideally dash. Next line shows 1,80,000, then 0. So your net annual value, therefore NAV. Inner column only, guys, how much? 1,80,000. So one deduction down, second deduction. So NAV is 1,80,000. Again, guys, write less, semicolon. Standard deduction. Because it is very common, you should know the section. Standard deduction under section 24A. Standard deduction. The word should be standard deduction. Is nothing else. Standard deduction under section 24A at the rate of 30%. And how much will you minus? 54,000. Next line, less, semicolon, interest paid slash payable, interest paid slash payable. How much will you minus this? 25,000. You have to show the different interest. So first we minus interest paid slash payable, 25. What about the interest on interest? Not allowed. But you'll have to at least show, because how will you tell the examiner you know it? So next line, less, interest on unpaid interest not allowed as deduction. Less, interest on unpaid interest not allowed as deduction. In the inner column, guys, we'll put a dash. Interest on unpaid interest not allowed as a deduction. We'll put a dash. There's one more interest, guys. Interest on which loan? Fresh loan. So again, less, semicolon, interest on fresh loan. Guys, fresh loan is very simple. One loan was expensive, you paid that and you got another loan. Interest on fresh loan. How much? 5,000. No, 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 no. Like Airtel is expensive. Can you switch to Jio? Yes. So now Jio bill. Same way, I took a loan from HDFC. That's expensive. So I take a loan from Kotak. I pay that earlier loan, and now interest I'll pay to Kotak because it's lower. That's called fresh loan. Yes. Yeah. Switching is interest on fresh loan 5,000. So finally, guys, you write therefore income from house property and straight in the outer column 96,000. Income from house property straight in the outer column 96,000. But they haven't asked for the entire house. They've asked for whose share? Raman's share. You will write the next line. Raman's share of IFHP. Raman's share of IFHP. Open bracket 50% close bracket. Raman's share of IFHP. Open bracket 50% close bracket. And again in the outer column, that 96 will become 48,000. As you don't have to write any conclusion, nothing. This is your conclusion. The last thing which is in the outer column is your final number. Yes. Ideally, guys, you should have written working notes, but in the working note, whatever had to be written, I wrote it there only. First, municipal tax is paid by tenant. Is it allowed? Not allowed. So we written there also. Interest on unpaid interest, not allowed. So these could have been working notes, but I put them in the table only. Yes. Guys, if you write a paper sum like this, you will get all your marks as long as your handwriting is good, your lines are well made, and it's a neat paper. Yes. All right. Guys, second question, third question, fourth question are something that you should look at home. Fifth question also. So about 4 questions to be written at home. I'm very tempted to do the second question, guys, because it's very conceptual, the second question. So let's discuss it. If possible, we'll write it also, but it's a very good question. Yes. Guys, the chapters that are important, let's do as many questions as we can. The chapters that are not very important, or if we can skip some chapters, but at least the chapters that we do, we have to do them full. Yes. Guys, question number 2. Mr. X owns one residential house where, guys, Mumbai. The house is having how many units? 2 identical units. First unit of the house is SOP by Mr. X. Another unit is rented for how much, guys? 8,000 per month. So you divide it into how many parts? 2 parts. Everyone, first is SOP, second is LOP. What is the proportion, guys? Identical, yes. So it's 50-50%. So I'm writing here also 50%. I'm writing here also 50%. Now, the rented unit was vacant for how many months, guys? 2 months. So in LOP, there is vacancy loss also. But all that I'm not bothered. I'm mainly focused on which first? SOP. It's my favorite because everything is 0, 0, 0. Only which deduction I will get? Interest. But even before I calculate the interest, let me mentally check 2 lakh or 30,000. Guys, did you take a loan? Check, check, check. Interest on borrowed capital 1,500 per month. Have they given us details? No, guys, they have not given us details. So we'll assume, guys, that it's for acquisition, etc. Everyone, to take your calculators. 1,500 into 12. 18,000. Will I get the full thing? No, half, no, SOP. So 18,000, yeah, of course, yes. Divide by 2. 9,000. Will I get 9,000? Yes. So I'm taking 9,000 here, guys. It's all gone. So this is 9,000. This is my loss from which, guys? So everyone okay? Guys, there's no need also for 2,30,000 because it's very low, 9,000. But the main part now is LOP. Everyone, let's focus on LOP. Guys, for LOP, forget what they've given. Tell me what you require. You require ER and you require AR. Let's look at ER first. Standard rent or municipal value? Municipal value or fair rent, which is higher, guys. So 1,90,000, but I'll restrict it to 1,62,000. But while I take that, that's for the entire house. So take 1,62,000 divide by 2. 81,000. Everyone okay? Why ER is 81? Yes. All right. Guys, you don't have to divide all the numbers. Get the final number, then divide by 2. Next, actual rent. How much is the rent for? 8,000. Everyone, 8,000 into 12. 96,000. Stop. Check, guys. Is there any unrealized rent? Not vacancy loss, guys. Is there any unrealized rent? No, I don't think there's any unrealized. It's only vacancy. So there's no unrealized rent. How many lost vacancy? 2 months. 2 months into 8,000. 16. Now stop, guys. Can I minus vacancy loss? Yes. Your AR is more than your ER. So can I minus vacancy loss? And after that, I have to ignore what? ER. So 96 minus 16 is how much, guys? 80,000. Everyone, that becomes my GAV. Everyone, I'll show you how to present this also. We'll write this one also, no problem. But this is how we get the answer. Now, guys, we'll start from GAV. What is the first one? Municipal tax. Everyone. So 5%. Everyone, take your calculators. 1,90,000 into 5%. Guys, why are people so surprised? What's wrong with you? What's that? Municipal tax. Yeah, of course. Yeah, so 1,90,000. No. First, let's take the full amount, then divide it. 1,90,000 into 5%. How much is that? 9,000. 9,500. Divide by 2. 4,750. All right. That's municipal tax. Is it paid? Yes, paid by Mr. X. Guys, please tell me the NAV. 75,250. From that, guys, please take 30%. How much? 32? No. Tell me 30%. 75 to 50 into 30%.
675.
That's the balance amount, guys. I want the 30%. 22,575. I want to show it, guys. So I want to show this number also. And then from that, guys, what deduction will I get? Yes, guys. Guys, please, it looks like you're just CA foundation students right now. Please, you're inter students. You've done so many classes before also. Please, very confidently tell me, guys. Everyone, 30% you got. Now interest. How much is the interest? 1,500 into 12. 18,000 divided by 2. 9,000. Can I take 9,000 entirely? Yes. Now everyone, while we get the final number, my numbers are disappearing. I ask you some things. You tell me, can I take a deduction for light and water charges? No. For lease money? No. For insurance charges? For repairs? No, because we've already got which deduction? Standard deduction. Are we okay? Just checking the number from you guys. This is question number 2. This is something that we got 48,000 of Raman. Now let's check this. Question number 2. Guys, did we also get expected rent 81? Yes. Did we also get actual rent 80? And our GAV was what, guys? 80. Everyone, did we also get 80? Yes. Okay. Then, guys, we had 4750. We also got 75,250. We also had 22,575 with great difficulty. You all told me this number. And we also had 9,000. So, which is this number? So, 43,675. Everyone. And we got 9,000 here. So, the net was 34,675. Everyone. We got the same. But what about light, water, electricity, and all that, guys? Guys, so we have to write a working note on it that those will not be allowed as a deduction. Are we okay? Yes. Let's present it because I want to show you how you present that AR, ER, that thing. Yes. Let's start writing. This is question number 2 of your ICI material. Computation of IFHP. Who is this person, guys? For Mr. X. For PY 23-24. AY 24-25. In the exam, ideally full forms everywhere. But if you are very short on time, write IFHP. Otherwise, as a rule, write full forms only in the exam. Yes. Particulars. See, actually, no one knows how ICI perceives it, but as far as we feel, it's an exam, so we write full forms. No book has said ever, ICI's book, that you have to write full forms in the exam. But it's a notion that it's an exam, so we write full forms. Yes. So this is particulars amount. Let's start with the first one. Guys, the exam question has been solved. They have solved SOP second, but I always start with SOP. It gives you confidence. Yes. So everyone, first, self-occupied property. How much percent, guys? 50%. GAV slash NAV is 0. We get only one deduction, less. interest deduction 1500 into 12 into 50%. Does last part of the question say to compute as per old scheme? We'll talk about it, Dhanush. Thank you for that. We'll just check. Yeah, we can write 24B here. Interest deduction under section 24B, 9,000. We can write that, but not necessary. We have only one deduction, so I'm writing that. So this is 9,000. Second, LOP, 50%. In that first expected rent. Higher of, can you please, someone who has the book, can you tell me what is the municipal value?
That's right.
Higher of 1,90,000 or 1 lakh. Fair rent is
There it is
1,85,000.
started
1,62,000. Subject to limit of 1,62,000. So I'll take 1,62,000, but I will take only 50%. As when you divide the house, all calculations have to be divided. So expected rent is 81,000. And I'm calling this expected rent A. Next is actual rent. Actual rent is 8,000 per month, always 12 months. Like even if it's vacant for 2 months, you will always start with how many months? 12, and then you'll minus the 2 months. That's 96,000 less vacancy loss, 8,000 into 2 months. Now guys, you don't have to tell the examiner how you know vacancy loss has to be minus. You just minus it. Yes, less vacancy loss, 16,000. This is 80,000, and you take B. Therefore, gross annual value is 80,000. Please, while 80 and 81, which is higher? 81, but still we take 80 because once you minus vacancy loss, you have to ignore ER. That again, you don't have to tell them. You just have to write 80,000 and start there because they will be checking. They should GAV should be 80,000. Yes. Less. Municipal tax paid 1,90,000 into 5% into 50%. 4,750. Therefore, NAV 7550. Less standard deduction under section 24A, less interest deduction under section 24B. This is 30%. This is 1,500 into 12 months into 50%. This I know is 9,000. This is 30. 31,570. Are you sure? Yes, 31,570. Therefore, LOP, guys, what is the final number? 34,675. This is LOP. There was a loss of SOP, so we'll get net it. Therefore, net income from house property. Was it? Kashan, what are the calculations? How much is this, guys? 75 to 50? 22 5 22 575. That's why black coffee, don't sleep. This is what happens here. 22 575. And so this number is what, guys? But why? Who asked you the total value? What is this number, guys, finally?
43,674.
You give me all the wrong numbers. 43 675. So I'll net the amount, guys, minus SOP. So this is LOP and SOP. How much is that, guys? 34 675. You're answering an MCQ when I'm answering a full question. See, people here online are very agitated with the numbers. Wrong numbers are giving me, they're getting angry. All right. While this is great, we have to write a working note on those light and water charges and all. So please write working note. You get marks for working notes also. So working note 1. No deduction can be availed for repairs, lease charges, and light water charges. Guys, why don't they give us deduction for all these? Yes. So we have covered that in standard deduction already. So no deduction can be availed for repairs, lease charges, and light and water charges. Done. Okay, guys. Yes. Every time you do a sum, guys, slightly you get better at presenting. So that's what matters. And ultimately, guys, out of all the concepts, you will be given one sum in the exam. Do it well, present it well. Even if you go a little bit wrong, as long as the presentation is right, you score most of your marks, even if a small amount goes wrong. And guys, what if one small thing goes wrong, let's say, then do you get marks for steps? Yes. It's not that it's not MCQ where the final number is only seen. They also see your marks for steps. So typically your first step will be SOP. Next step would be GAV. That vacancy loss. So every step you do rightly, you'll get marks. Yes. So this is question number 2. I'm just saving this. Question number 2. This is ICAI material. And this is from IFHP. All right, perfect. Everyone okay with this question? So now we are left with 3, 4, and 5, which you can do at home later and then come back tomorrow with the doubts on that. So I'm thinking IFHP looks like something that we are now okay with. Yes. The more you revise, the better you get, but I don't think it'll take too much time now. How do you revise it again? Watch the revision video and do sums. Yes. So you'll be okay with house property. Of course, this can be asked as an independent question, but sometimes it's asked as part of a bigger question, a small part. I'll just give you a little glimpse of how it's asked in the ICI papers. Let's take one paper here, and I'll show you it's an older paper, but still you'll get an idea of how it's asked. Here, guys. Everyone, this is a May 19 paper. I'll just zoom in. And this first question earlier, right now, the first question is for how many marks? 15. Earlier, it used to be 14 marks. And in that, a small part used to be house property. Let's do the small part just because I've opened this paper. Please read this part. He owns what? At New Delhi, which is let out on which date? 1st July 2018 at a monthly rent of how much? 46. So basically started renting only from July. So everyone on the calculator, not for April, not for May, not for June. So 46,000 into 9. 4 lakh 14,000. This is my GAV. They have not given any municipal value, fair and standard rent. So this is my GAV. He paid municipal tax of 27,000 and how much, guys? 25,000. So how many municipal taxes is paid? 2. Guys, for the financial year 2017-18 and for the financial year 18-19. Can you pay for 2 years? Yes, but depends when you pay. One is paid on 31st March 2019 and one is paid in April. Now the year, guys, is the year 1819. What is the previous year? What is the assessment year, guys? Assessment year 1920. So previous year is what, guys? 18. In this previous year, what did you pay? 27 or 25? 27. Guys, this 25 you paid next year. So you'll get the reduction, but next year. So right now, how much reduction will I get? Only 27. Yes. So please take 4 lakh 14 minus 27,000. 3 lakh 87,000. Guys, from that, give me 30%, guys. 1 lakh 16,000. 100, yes. And guys, read any interest. No, I'm looking at you because you'll give a wrong number and 30%. Yes, okay. Okay, anyways, guys, any interest calculations here? No. So it's not that every time there'll be interest. What is the final number, guys? 2 lakh 70,900. All right. I'm just checking the number also. I'll just show you the answer here, guys. This is income from house property 2,70,900. Are we okay? So not always an independent question. Sometimes a small question from a big part will be asked here. So this is May 19th. Now, while we have looked at introduction chapter, some rates of tax, some house property, now I want to move to the next chapter. So let's see what we can do in chapter number 4. And let's see which chapter can we pick up as chapter number 4. You guys pick, guys. Which chapter should we pick? Should we do residential status and scope of income? Yes. Which one? Set off and carry. Yeah, we can do set off and carry forward also. Yes. It's a small chapter actually. It'll be interesting. We'll finish it. We have no order because honestly, I feel you guys have touched upon chapters. Yes. So there is some familiarity. Although sometimes when I ask you a question, doesn't look like there is any familiarity. But I'm hoping there is familiarity and you're just hesitating to answer. So we'll take up the next chapter. It's called set off and carry forward. Yes. Set off and carry forward of loss. All right. Yes, everyone okay? Can we start this chapter? It should take us maximum half an hour to understand all the concepts and then we'll do sums on it. And it's a good chapter because I have a feeling that in Jan 25 paper, like most papers, guys, except two papers, I think Jan 21 paper after COVID and one December or November 23 paper, just two papers didn't have this sum. Otherwise, every year, set off and carry forward is a sum in the exam. Yes. So let's do this chapter really well, and that will also cover our fourth chapter. And also, that will probably be the last chapter that we do today. And then we'll again continue tomorrow. Yes. So I'm just saving this sheet.
So for the question we did,
Yes.
we have taken for the whole 12 months and then less the vacancy loss.
In this one, no. So vacancy loss is when I have the property for 12 months. Example, I am tweaking a property only on July and renting it out. Then you start with July.
They have given the fair value.
No, then they would have told you. See, I'll give you two scenarios. I have a shop for the whole year, but I've rented it for 9 months. Then 3 months is vacancy. You start at 12 months, give vacancy loss. But what if I buy the shop only and rent it out on 1st July? Then what will be the calculation? 9 months. And had they given you AR, ER, municipal, that will also be for 9 months. Because then the entire calculation is only for 9 months because you purchase the property and rent it out for 9 months. Yes. All right. So this is fast track of chapters. Just listing them down so we have a stock of what we're doing. All right. Looking at the next chapter, guys, everyone, nothing to write as of now. So sit back. Let's understand a new chapter. Set off and carry forward. Just want to take stock. How many of you guys are okay at this chapter? How many of you guys know this chapter? Have done this before? Yes, all of you all. Yes. How many of you all have done it with my shortcut? Anyone has done it with my shortcut? Yes, a couple of you all have done it with my shortcut. The others I'll teach you my shortcut. No problem. All right, everyone. We are now looking at a new chapter. Take stock of it. We are starting off right now. It's about 6:45. Should take about half an hour. Very simple chapter. Very easy to do and very practical in the exam. Yes. Now, guys, what is this chapter all about? I have a business which gave me a profit of 100, but I have another business which gave me a loss of 40. Can I set it off? Yes. When I minus it, this is called what, guys? Set off. What is this called? Set off. And if I can't do this example, my loss is not 40, my loss is 140. Then what can I minus? 100. And what about the 40? I'll carry it forward and next year I will minus it, and that's called carry forward and set off. So if you do it in this year, set off. If you carry forward it, it will call carry forward and set off. And guys, while all other chapters we focus on incomes, this is the only chapter where you'll focus on what, guys? Loss. So every time you look at numbers, if it's a profit, ignore it. If it's a loss, focus on that. Yes. Now my chapter works on the example of requiring blood, guys. What do you require? Blood. It's a very random example, but it will work well. That means, guys, you are injured and you require blood. And when you require blood, guys, the first person you go to is family. Guys, who is the first person you go to? Family. You ask your parents, brother, sister that listen, yeah, blood group matches, so blood. Next, if your family doesn't give you blood, of course, doesn't mean can't give you blood for some reason. Then you will go to your neighbors. Whom will you go to, guys? Neighbors. And you have four neighbors. How many neighbors do you have, guys? Four. And last, guys, if their neighbors also are not able to give you, then step number three, you will come back to whom, guys? Family. So family, neighbors, and family. What is this? It'll all fall in place, guys. Just give yourself 10-15 minutes and you'll understand what I'm talking about. All right. Now, guys, same way, like how we go 3 steps here. We have 3 steps when we set off any losses. But for that, I want you to tell me what are the 5 heads of income. So let's take the surgeon's example again, and let's assume he has all the heads of income open. So which is the first head of income, guys? Salary. All right. The next head of income is house property, which we've just discussed. The next one is PGBP. The next one is capital gain, and the next one is IFOs. Guys, salary is when you have a job. House property we just did. PGBP, guys, I want to talk about. There are 3 types of business. How many types of businesses, guys? 3. Like Yeshas Academy, normal business, yes. UD, normal business, yes. Any Zomato, Swiggy, normal business. But there is one business called speculative business. Which business? Speculative basically means you're buying a share at 9:30, selling it at 10. Immediately, without taking delivery. That's called intraday. What is it called, guys? Those kind of businesses are called speculative business. Which business, guys? Speculative. And then there is one which is called specified business, where you start a hospital, you help the economy, you help the society and all that. So there are 3 kinds of businesses. One is called non-speculative business. Of course, I call it normal business, but it's technically called non-speculative business. One is called speculative business, which is a gambling kind of thing, and one is called specified business, which is actually good for the society. Example, guys, you start a hospital, you start infrastructure facilities and all that. Yes. Capital gain is simple. You can have buy gold. I can buy gold today. After 1 month, I can sell gold. I'll make a short term capital gain. If I buy gold today and I sell it after 5 years, it will be a long term capital gain. That we'll see more in capital gain chapter, but this is how it works. And in IFOS, guys, there are many incomes like dividend income, interest income, casual income. Guys, what is casual income? Winning a lottery, betting, gambling, Dream 11, Dream 12, Dream 13, whatever you're dreaming, all that will come under IFOS casual income. Now, before you go to casual income, I want to tell you something. Let's say you go to Goa casino and you enter the casino, pay 10,000 rupees to enter the casino. They give you some chips, you bet on the chips, and you make 1 lakh. How much did you make? 1 lakh. How much did you spend? 10,000. So your net income is 90. But the government says it doesn't work like this. In casual income, if you have got lucky on 1 lakh, the government also wants to get lucky on 1 lakh. That's a slogan, that's a shortcut. If you get lucky, the government also wants to get lucky on the full amount. Can you minus anything? No. I bought a lottery ticket for 5,000 rupees and I won a lottery of 50,000. The government will tax me on 50. I bought a lottery ticket of 5,000. I didn't win anything. That is called casual loss. What is it called, guys? Casual loss. The government says, who are you? I don't know you. If you win money, they know you. If you lose money, don't. Same Goa casino. You bought chips of 20,000. You entered the casino. You put 20,000 on one table only. You lost all of it. Guys, who is with you around you? No one. Government abandons you when you have a loss. But when you have a profit, they are with you. Are we okay? So for casual income, guys, if you get lucky, the government gets lucky. And if you don't get lucky, you're alone only, guys. No one's with you. Yes. All right. And in IFOS, guys, there's a very peculiar income. You're not betting on horses. You're not betting on horses. You're owning them and maintaining them. What are you doing? Owning and maintaining. Example, guys, if I am very rich and if I want to buy a horse, I can. Race horses are very expensive. They go in lakhs, some even in crores. You buy a race horse, you take care of them. You have a trainer, you have someone dietitian. More than us, guys, they eat more expensive food than humans also, and they run in the race. If they win, the owner gets big money. If they lose, the owner doesn't. But that is a business. What is that called, guys? It's a business. But any amount you win from that will be taxed in IFOS as an exception. I call it owning and maintaining race horses. Repeat, owning and maintaining race horses. For me, the shortcut is OM horses. Which horse? OM horse. Guys, if you make 50 lakh from OM horses, where will it go? IFRS. And what if I have an expense of 10 lakh? Can I minus it? Yes. In OM horse you can minus. Not in betting and all, but OM horse you can minus. Guys, all of you bet on a horse. Is that casual income? Yes. But I don't bet on a horse. I own and maintain this horse. Is that casual income? No. But both the income will go under IFRS. Are we okay with this? Now let's start. Guys, salaries, can it ever have a loss? No. So will it ever require any setting off, etc.? No. There can be a profit there, but there can never be a loss. Guys, as a CA, your salary is 12 lakh. As a CA, your salary is 7, 8, 10 lakh, 12 lakh. But can it happen as a CA, you are paying your boss? No. So salary can never lead to what, guys? Loss. House property. We just did house property, guys. SOP and LOP. Can there be a loss? Let's take SOP loss of 80,000. How much is the SOP loss? And LOP profit of 1 lakh, guys. Please tell me, is there any blood requirement? Oh, by the way, blood requirement means loss. Yes. Is there any blood requirement in the family? Yes. And is there blood within the family, guys? Yes. So can you set it off? This is what I call within the family. What I call, guys, within the family. How much will I set off? So what is the net amount, guys? 20,000. Are we okay? Guys, for some reason, LOP is also a loss. Now tell me, guys, is there blood requirement? Yes. But is there blood within the family? No. So ultimately, what will happen, guys? 1 lakh 80. Now, sir, what will happen to this? We'll go to neighbors, but right now it's only family. One step at a time. Yes. All right. So house property discussed. Now PGB. What kind of businesses? Normal business, speculative business, and specified business. Normal business loss 2 lakh. Speculative business profit 5 lakh. Is there blood requirement? Yes. Is there blood within the family? Yes. So can I set it off? Yes. Next. Is there blood requirement? Yes. And is there blood within the family? Can I set it off? Yes. Simple. Now I'm changing the dynamics, guys. Normal business, you had a profit of 2 lakh. How much? And speculative business, you had a loss of 1 lakh. Now stop. Is there blood requirement? Yes. Is there blood within the family? Yes. You want to go there, but the government stops you that listen here, you're a very unique business. You're a very unique business, and this blood group is also very unique. I'm putting a star mark. That means this cannot go to 2 lakh. So, sir, how will this 1 lakh be set off? I'll tell you guys. Did you buy some shares and made a loss of how many lakh? Tomorrow is a new day. You might make a profit of 1.5. So that 1.5, can it be set off? Yes. Are we okay? Next. Guys, here there's a loss of 1,80,000. How much? 1,80,000. Is there blood requirement? Yes. Is there blood within the family? Again, I want to go and set it off, but the government says no, you can't. Because specified business, you are also a very unique business. So you are also what blood group, guys? Unique blood. So, sir, how will this be set off? Tomorrow, guys, I will start another specified business. Or this specified business only will give me a profit of 2 lakh. Can I set it off? Yes. So please tell me, guys, how many unique blood groups? One is called speculation business, one is called specified business. Guys, I am giving you a number. You tell me, is this unique blood? 2 lakh loss. Is this unique blood? Yes. 3 lakh loss. Is this unique blood? Yes. But 2 lakh profit? No. Profit is not unique blood. Unique blood only when there is a loss. Everyone, unique blood only when there is a loss. Alright, so PGBP over. Within the family, we've discussed capital gain. Guys, capital gain can be either short term or it can be long term. Can it be a short term capital loss of 2 lakh? Yes, and a long term capital gain of 5 lakh. That means in the short term you had a loss, long term you had a gain. Is there blood requirement? Yes. Is there blood within the family? Can I set it off? Yes, happily. But I'm changing the numbers, guys. Here 5 lakh, here 2 lakh loss. Now tell me, guys, do you have blood requirement? Do you have blood within the family? Yes. You want to set off, but the government says, listen here, you also are the third unique blood group. Unique basically means individually also they are very unique. So here, guys, I'm putting a star again. So this 2 lakh, can it be set off against 5 lakh? No. How many unique? 3. Speculative, specified, and long-term capital loss. Only when there is a loss it is unique. Are we okay with this? Now, sir, how will you set this off? Guys, tomorrow again, can you have a long-term capital gain? That is 3 lakh. Can I set it off? Yes. Till that time, you have to wait. Everyone. Don't worry, it'll all fall in place when you first understand the concept, then we'll do the sums. And in IFOS, no, technically you don't have deductions. Sorry, technically you don't have loss. Guys, interest either will be a positive number. Next, dividend also will be a positive number, or as a student will be zero, but it will not be a loss. Casual income will be a positive number, but what if you have casual loss? You have to ignore it. Yes. The only loss item here, guys, is OM horses, owning and maintaining race horses. Guys, owning and maintaining race horses. Let's put 1 lakh, 2 lakh, 3 lakh. Guys, casual income is how much? 3 lakh. No one can touch it, guys, because if you get lucky, government wants to get lucky. So 3 lakh is already in a box, no one can touch it. OM horses has a loss of 60,000. Guys, is there blood required? Yes. And is there blood within the family? I'm going to go there, but the government again stops me because you are the fourth unique blood group. Are we okay, everyone? So while you're setting off within the family, can family members help you? Yes. Except four people, no one can help. Speculative business, specified business, long term, and OMOs. Only when there is a loss. When there's a profit, they're happy. But when there's a loss, there is a unique. This is called step number 1. And are you going within the family? So it is called intra-head adjustment. What is it called, guys? Intra-head adjustment. Everyone. Okay. All right. Next step, very simple. You tried taking help from your family. Maybe it's helped, maybe it's not helped. So now you are reaching out to your neighbors for help for blood requirement, guys. Everyone. Again, how many heads? 5. First one. Next, house property. Next, PGBP. Next, capital gain. And next, IFOs. Guys, will salaries ever have a loss? No. So will they ever ask neighbors for blood? No. They will never. So salaries is never a problem, guys. Next, house property. Guys, SOP, LOP. SOP loss of 80,000, LOP loss of 1 lakh. Please tell me, is there blood requirement? Yes. And is there blood within the family? First, always check within the family, not there. So total it up. How much? 1,80,000. Now, guys, they are now planning to go to the neighbors, guys. Everyone has 4 neighbors. Everyone has 4. Guys, who are the neighbors? Salary, PGBP, capital gain, and IFOs. All of them have an income of 10 lakhs. Now tell me, guys, do they want 1,80,000 to be set off? Where can they go to? They can go to any head because they are friendly. They are what, guys? They are a very friendly family. They can go to any person, but they are shy. They can only go up to 2 lakhs. The shortcut is friendly but shy. Everyone, friendly. Guys, repeating, that means 1,80,000. Can I minus from here or here or here or here, but nothing against casual. Casual income, no one can touch. Are we okay? So let's take one of them, guys. Can I minus 1.8 from here? This will become what, guys? Z. Changing the number, guys. What if this loss by chance is 2,80,000? Now, guys, can I set it off? Yes, but they are friendly, but they are shy. They can only go up to 2 lakh. 2 lakh per head? No, 2 lakh aggregate. That means, guys, if I take 2 lakh from here, can I take 80,000 from here? No. In 1 year, you can only take up to 2 lakh. So, everyone, this is called friendly but shy. But, sir, only if you take 2 lakh, what about that 80,000? We have step number 3, no? We have step number 3. And, guys, set off and carry forward is very simple. They say someone got a cake to your house. You will try and eat it. If you can't eat it, where will you keep? Fridge. And can you have it next day? Yes. All right, everyone. So this one is called friendly but shy. Up to how many lakhs, guys? 2 lakhs. All right. Next, guys, PGB. Everyone, which kind of property? Business, normal business, speculative business, specified business. 1 lakh loss, 2 lakh loss, 3 lakh loss. That's full loss, king of loss. Now, guys, within the family, is there anyone to help you? No. So, can you go outside? Let's see, guys. First, let's talk to normal business, guys. What is the loss? 1 lakh. Are they trying to go within the family first? Yes. But is there anyone in the family to help? No. So, they have how many neighbors now? 4. Everyone has how many neighbors, guys? 4. But guys, they had some reason they had a fight with salaries. Yes, over some parking issue, some other issue, guys. So they don't talk to whom, guys? So they can only go to whom? House property, or they can go to capital gain, or they can go to IFOs, but not to casual income. So this 1 lakh, guys, I'm writing 10 lakh here, 10 lakh here, 10 lakh here. Guys, can they go here also? Or here, because they are semi-friendly. What are they, guys? They cannot go to whom, guys? Salary. Everyone okay with this? Yes. This is which loss? Normal business. Whereas speculation business, and they also have a loss, but they are what kind of blood group? Unique. Guys, you are so unique that your family can't help you. So outsiders definitely will not be able to help. Yes. Are we okay with this, guys? Yes. So this is unique blood, and again, guys, friendly but shy, and this is semi-friendly. Now capital gain. Guys, what kind of two losses do we have? Short-term capital loss, long-term capital loss. Let's take two simple numbers. This is 1 lakh loss and this is 2 lakh loss. And this loss is also called unique loss. Everyone okay? Now please tell me, are they trying to get help within the family? Yes. But is there anyone to help within the family? No. So can they go outside? Yes. How many neighbors? 4. They're almost about to go outside when someone reminds me that listen here, you are the snob family. You are the non-friendly family. Which family, guys? Non-friendly. You don't talk to any neighbors. When the neighbors even cross you, you look other side. You don't talk to any one of them. So please tell me, 1 lakh, can it go outside? No. 2 lakh anyways could not go outside because of unique lakh. So everyone, any capital loss, how will it be set off, sir? Don't worry. Tomorrow, when you sell gold again, tomorrow when you sell your house again, will you have a profit? That time you set off, otherwise no other house will set you. Are we okay with this? Yes. So everyone, please tell house property, friendly but shy. PGBP, semi-friendly, and capital gain is not. Are we okay with this? Yes. And last is which one, guys? IFOS never has any losses except OM horses, which is anyways unique. Guys, unique blood means you can never go outside. Yes. That's your step number 2. This is called interhead. What is it called, guys? The earlier one, inter. This is inter. Yes. Can we repeat the next one? Step number 1 was okay. Do you remember the 4 unique blood groups? Yes. Step number 2, just tell me the friendly. Friendly but shy. Which one? House brown. Next one, semi-friendly. They don't talk to salary. And anything which comes out of PGBP will never talk to salaries, like depreciation, etc. I'll teach you here. But nothing which comes out from PGBP ever talks to salaries. And capital loss, non-friendly. That means they don't go outside at all. Are we okay with this? Yes. And any of the unique bloods, if they can't go to family, they can't even go outside. They can't do have any inter-head adjustment. Are we okay? Step number 3 is the easiest. If you can't eat the cake today, simple. Open the fridge, put it, and have it tomorrow. Tomorrow also you could not. Day after. After that also, yes, you can consume it for a few days, but not for long, not forever. Yes. Same way, guys. Here also, this is step number 3. Everyone, very simply, how many heads? 5. Salary, can it ever have a loss? No. So you'll not require set off also. You'll not carry it forward also. House property. First, you'll go within the family. If not, you'll go outside up to 2 lakhs. Still 80,000 is remaining, guys. So what do? You carry it forward, everyone, for the next 8 years. How many years? Guys, 8 years means not this year. If your year is 23, 24, don't include that year. So after this, how many years, guys? 8 years. And what if you're in the 9th year and still it is not set off? Then it will lapse. What is the word? Lapse. Just like a medicine which has reached expiry. If you're not well and you tell your sibling, guys, I'm not well, give me that crocin, and the crocin has expired 6 years back. Nice. Will your sibling give it to you? Maybe. Yeah. But will you have it? No. Same way here also, guys. After 8 years, what is the word? Lapse. Everyone okay with this? Next. This is PGBP. Guys, which business? Normal business can be carried forward for how many years? 8 years. Next one is speculation business. Guys, speculation has an element of gambling. Do you agree?
Yes.
So the government says, I don't want this to be carried forward for 8 years. This will only be carried forward for 4 years. Generally, 8. Guys, what is the general number? 8. One of them is 4 years because it has an element of what, guys? Gambling. Next, Specified business. Guys, did you start a hospital? Guys, remember specified business? Guys, different businesses which are good for the country. So the government with tears, happy tears in their eyes, they said, listen, you started a hospital, you're helping humanity, and you have a loss. Don't worry, not 8 years, not 4 years, we'll make you immortal. We'll make you immortal. That means, guys, what if it's ninth year? Can you still set it off? Yes. What if it's a 10th year? Still. So the word is indefinitely, guys. What is the word, guys? Indefinitely. I'm giving you the logic also. Why indefinitely? Because there's something good happening to the society and hence you can carry it forward indefinitely. Are we okay with this, guys? Yes. But while you can carry forward these losses indefinitely, what kind of blood group, guys? You need. Yes. So only with their whole blood group you can set it off. Yes. Guys, while all this is theory, it is a practical question. When you see the question, you get the answer very easily. Next one. Capital gain. Long-term capital loss, short-term capital loss. Guys, did you try within the family? Yes. Did you go outside? No. Why not? Non-friendly. So the only option now is you can carry it forward for how many years again, guys? 8 years. So general is 8 years. Element of gambling, 4 years. Good for the economy, indefinitely. And here, guys, in IFOs, what is the only one? OM horses, guys. Again, this horses is doesn't have an element of gambling again. Yes, so you guess how many years, guys? 4 years. Because it has an element of gambling. So how many 4 years? Two. Speculative and MM horses. How many indefinitely right now? One. And others are always how many years, guys? 8 years. Guys, if I tell you the year 8 years, I have a loss from previous year 12, 13. Is it alive today or is it lapsed? How will you check? I'll tell you simple, guys. Go to the previous year, add 8, add 8. 12 becomes 20 and 13 becomes 21. This was the last previous year. So has it lapsed? Yes. Simple, guys. Go to that year and add how many years, guys? 8 years. Don't calculate like this and all is in the exam. Just add 8 and you'll get your answer. All okay, everyone? Everyone. All right. Guys, what if this was 14, 15, sorry, 15, 16? 8, 8. How much is this? 23. This is 24. So is this the last year? Yes. If you can't set it off this year, lapse. Not gone and all, guys. Lapse. Gone, no. What's the word, guys? Lapse. All right. So this is the chapter. But now, guys, some additional points you need to understand. There are 3 steps. Let's recap. First, within the family. Do you remember the 4 unique blood groups? Yes. Then go outside. How many neighbors? 4. Friendly but shy. Semi-friendly. Non-friendly. And guys, you can carry it forward for how many years? 8 years. Generally 4 years sometimes. Indefinitely also sometimes. Guys, something very unique is happening here, which I call as quarantine. What I call, guys? Quarantine. Yes. If you remember COVID, guys, yeah, long back, in COVID, besides playing Ludo and besides watching lectures on Zoom, one more thing we learned was a stamp which people used to put, which was called which stamp, guys? Quarantine stamp, whereby if you have that stamp, you cannot go outside. You have to hang around at home, watch more Ludo, play more Ludo, watch more Zoom lectures. But this is called which stamp, guys? Quarantine stamp. Yes, everyone. Now I'll explain why I'm using this word quarantine stamp. Watch very carefully. I have a loss from house property. This is the year 23-24. What is the year, guys? 23-24. My house property loss is 2,80,000. Guys, I've tried taking help within the family, not worked. Can I go outside? Yes, I am friendly but shy. So I can go to any head. So salary is 10 lakhs. Guys, how much can I take from salary? 2 lakhs. So guys, finally, how much house property loss still remains? So 2 lakh, even if I minus, it still remains a loss of how much? 80. Now what do I do with this, guys? Yes, so I'll put it in the fridge. I'll carry forward to which year? Next year. Now guys, this is this year. Now take it to the next year. Next year is which year? 24-25. Which is this? House property. How much is the loss? But is it this year's loss? No, it is carried forward. What is the word, guys? Carried forward. Now here, guys, there is no profit within the family. But in salaries, again, there is 10 lakhs. Everyone. What is the loss in house property? 80,000. Is it being carried forward? Is it this year's loss or last year's? And there is a salary income of how much? 10 lakhs. And as a family, you are friendly but shy. And you're almost going to set it off when the government says, listen, yeah, anyone who is carry forward gets a quarantine stamp. Which stamp? That means you cannot go outside the family. You want to set up, be within the family. So, guys, can I take it here? No. But what if in my house property only I have 1 lakh? Then you can stay within the family, but you can't go outside. This quarantine stamp is only for those losses which are carried forward. I'm giving you another example, guys. How much is the carried forward loss? 80,000. How much is the carried forward loss? 80,000. Let's say this year I have a fresh loss of 90,000. Now tell me which is carried forward? 80. So that can't go out. 90. So 90 can I minus from here, guys? Yes, happily. So please tell me, guys, quarantine stamp only applies to those losses that are carried forward. Are we okay with this, guys? So that is one concept. In all, not just house, even if normal business is carried forward, it can only remain within which room? PGB. Are we okay with this, guys? Everyone. This stamp is called which stamp? Quarantine. So I'll show you how to present this also. Don't worry about it. When we solve question, you'll understand. But right now, mentally, if there is any loss which is carried forward, you have to stay within the family. Everyone, changing this. This is a normal business. Which business? Normal business. I have a loss of 80,000 carried forward. And I have capital gain of 10 lakh. Everyone. Business is what kind of family? Semi-friendly. Can I go to capital gain? Yes. But here can I go? Excellent, guys. Why? Carry forward. So what kind of stamp? Quarantine. Are we getting the point, right? Yes. So this is one point that you learned, which is quarantine stamp. On some simple points I'll teach you now. One, you already know, casual loss. As if you have a casual loss, what do you do? Ignore. Example, on Diwali, I bet on some card game, I lost 10,000. What to do? Ignore. I won 1 lakh. Never ignore. Who's with you? Government. Next. Any activity which is exempt. Guys, any activity which is exempt. Can you give me one very famous exempt activity? Agriculture. Guys, what is it? You had agriculture income of 10 lakh rupees. Will the government ever touch this? No, because this is exempt. I want more answers there. This is exempt. Now, guys, 1 year I had 10 lakh profit. Did the government touch it? No. Next year, no rainfall. I had a loss of 8 lakh. So I told the government, please set it off. No. The government says, listen, let's be fair. When you had an income, I will not touch it. When you have a loss, I will not touch it. Yes, so please, everyone, any exempt activity, everyone repeat, any exempt activity, you will ignore the income also, you will ignore the loss also. Are we okay with two additional ones? Next. I have a business, guys, where I am trading, or not I'm trading, I'm selling pens, guys. What am I selling? Pens. For some reason, guys, there's a loss of 10 lakh. How much is the loss? And I did not see too much scope in this business, so it has a loss of 10 lakh, but I discontinued. So what did I do? Discontinue. Everyone selling pens, I have a loss of. Is that business discontinued? Next year, guys, I started another of selling mobile phones. What am I selling now? Mobile, and I have a profit of 12 lakh. Can I set off this against this? Answer the question, guys. Is it the same person? Yes. So the government says if it's the same person, that discontinued business is like any other business. Can you minus it? Yes. So 10 lakh, can I minus from this one, guys? Yes. But I can carry forward only for how many years? 8 years. Everyone. So please repeat, discontinued business is like any other business. Can we repeat? Discontinued business is like any other business. Now something very different, guys, is here on the screen. My profit is 100, guys. How much is my profit? 100. Everyone. How much is my profit? My depreciation is 20. Can I minus it? What is my balance? 80. But guys, my depreciation for some reason is 130. Then how much can I minus? Only 100. And whatever the 30 is a balance will be carried forward. But now it's not called debt. It has changed its name. It's called unabsorbed debt. Guys, what is it called? Unabsorbed debt. If in this year you minus, I'm called debt. If you taken me ahead, I'll call you unabsorbed debt. Yes. So this is called unabsorbed depreciation. Everyone, focus again, guys. Debt, unabsorbed debt. Debt is in this year. If I carry it forward, unabsorbed debt. Now, guys, unabsorbed debt is 2 minutes. Pay extra attention. Now, guys, this is which room? PGBP rule. And I have an unabsorbed debt of how much, guys? 30. Everyone. How much is my unabsorbed debt? 30. Guys, is it coming from earlier years? So what stamp should I get? Quarantine stamp. The government said, listen, yeah, unabsorbed debt, I'm giving you two superpowers. How many superpowers? Two. Everyone, the shortcut is IQ. What is the shortcut? IQ. Repeating, guys. For some people who missed it, everyone. If I minus it this year, debt. If I can't minus it this year, unabsorbed debt. Example, how much rupees? 30. 30 lakh, 30,000, whatever. And they have two superpowers called I. Guys, generally, PGBP loss can be carried forward for how many years? 8 years. Generally, for how many years? But this one can be carried forward indefinitely. One superpower. Just like which other business? Specified business. So, guys, can I carry it for 9 years also? 10 years also? How many years? Indefinite. And guys, whenever I take any loss ahead to the next year, carry forward, I get which stamp? But unabsorbed depreciation will not get which stamp, guys? Quarantine stamp. Are we okay with this? So I'm asking you a question. You tell me, guys. This is PGBP. I have an unabsorbed depreciation of 30. How much? 30. I have a capital gain of 100. Can I take this outside? 1 minute, 1 minute. Can I take it? But sir, it is carried forward. No? But still, it will not get which stamp? Quarantine stamp. So can I minus it here? Yes. I can take it to any head except salaries. Why not salaries, guys? Because this is coming out from which room? PG. Yes, everyone repeating UAD, full form. Unabsorbed depreciation. Can you minus it? Yes. In fact, there are two superpowers. It can be carried forward indefinitely and it will not get any quarantine stamp. Everyone, everyone, everyone. Okay, all right. So here we go. We have learned some interesting points here. Casual loss, exempt activity we learned, discontinued business we learned, and we also learned UAD. Now only one additional point remaining, guys, and then it's done. Guys, it's 7:22 right now. About 8:15ish we'll finish the lecture, 8 o'clock, 8:15, whatever time. You go home very hungry, guys. And guys, you see three things in the fridge. One is a pizza. Guys, what is the first thing? Pizza. It's written, guys, that will expire today. It's yesterday's pizza. One are some chocolates or some ice cream which they say they expire in 1 week. How much? 1 week. And then there is some milk, guys, which will never expire. Now, guys, what is the first thing? Of course, not basis what you like, but basis the expiry. What is the first thing you'll consume, guys? Pizza. Because otherwise it will expire when, guys? Today. What is the next thing you'll consume? Chocolates. And what is the third thing you'll consume, guys? Milk. So basically, you consume them in the order of expiry. In the order of expiry. Same thing happens in PGBP, guys. Watch. I have a profit of 5 lakh rupees. How much is my profit? 5 lakh. I have some current year depreciation of 2 lakhs. How much is my current year depreciation? 2 lakhs. I had some carried forward business loss. Guys, which loss is this? Business loss of 6 lakh. And I have some unabsorbed depreciation of 7 lakh. Every Guys, please tell me the three losses. First, current year debt. How many lakhs? 2 lakhs. Next, carried forward business loss. How many lakhs? 6 lakhs. And something which does not expire. UAD 7 lakh. But how much profit do I have? 5. So guys, had I got 25 lakhs here, then I would not even ask you, can I minus all three? Yes. But because I have only 5 lakh profit, what is the order I will set off? First, current year. First, which one, guys? Current year. How much is that? 2 lakh. What is the balance? 3. So is this over? Yes. Now against the 3 lakh, I will set off 6 or 7. 6. So from 6, I can take how much, guys? 3. So this how much remains? And what is this? 7. These both will be carried forward. So everyone, this is the called order of setup. What is it called? Order of setup. First, current year. Next, whichever has an expiry. And last, whichever does not have expiry. Guys, what if I have two business losses being carried forward? One is in the 8th year and one is in the 2nd year. 8th year first, otherwise it will expire. And then 2nd. Are we okay? This is called what, guys? Order of setup. Everyone, order of setup. And yes, I told you last point, but there's one more small point. Yes.
The first set of carry forward loss from the entire 5 lakh, because if the carry forwarding.
Yes, I know, but they say that current year all expenses have to be minus first. That's the rule they have made, and then only set off. Because set off is a benefit, so they're saying first current year, then if possible, they will set off. But see, the government loses out now. So they made this provision so that they also get some more tax. Yes, but good, very well thought. And last point, guys, everyone, I have a new shortcut for most of you guys. It will be new. When does your previous year end? 31st March. When does your year end, guys? 31st March. Guys, after that, you have to file your return by John. By when? John. By July or October or November. Everyone, July, October or November. For some people, July. For some people, October. And for some people, November. This is called return filing due date. What is it called, guys? Return filing due date. Now, the government is making a small request. They are saying, do you have a loss? Everyone, do you have what? Loss. Example, guys, let's say a loss in your normal business of 2 lakh. How much is your loss, guys? 2 lakh. Do you want to carry it forward? Everyone, do you want to carry it forward? The government makes one request that I'll allow you to carry it forward only on one condition, that this year's return has to be filed on time. This year's return has to be filed on. If you file your return on time, can you carry forward? Yes. But if you don't file your return on time, you can't carry forward. What if you have 2 lakhs of this year and 3 lakhs of last year's being carried forward? Then this can be carried forward. Even this, only this one will not be carried. So that means the year you don't file your return, repeat, the year you don't file your return on time, that year's loss cannot be carried forward. What about the earlier years?
Yes.
What about set off? What if I have a profit of 7 lakh? Set off is okay. The problem is only for carry forward. Everyone. Okay. So this is your chapter. We'll try and do some sums if possible, because guys, concept is great, but unless you can do a sum, guys, it'll get difficult. So we'll see which sum we can pick up. But everyone okay with the concept? Yes. Actually, you'll not understand how well you know the concept till you do a sum. Yes. So I'm just putting a sum on the screen. I want 2-3 minutes break. So I'm going to put up a sum on the screen. You can read it and then we'll start discussing. Yes. Again, all the shortcuts guys haven't discussed in that quick book. You can read the quick book if you want the shortcuts. You don't need to necessarily write them. All right. Again, guys, we'll continue the same trend of ICI questions. Yes. Again, guys, we'll be solving all the questions. This is the optional scheme. That is the old scheme. When we go to the new scheme, we'll know how to solve the new scheme as well. All right. This is illustration 1. What we'll do here, we'll solve the big questions at the bottom, and then we'll go back. Very simple questions once you get the hang of it, guys. Here you go. Read the question, take 2-3 minutes. Yes, and then we'll see how to solve this. Yes, works really easily, guys. This kind of sums. I'll show you how this works. For this, guys, we need to make a small rough work. Even this rough work you will do in the exam also. I'll show you what you need to do, and we'll get the number through this rough work. And one or two sums we'll also solve in writing fair. But otherwise, we'll get to the right number very easily, guys. Here we go. Let's start. Yes. Who is this person, guys? What's his name? F, Mr. F. So, how do we do this rough work? You always have to start with this person in the middle, and by default, make 5 arrows like this. First one is salaries. Next is house property. PGBP, make a slightly bigger arrow here. So PGBP, then is capital gain, and then is IFOS. As in when you see the numbers, you put them down with the correct symbol, guys. Let's start. What is the first one? Income from house property. How much is that, guys? 1,25,000. Yes. Everyone, I'm just taking a picture so I don't have to scroll again and again. You guys have a reference of this? Okay. I'm just going to take this and I'm just going to show you all the incomes here. The first one is income from house property, which is computed. So where should I take that? House property. How much should I take? 1,25,000. and it's a profit, so I'm just putting it as a positive number. The next one is income from business before providing for what, guys? Depreciation. Yes, 1,35,000. Most of you guys are clueless. We don't have a book. Guys, please get the ICA material tomorrow. So this is 1,35,000. Where should we put it, guys? PGBP, and it's normal business. So I'm writing PGBP, normal business. In fact, why don't you do one thing, guys? Why don't you do this with everyone? In a rough paper, let's start. Yes. Everyone who's not started, guys, please start with me. Yes. So 1,35,000 is normal business. Next, short-term capital gain 56,000. So I'm writing here short-term capital gain 56,000. Just make sure the numbers are written well. No loss till now. Long-term capital loss 90,000, which is brought forward. So I'm writing long-term capital loss 90,000. You tell me the symbols, guys. Is it star mark also? Yes, and it is quarantine stamp. Next, income from which business? Tea. Now, guys, we haven't done agriculture income discussion, but if you remember tea business, guys, it has a mix of agriculture also and PGBP. Do you remember this discussion anywhere, guys? Yes. And tea business, 40% is PGBP, 60% is agriculture. Agriculture, I'm not talking about, that is exempt. So 40% is what, guys? PGBP. So take on your calculator 1,20,000 into 40%, 48,000. That's your normal business again, guys. How much is that? 48,000. Everyone okay? Yes. Next, dividend from Indian companies, guys. Where will this go? IFOS dividend 80,000. No, but it's dividend, so it's taxable. The company is doing agriculture, not you. Yes. Next, current year depreciation is how much, guys? 26. So I'm just writing here depreciation. It's current year, so I have to minus it. 26,000. And last, guys, is brought forward business loss incurred how many years ago? 6. Guys, 6 years means is it still alive? Yes. How much is that? 45. I'm just going to write normal business here. You will tell me the symbols, guys. Guys, with stamp. Excellent, guys. Don't miss out on quarantine stamp. Now that you've downloaded all the information, guys, let's do step 1, step 2, step 3. But we'll go slow for the first sum. Everyone, on the screen, you will contribute and you will also write the same in your book as well. Salary, nothing. Focus on the loss, guys. Focus on what? Loss. House property. Any loss? No. PGBP, guys. Any losses? Yes. So can you take on your calculator 1,35,000 plus 48 minus 26 minus 45? 1,12,000. Next, in capital gain, guys, do you see a loss? But it's what kind of loss? Unique blood. So can I set it off against 56? No, unfortunately not. And in IFOS, do you see any loss? If you don't see any loss, no, guys, just move ahead. Step number 2. Let's go outside. Salary can't go, not going outside. House property not going outside. 1,12,000 not going outside. 90,000. Why not? Many reasons, guys. Many reasons. First, unique blood. Second, quarantine stamp. Third, non-friendly. Do you remember, guys? So it will not go outside. Now, step number 3, you have to carry forward the losses. And if you see a positive number, you'll have to pay tax. Everyone. So on 1,25,000, guys, this is your income. Everyone, put it in a box. This 1,12,000 is also income. Put it in a box. This 56,000 is also income. Put it in a box. What about this 90,000? Will be carried forward. And what about this 80,000? Box. Only negative numbers to be carried forward. Positive numbers, you have to pay tax on it. Can we add up, guys? 1,25,000 plus 1,12,000 plus 56 plus 80. 3,73,000. And how many carry forwards, guys? 1. Yes. Guys, what if there were 2, 3 carry forwards? Can you add them? No. Because some can carry forward for how many years? 8, some for 4 years. So you don't have to carry. Guys, this is a rough book. Now this has to be converted into fair. Yes, I'll teach you how to convert it so that you get an idea. We'll do one sum today and maybe one sum tomorrow on writing it fully. Otherwise, all the sum we'll do rough. Yes, let's start. Immediately below this, you will write. And this, the next part which you're writing, you'll get marks for the next part. Yes, you don't get marks for this part. This is rough form. But this will help you to do the fair very easily. Computation, P1, computation of gross total income, GTI, computation of GTI of Mr. F, computation of GTI of Mr. F for PY 23-24, AY 24-25. Particulars, amount. By the way, this is question number 1 of the ICA material. Now guys, please have a look at the screen. Tell me how many boxes do you see? 4. 1, 2, 3 and 4. The income boxes, I mean. And all those numbers will have to go in the outer column. So whatever you write, make sure you're presenting in a manner that the boxes will go in the outer column. Let's start. What is the first income? House property. So under particulars, you'll write first bullet point, IFHP, open bracket, computed. Computed means final number. Yes. After everything, final number. Computed. And which column? Outer column. 1,25,000. Next bullet point, PGBP. Underline, semicolon. There is nothing called normal business, so you'll write non-speculative business. Exactly how this is here, you have to present it like this only. Non-speculative business. In the inner column, how much will you write? 1,35,000. Next you write T business. T business. Open bracket. 1,20,000 into 40%. Close bracket. In the inner column, 48,000. Next line, less. Current year depreciation. You will minus 26,000. And last, brought forward business loss. Brought forward business loss. And you'll minus 45,000. Minus means you show it in bracket. You'll underline it and outer column. Yes. Outer column 1,12,000. Just by the way, guys, all the boxes go in which column? Outer column. And whatever is carried forward, if there are 3 carried forward, there will be 3 working notes. How many carried forward here? 1. So there will be 1 working note by default. Yes. Next bullet point, which head of income is? Capital gain. In that, capital gain, underline semicolon, short-term capital gain. Straight in the outer column, 56,000. And next line, long-term capital loss, working note 1. So you will not write any number, you'll just write working note 1. And last, which is the next bullet point, IFOS, underline semicolon, dividend, which column? Outer column, 80,000. Don't do any fresh calculation there. You already done the calculation. Therefore, total income. Therefore, total income, actually gross total income. Again, outer column, 3,73,000. We'll close that table there. And we'll write a working note, guys. The working note is what I was taught when I was doing CA Inter, guys. I was taught like this. That, guys, can you see which loss is carried forward? Yes. So I was taught like this, and of course, if you understand, you can also learn like that. That long-term capital loss cannot be set off against short-term capital gain. Yes. But it sounds confusing. Yes. I'll confuse you a little more also. Long-term capital loss cannot be set off against short-term capital gain, but short-term capital loss can be set off against long-term capital gain. Yes. This is great. I was made to by heart it, but somewhere I forgot it. So I made the shortcut of unique blood when I was teaching. So this works better. So how many unique bloods, guys? 4. This is one of them. Yes. So please write working note 1. Of course, we can't write unique blood, so I'll show you how to present it. Working note 1. Long-term capital loss. Long-term capital loss. Rupees 90,000. Long-term capital loss. Rupees 90,000. Cannot be set off against short-term capital gain. Cannot be set off against short-term capital gain or any other head of income. Or any other head of income. Yes, people online as well. I hope you guys are also writing. Yes, for any references. Dhanush, your question about that. We're solving all the questions as per the old scheme right now. When we discuss the new scheme, then I'll tell you how to transition to the new scheme as well very easily. All right, everyone here. Guys, some of you guys have studied new scheme also, so I'm just going to tell you in this context what is a new scheme. In the new scheme, guys, we'll talk about the slabs, rates, etc. But it's like Swiggy and Zomato. If you decide to choose the new scheme, if you decide, then what changes here? I'll tell you one major change. Guys, remember the 3 families? One was friendly but shy. Next was semi-friendly, and the last one was non-friendly. Of course, we'll discuss the new scheme in detail, but just so that if you're curious to know, I'll just tell you that that's friendly but shy, which is house property. You can go outside for how many lakh? 2 lakh. Guys, that has changed. That has also become now non-friendly. So, in the new scheme, in which scheme? New scheme. If there is a house property loss, 1,80,000, can I go outside for 2 lakh at least? No. Then how will I sell it off? Wait, no. Your house property will have a profit. Sell it off. If not this year, next year. If not next year, next year. For how many years? 8 years. Are we okay with it? Yes. All right. So this is the sum. This is the chapter. Now I want you to try the next one, guys. Mr. Sohan, in the same manner that we discussed. But first, let's see if you're all familiar with this, guys. Everyone on the screen, please. Guys, where will this go? Just tell me the head where will go. Income from salary. Salary. Loss from let out house property. House property. Income from sugar business. This is normal business, guys. What business? Normal. Loss from iron ore business. Again, which business? But is it discontinued? Doesn't matter. Guys, excellent. It's the same as any continued business. You can set off the loss. Short-term capital loss. Capital gain. Long-term capital gain. Capital gain. Is this a unique blood, guys? No. Sorry, it'll disappear automatically. All right. Dividend. IFOS. Income received from lottery. But what will I do? Box. Because guys, if you get lucky,
Government also.
winnings from card games, box. Agriculture income, short-term capital loss, and last is bank. Yes. Draw the diagram and try this out. Which one? Bandits recovery. So it's in PGBP, no? Normal business. You'll just add. Yes. Which one? No. Textile, no. Sugar, no. I know. There's this shortcut we had discussed. Super fast bike. Yeah. So, anytime. Partner share of profit is exempt and even loss will not be considered. But partner's salary is PGBP. P salary. No, it's different. Salary and share of profit is different. Salary is when you work, you get every month, and after whatever profit is, you split it. Yes, any answers for total income? 3 lakh 26. Perfect. 3 lakh 26. Yes. Anyone else getting 3 lakh 26? Good. Don't worry, we'll be solving it. So I'll just show you the answers as well. Yes, guys. Here I'm just showing you this calculation. Everyone, if you've done it, great. If you've not, if you got stuck, I'll help you out. Guys. Here. Everyone, let's start. Did you also get salary of 3 lakh? Yes. Guys, I want more contributions from all of you. Please tell me if you got this right or wrong. Salary, how much, guys? 3 lakh. From that, what did you minus? 40 house property. So what is the balance? 2 lakh 60. Now, and the salaries, guys. Can PGBB go to salaries? No. Anyone else can go to salaries? First bench, sure. Let me explain. Yes. The guy who's writing also, just check whatever you've written there. So 2 lakh 60 will go in a box. Guys, you got this right? 2 lakh 60, everyone. House property, guys, 40,000 minus 40,000. So what is the balance, guys? Zero. It has been set off. Now PGBB. Guys, what is one normal business? 50,000. And what is another normal business? 1 lakh 20. Can I sell it off? But doesn't it have a quarantine, Sam? Yes, guys, discontinued. Yes, but does it have quarantine stamp? Yes, but doesn't matter. Quarantine stamp can at least go within the family. So can I minus and get 70,000? Yes. Next, short-term capital loss, long-term capital gain, short-term capital loss. How many losses? 60 and 10. How much is that? 70. Can I minus from long-term capital gain? Yes. So what is the loss, guys? 30. And dividend, casual income, interest. No loss. So I have totaled it up there. Yes. So if you total up all these boxes, one and this, you'll get 3 lakh 26. Yes. And how many losses to be carried forward, guys? I'm happy to go into more detail if anyone has any doubts. Yes. People who didn't get it right. Got it? Okay. Yes. Where did you go wrong?
I set it off with, I didn't recognize that it was probably foreign stamp
On the 70,000. So you set it off against dividend and interest. Yeah, yeah. So quarantine stamp, if you are okay, I think that will be solving your problem. Yes.
I forgot that capital gains for concept.
Oh, you took 30,000 outside. Okay, good. So getting it right. Okay. Yes, there neighbor, there everyone, here. Okay. You also, where did you go wrong?
I took four also.
You got it finally? Yes. Got it? You get it? Okay, calculate that. Alright. So this is one more question. Of course, we'll keep doing this rough work. And then to convert into fair, guys, the moment you look at this, you can keep converting into fair. And this is one more question. Let's try and see. I don't want to stretch today's day very long. We've anyways done quite good. This we can carry forward tomorrow. We'll do one more sum. Let's time it also, guys. At least a rough work, let's time. This is the next question, guys. Question number 3. First, we'll just discuss. You tell me which head it will go, and then you can start solving this. Guys, the first one, capital gain. Next one, speculative business, PGBP. Next, capital gain. Next, capital loss. Sometimes they don't give you the brackets. You have to create the bracket. Next, PGBP, normal business. Next, IFOs. But this is a profit. Salary. Is it already computed? Yes. House property. This is a loss. And brought forward, guys, how many loss house? 2. One is OM horses. Is there a loss of 25? Yes. And one is business of textile. Yes. Guys, everyone, just let's do this one. This loss pertains to which year? Everyone, before you start, let's do this one small thing and then you can start. Guys, this is previous year which year? Yes, everyone. Previous year, 15, 16. Guys, it is allowed up to how many years? 8. So 8 and 8. Textile business, no 8 years. Yes. So 15 plus 8, 23. 16 plus 8, 24. Guys, is this allowed in the previous year, 23, 24? Yes. But if there's any loss which is carried forward from this to next year, it will lapse. Are we okay with this? Yes. Over to you all. Let's time it. It's about 7:58 right now. Let's see how much time. Ideally, about 5 minutes. You should get this in rough work at least. Yes. I know it's too early, but if there is any answer, you got yes. Total income? 2 lakh. 2 lakh. Anyone else? 3 carry forwards and 2 lakh. 1 lakh? 30. And how many carry forwards? 4 carry forwards and 2 lakh. 4 carry forwards. You are saying the lapse one you've not taken. Is one of them is lapsing, no? Among the four, just check, no? Among that, one is lapsing, I think. Yeah. Alright, anyway, I'll show you this answer here, guys. Yes. Everyone, this is the question. Check where you've gone wrong, right, etc. And we'll also total it up. Right, salaries, did you get 1 lakh minus 40,000? Yes, 60. So is this right? Yes, you get marks for steps also. House property is at 0? Yes. Speculative business will be carried forward because it's unique blood. This 50,000 and 60,000, can it be set off? Yes. And you'll get how much? 10,000. Guys, this one will lapse. So this you cannot include in carry forward because it will lapse. In fact, you have to write a note that it will lapse. Next, short term, long term, long term. Guys, can I set off my long term loss? Yes. So long term against this long term. But can I set off that 70 against 1 lakh 40? No. I'll repeat, guys. Everyone be careful here. This 1 lakh is unique blood. I can go to 30,000 and what is the balance? 70. But this 70, can I set off against 1 lakh 40? No. Why not? Because unique blood. Yes, yeah, long term and short term. And OM horses, can I set off against one the other? Yes. So everyone, finally, this OM horse is 10,000, this 70,000 and this 60,000. How many carry forwards? 3. And if you total it up, guys, 60,000 plus 1 lakh 40. So 60 plus 1 lakh 40 is 2 lakh. Now checking, guys. Yes. Where did you go wrong? Lapse. Lapse. Someone there had a different answer on the income, total income. That unique blood. So you minus 70 from 1 lakh 40. Got it right? Yes. So if you put the symbol right, example, if long-term capital loss when you write, that time only you have to mark this so that it's in your mind. The symbols are really important. Guys, what are the symbols we learned? Star mark is unique blood. OSQS is quarantine stamp. If you see that stamp, you can't go outside. Yes. So these are some symbols that we have to know and we have to follow those symbols well. Yes. So this is question number 2. We've done, oh, sorry, this is question number 3. And we've done some sums. Tomorrow's day will be fairly nice for a start because we can start with these sums. And then you tell me, guys, which chapters to do tomorrow. Everyone, house property is okay. Set off is okay. Fast track chapters. I'll tell you why I'm telling you so that you can also brush up a little bit and then come to class. It'll be nice. So, which chapter, guys, next? Residential status. Okay. And capital gain too heavy for one day. Anything else? Residential status and scope of income. What else? Clubbing. Clubbing can be done. Very simple, guys. Can we do that? Those two? Yes, tomorrow. So, guys, everyone, you have a task at hand already. When you come to class tomorrow, so the better we do this, guys, the better our things will become in terms of discussion. Two chapters. Wherever you want to go through at least conceptually. One chapter is residential status, proof of income, and one chapter is clubbing. Yes, two chapters, and we'll do set of sums as well. Yes. All right. Anything else? Yes. Now, guys, the drive that I've had prepared was mostly from GST perspective. Yes. So I'll take some time out today, probably, if I get some time later, or tomorrow. In 1 2 days, I'll share a drive which will have the quick book and everything. So right now, whatever your material, keep using it. I'll share the link in a day or two. Yes, for TT. Yes. I'll see you guys tomorrow. Again, we'll start at the same time, about 3 o'clock. From day after, if possible, we'll start early, so we also end early. Yes. All right. See you guys tomorrow at 3 o'clock. Thank you. Yes. Yes. Was it? Sorry. Set of 5 out of 5. Importance. Yes. 5 out of 5. It's in your paper 100%. This Jan. In fact, we put it in the prediction list also. Perfect. Everyone's on the Telegram group, right? So I'll send the drive on the Telegram group only. Right? So, all right, guys. See you guys tomorrow at 3. Yes. Any questions? I'm here for 5 minutes. Yes. Yeah. 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 No. Don't take another print. There only you can, if there is any change, you can make a change there only.
Is there so much?
No, not many. When we discuss, if there's any particular change, you note it down there only. Just carry it to class. Guys, everyone carry your ICI material to class tomorrow and a calculator. I'll try and see if everyone's okay. I'm okay with this timing, but if everyone wants it a little early, we can do it. Yeah, we can do it. Yeah, I'm okay. I'm okay from day after tomorrow. So let's discuss tomorrow. Perfect. Okay. All right. Yes. Okay. Thank you, guys. See you guys tomorrow at 3 o'clock. All right, guys, welcome to day 2 of the fast track course and crash course. Just started the recording as well. Just taking stock of what happened yesterday. We did a couple of chapters yesterday. Introduction. We did some rates of tax. We saw if you have a house property, how do you earn income from there? And then we also looked at a chapter which is called set off and carry forward or loss. We haven't completed that. That is overpouring to today. And today we have 2 new chapters. Any guesses? One of them is residential status and scope of income, and the other one is clubbing of income. So that we'll be doing today. I've also given you guys a glimpse of this fast track folder here. This is a folder for DT. It has ICI material. It has revision videos. There are all the chapters revision videos here for quick revision. This is the quick book, which I will update very soon. I have 1 2 things I need to change here. And this is the list. These are the chapters that we are looking at today. 5th chapter and 6th chapter. Yes. Now getting back to set of sums and looking at where we last left. So Aditya's question I'm looking, but I don't think it's very important because there's nothing new here. Just taking from the start, speculative business is a loss and it's a unique blood. Yes, guys, I'm taking it slightly fast here because it's a very simple question. Let me know if you are able to understand it. The difficult ones will go slower also and we'll write also. So speculative business, this is a loss. Is this unique blood? Yes. And this is a profit. Can I adjust this against this? Yes. And what about the balance, guys?
Carry forward.
Carry forward because they don't talk to anyone else. Unique that. Next, there's a loss from specified business again. Unless there is an income from specified business, this also will be carried forward. Good, guys. Income from salary. I have salary income of 3 lakh. And if you look at the 4 other heads, guys, only one head talks to salary, which is house property. PGBP does not talk. Capital gain is not friendly. So only house property up to how many lakhs? 2 lakh. So I'm cancelling this 3 lakh. I'm minusing 2 lakh from here. So this 3 lakh will become how much, guys? 1 lakh. And this loss of 2 lakh 50 will become loss of how much? 50, which I will have to carry forward because this year I can only aggregate 2 lakh. Next, income from trading business. It's a profit, not a loss. Long-term capital gain, long-term capital loss, long-term capital loss. Guys, this is something that requires your attention. These are 2 losses. Is this unique blood? Yes, but do we have long-term capital gain?
Yes.
So 1 lakh 2 and 75 looks like 1 lakh 77. And if I minus it from 2 lakh, it will give me a balance of 23,000. So I'm just taking stock now. 23,000. This is your long-term capital gain is over. So all these three together will get cancelled out and we'll have 23,000 here. Next, losses from owning and maintaining race horses. Guys, now is this a unique blood group? Do we have that kind of income? No. So what will happen to this, guys? Carry forward. Brought forward loss from which business? Trading business. Guys, this is how much loss? 5,000, and it has a quarantine stamp because it is being carried forward. Guys, anything which is brought forward will only stay in that room. So this 5,000, can I minus from this trading business of 45? Yes. So I can minus from here and this will become how much, guys? 40. Next, that's it. So let's take stock of what is finally left. This will be carry forward. This is your first carry forward. This is your second carry forward. Then this is your third carry forward, and this is your fourth carry forward. There are four carry forwards, and the remaining positive numbers are all your incomes. Yes, nothing very difficult. We could use this 10 minutes of not doing the sum to do a sum which matters better. Yes, everyone, okay, okay, okay. Any doubts? All right. We move to question number 6. Again, very, very simple. You can also tick mark, guys, if you have your ICA material, tick mark question number 5. Write E and save your 10 minutes ahead also by never doing this question again because it has no challenge. People online also, guys, ICI material, ICI module is something that you should be having and you should be looking at. Question number 6 is again very, very simple. On a scale of 0 to 10, this is 1 level difficulty. Very simple question, guys. Be with me. Let's discuss this. Mr. Garg has the following incomes. Income from salary, how much, guys? 15,000. Income from business, 60. Guys, till I get a loss, I will not even focus because this chapter you focus only on loss. Long-term capital gain, loss on maintenance of race horses. Guys, what happens to this loss? Is it unique blood? And unless I have the same income, this will be carried forward. Loss from gambling. Guys, if you gamble and unfortunately lose money, who's with you? No one. But if you make money, government's with you. So here, guys, no one's with you. So I'm cancelling this. This will go in a working note, a very simple working note that loss from gambling cannot be set off. What is a working note, guys? Loss from gambling cannot be set off. That's all. There's nothing more major you have to write for this. Next, the other details of unabsorbed depreciation and brought forward loss are as follows. Guys, what is your unabsorbed depreciation? 11,000. Can you tell me something unique about unabsorbed depreciation? Yes, IQ. What are the shortcut? It does not have any quarantine stamp. That means can it go to other families also? Yes, and it can be carried forward indefinitely. But we don't need all this because, guys, how much is the loss here? 11. And how much is my income from business? 66. So can I minus 66 minus 11? Very easily. Yes. So this has been taken care of. Next, loss from speculative business. Guys, do you see any other speculative business? No. So then, unfortunately, this is a unique blood. So you'll have to carry it forward. Great, guys. And short-term capital loss, everyone. This short-term capital loss, can I minus against long-term capital gain? Yes, very nice. So from this 10,800, I'm minusing how much, guys? 9,800. So this also has been taken care of. So everyone, from this table below, how many carry forwards? 1. And from here, guys, how many carry forwards? 1. So how many carry forwards totally? 2. And what are the numbers which are taxable? Is this 15,000 taxable? Yes. Then is this 55,000 taxable? Yes. And is this 1,000 taxable? Yes. Can you take your calculators and add the boxes, guys? 55 plus 15 plus 1. 71. That's the answer, guys. The total income is 71. And how many carry forwards, guys? I don't think ICI wants to go to this level of easy questions in your exam. Yes. Because when I show you exam question, they have some small trick here and there. It's not as easy as this, but this will give you a good foundation to tackle those questions well. Let's go to question number 7. Again, a very simple question here. I'm going to take your help to address this question directly from the screen. Guys, everyone's marked question number 6 as E. Yes, don't miss those marking, guys. That's why you're coming to class, so that you don't have to look and struggle with those questions again later. Question number 7. The following are the details relating to whom, guys? Mr. S. Everyone, starting off, please tell me which is the first income? Salaries. Who is the only one who talks to salaries? House property. And the next loss is only from house property. Can I minus it, guys? Yes. So 1,90,000 is taken care of, and 2,20,000 becomes only how many thousand, guys? 30,000. Everyone okay to you? Next. Loss from which business? Cloth business. This is a normal business, cloth business. When I have some other income, I can minus it. Income from which? Speculation business. This is also in PGBP only. Loss from specified business. Tell me something about this. What kind of business is this? Unique blood. And unless I have other specified business which I can't see, this will be carry forward. So I found my first carry forward, guys. Carry forward number 1. Next. Long-term capital gain of how much? 2,50,000. Loss from card games. Yes. So what working note will you put, guys? Loss from card games cannot be set off. Cannot be set off or carried forward. I'm just cancelling this. Income from betting. Have you gotten lucky? Yes. Who wants to get lucky? On which amount? Full amount. So this 45,000 I'm already putting in a box. No one can touch it. Yes. And this life insurance, right now we are not talking about deductions yet. So we are restricting our discussion to GTI. We're not going to total income. We are only restricting ourselves to GTI. So I'm cancelling the last line totally. Now let's see which is left, guys. Which are the losses which are left? Have a look at the screen, guys. Which is the loss that left? Loss from which business? Cloth business. Guys, can I set 2,40,000 and 30? No problem. Take your time, guys. Can I set off? Yes. Because, guys, income from speculation business is not unique blood. Unique blood is when there is a loss. So, guys, 2,40,000 and 30. If I minus, tell me how much is an amount I will get, guys. 2,10,000. Everyone, how much is it? It's still a loss. Yes. From which business? Cloth business, normal business. Guys, normal business. Can I travel outside? Yes. Except salaries. Now, guys, which is the other income which is there? Long-term capital gain. How much? 2,50,000. I'm not getting the right answer, so I'll recap again. Please tell me in business what is the loss. Guys, please tell me in business what is the loss. 2,40,000. Let's start with that. Is there some profit? Can I set it off? So what is the net loss? 2,10,000. Now within the family there's no one to help because I've already taken help. But can I go outside? I can go outside to anyone except literally I can go to anyone. I can go to house property, I can go to capital gain, I can go to interest, dividend, anyone. I can see capital gain here only, guys. So 2,10,000 can I minus from you? So this completely disappears and 2,50,000 becomes 40,000. Everyone. Okay. Yes. Now, guys, I'm just talking about the incomes. 30,000 in a box. This has disappeared. This has disappeared. 20,000 carry forward. 40,000 box. 45,000 box. Please add up the boxes. 1,15,000. Yes. The only tricky part here, guys, was this. Guys, how much was your business loss net? 2,10,000. And can it travel outside? Yes, it can travel. Guys, people have questions. Can it travel to dividend? Yes, guys, it can travel anywhere except salaries. And of course, casual income, no one can touch. So, guys, what if this was not there and it was dividend? Yes. Whatever the interest? Yes, it can travel everywhere except salary. Please put a tick mark and write D. Considering your responses, I think you should do this once again later on. Question number 8. We will discuss. I want to write this question number 8. So let's do question number 9, which is not difficult, which is can be done easily. 9 and 10. And then we'll do the 8th one. Let's look at question number 9. Everyone. Question number 9. 8th one is pending, 4th one is pending right now. Geeta is an individual. Guys, the first one is pretty unique, guys. Everyone read and tell me what is she getting from the partnership firm? Salary. But this salary is not a normal salary, it is a partner salary. Which salary, guys? Guys, normal salary, if you work at EY, your salary will go under which head? Salary. But if you get partner salary, I call it P salary. What do I call it? P salary. If you get partner salary or partner's interest, it always goes under PGBP. Can we repeat? Partner salary, partner's interest goes under PGBP. So everyone, this is which room? PGBP. How much, guys? 7,50,000. In salaries room, you get a standard deduction of how much? 50,000. Everyone, in salaries you get a standard deduction of how much? Here you don't get it because which room is this, guys? PGB. So recapping, partner salary if you see in the exam, PGB. Partner's interest, normal salary, normal interest, IFOS. Yes. Only P salary, P interest comes in PGBP. Good. Next, loss on sale of shares held for 15 months. Even if you don't know capital gain, guys, I'll tell you this is long-term capital loss. What is it, guys? Long-term. Is it unique blood? Yes. Long-term capital gain of how many lakh? 5 lakh. Now stop. Can I minus this 3 lakh from this 5 lakh? Yes. So this 3 lakh completely disappears. And this 5 lakhs is long-term capital gain of how much, guys, now? 2 lakhs. So these two, I've done the adjustments already. Just 1 second. People, yeah. Next, 51,000 received in cash from a friend's party. We haven't done IFOs, but any cash gifts more than how many thousand, guys? 50,000, guys. Is it taxable? Yes. So where will this go, guys? IFOs. And how many thousand will be taxed? Fully 51,000, not 1,000, guys. Entire 51. Think like the government. The moment it increases more than 50, the entire thing is taxable. Next, 55,000 is dividend income. Is it taxable? Yes. Where will that also go, guys? IFOs. So I'm adding 51 plus 55. And brought forward business loss is how much, guys? 12 lakh 50,000. Now everyone pay attention to this. Is it brought forward? So which room will I go take it to? PGBP. But which stamp will I put, guys?
Correct.
That means it cannot go outside which room? PGBP. Everyone. Now have a look at these numbers again and tell me which is the only loss number you can see, guys. Salary positive, LTCG positive, IFOS positive. Which is the only loss number? And how much is the loss? 12 lakh 50. Which room? Only stay within which room, guys? PGBP. So guys, can this 12 lakh 50 be minus from 7 lakh 50? Yes. So 7 lakh 50, goodbye. This has gone. And 12 lakh 50 now becomes how much, guys? How much? 5 lakh. Is it still a loss? Yes. While I have a loss, I have other profits also. Can I go outside? No, because I have which stamp? Foreign. No matter how much you try, you have to set it off within which head, guys? PGBP. So this loss will be carried forward. I'm writing carry forward number 1. What about this? Taxable. What about this? Taxable. Everyone please add the taxable amounts. 2 lakh plus 51 plus 55. How much is that, guys? 3 lakh 6,000 is my total income which is taxable. And how many carry forwards, guys? Only one. That is how many lakh? 5 lakh. What was unique in this chapter, guys, or this sum? There was P salary. So P salary can be repeated in the exam also. So again, mark this as D, something that you can do just for your P salary. Yes. Any doubts, any questions on this? Let's move to the next one, guys. This next one, 10th one, is self-study. There's no challenge here. Yes, you can write SS, and when you go back home tomorrow or tonight, you can look at this 10th number question. No challenge, absolutely very simple question. All right. Now, that brings us to question number 8, which I want to solve in fair. We'll make the rough work, we'll draw, we'll present. I'm going to keep a balance between writing in fair and doing some calculations just like that, so that there is space also, and we have a sense of how to present in the exam as well. Yes, everyone, let's start writing in your books. This is question number 8 of ICI material. Question number 8. Let's start. Everyone, in the exam also you will start like this only. Somewhere you will do rough work, and in your rough work you'll write Rajat in the middle and you'll make 5 arrows. Very quickly you will do the same here as well. As in when we read, we'll put them in respective places. He has 2 let out house property. House number 1, income after all the deduction, 72,000. So you'll go to house property and you'll put 72,000. And house number 2, you have a loss of 30,000. No calculations. We are just going to download all the information first. Yes. Next. Guys, in the exam, as and when you download the information, please put a tick mark so that you don't forget what you've done, what you've not done. Yes. Make it a habit only, guys. Yeah. Let's not do this in January. Let's do it from November only. Tick mark the amounts which you've taken care of. Next. He has how many businesses, guys? 3. First is Textile business. Is it discontinued? Yes, but still, guys, the loss you can carry forward. And guys, this is 40,000. So go to PGBP. This is normal business loss. Everyone, normal business, and write 40,000. Put it in a bracket. Next, brought forward business loss. If AY 1920, guys, do you think it's still alive? Yes, it is still alive. So can I minus this 95,000 as well? Yes, so 95,000. But it is what kind of stamp, guys? Quarantine stamp. Next, chemical business. Guys, discontinued, no profit, no loss, nil. Bad debts allowed in earlier years recovered, guys. Is there a bad debt recovery? Yes, guys, think like a businessman. Someone did not pay you. So the government says if he's not paying you, I'll not tax you. Unrealized rent. But now is the guy paying you back? If it's paying you, if there is income, there will be tax. Everyone, if there is income, there will be tax. So suddenly you're getting 35,000, so the government will tax you. So you can continue writing here again normal business only. How much, guys? 35,000. Any questions? Feel free to interrupt and ask. No problem at all. Next, brought forward business loss from AY 2021 is how much, guys? 50,000. So here it is 50,000. All right. Leather business profit for the year is how much? 1 lakh. So finally some profit. Another normal business. There are 3 normal businesses. And this is 1 lakh. In the exam, you'll write normal. No, you'll write non-speculative business. Oh, sorry, my bad. This has a quarantine stamp as well. Perfect. Thank you. Next, share of profit in which he is a partner. Guys, this is from exemption chapter. Let's discuss it. If my partnership firm has already paid the tax, everyone, if my partnership firm has already paid the tax, the share of profit, will it be taxed again in my hands? No. Guys, everyone, remember it. Let's say, guys, I have a partnership firm. We are 3 partners. This is reality in Mumbai. We are 3 partners in a partnership firm. Partnership firm makes money. It'll pay taxes. Flat rate of how much percent, guys? 30. And once it pays taxes, out of that, profit is split into 3 parts. That profit, will it be taxed again? No. It is exempt. So the loss also will ignore, profit also will ignore. Yes. So what will you do with the 16,550, guys? Completely ignore. It is exempt. If you want to remember the section of exemption is section 10(2)(a). Yes, if you don't remember it, then section 10 you can always put, guys. Section 10 is always for exempt incomes. Yes. All right. Next, short-term capital gain 60. Everyone start parking the numbers again. Short-term capital gain 60. Long-term capital loss 35. What symbol should I put next to long-term capital loss? Star mark, unique plus. Contribution to LIC, I'm not doing this, guys, because I'm restricting our discussion only to GTI, no deductions. Yes, so I'm just cancelling this. Of course, in the exam, you cannot cancel. You will just take the deduction and go to total income. I'm not discussing it because we haven't discussed deduction chapter. Let's start, guys. All the numbers have been parked here. Now, let's start. With me, guys, you will have a look. Focus on profits or losses? Loss. Everyone, the first loss is where? House property. Can I set it off? Yes. What is the balance?
42.
No loss, so no focus now on house property. Here, guys, check 1 lakh and 35,000, and we have 1, 2, 3 losses, guys. Yes. So first, guys, 1 lakh minus 40. Everyone, take your calculators. 1 lakh plus 35,000. 1 lakh 35,000 minus 40,000 minus 95,000 minus 50,000. 50,000 loss, and this is quarantine stamp, so it cannot go out, guys. This is for 50,000. Yes.
Normal business 40,000.
From where?
Against cost profit.
This is this year's. This is this year's, right? Okay. But no problem. 1 second. So what we can do, guys, very smartly. This 1 lakh, again, take a calculator. I'll tell you what he's telling us, guys. Everyone, take your calculators. 1 lakh plus 35,000. That is 1 lakh 35 minus 95 minus 50. How much is that? 10,000 loss. This loss has a quarantine stamp. But what about this 40,000? Is this current year only? Yes, so can I take it outside also? Yes, 40,000 I can take it outside also. So right now guys, I'm put 10,000 here and this 40,000 is pending. Can it go to house property also? Yes. So I'm minusing 40,000 from here. This is 2,000. And here guys, can I minus long-term capital loss from short-term capital gain? No. So this long-term capital loss will be carried forward. Just asking you one small question. Can this 10,000 be minus from this 2,000? No. This 10,000 from this 60,000? No. Why? Correct stamp. So please put a box guys. 60,000 plus 2 is 62,000. And how many carry forwards guys? 2. Yes. Alright. Again guys, nothing very challenging here in question number 8. You can tick mark and write D. I thought I will solve it, but I would rather solve guys this month, this year, September paper and May paper guys have some good questions from there. So that rather than this, we'll solve that. So question number 8, you can write as D. Alright. Now guys, I'm just picking this. Of course, that one question number 4 is pending, which we'll discuss. But right now, I'm picking an exam paper. Here we go. Have a look at the exam paper here. This is a very latest paper, guys. This is May 24. If you can have a look at this. Very, very good question on set of. Everyone on the screen. How many marks? 6 marks. This is a question that we will solve in fair and we'll secure our 6 marks. But first, let's discuss. While we discuss, we'll make our rough work as well. Yes. Everyone, let's start making our rough work. Take a page, fresh page, guys, and write question number 4A. Everyone, take a fresh page. Yes. Yeah. Set. Was there a specified business discontinued or normal business? Specified business discontinued, then you can continue taking it ahead. But let's say you have a hospital, it discontinued. Specified business, you can carry it forward because after 3, 4, 5, 7, 10 years also, if you have any other specified business which you start, the profit you can set off because indefinite. All right. Yes.
But in the book, they have given answer as 100. Like they haven't set it off.
Okay, we'll revisit. I'll check it and then we'll discuss again. Yes, park that question number. Which is the question number, guys? 8. Okay, I'll have a look again. Right now, guys, let's look at this question, everyone. I'll come back to that question. Question number 4A, please write. Question number 4A. May 24 ICI paper. Question number 4A, May 24 ICI paper. 7 marks. Ideally, guys, in the exam, for a 7-mark question, you get about 14 to 15 minutes to finish that question. Let's see, right now it's a 3:47. So ideally about 4 or 5 in between that, we should be able to finish this question. Yes. So let's target and let's focus our energies on this. This is a D question. Let's start. Mr. Joshi, who is a resident Indian, about 58 years. So we'll start with J, everyone. And quickly make 5 arrows. Income from house property computed 2 lakh. Where will you take this, guys? House property, and you'll write 2 lakh. Don't wait for me, guys. As and when you see the numbers, start putting them. House property 2 lakhs. Next, income from proprietary business, how much? 3 lakh. So PGBP, normal business, 3 lakh. Next, short-term capital gain, 2 lakh. Next, short-term capital loss, 75,000. Always put loss in a bracket. Next, bank interest, 50,000. Wait, but guys, this interest on bank deposit, 50,000 is received by son. How old is he? 21 years out of money gifted by Mr. Joshi. Now, although we've not done clubbing, guys, let me tell you something. That if a major child earns some income, which child? Major, there is no clubbing. Clubbing is only with respect to which child, guys? Minor child. Yes, you gave it to him when he was a minor, maybe. But right now, what is his age? 21. Then who will pay the tax on this 50,000, guys? In his hands only. If it is taxable, he'll pay tax. Are we okay with this? So, guys, this will go as a working note. So, I'm just going to write here so that I don't forget. I'll write IF first. Just write interest and write working note. Next, loss from speculation business, 40,000. Always leave some space after normal business and write speculation business. 40,000 is a loss. What kind of blood group? Unique. And more or less, guys, all these unique blood generally are carry forward. Next, loss from owning and maintaining race horses. Go to IFOS. OM horses, 50,000. All good, don't miss that unique blood group. Next, following out brought forward loss. Guys, everyone stop. Brought forward losses means you put which stamp? Quarantine stamp. Let's take the first one, guys. Brought forward house property loss. From which year, guys? 21. So, guys, 21, 22, is it alive? For how many years? 8. I'm not even checking, guys. It's alive definitely. So, everyone go to house property and write 2,50,000. The only thing is don't miss out on this stamp, quarantine stamp. Next, brought forward business loss of which business? Proprietary business. From which year, guys? 13, 14. Now stop, everyone. This we'll need to check. Guys, everyone, 13, 14 assessment year means previous year. 12, 13. I want more confident answers. Which is the previous year? 12, 13. How many years will you add? 8 years, 8 years. What does this become, guys? 20, 21 previous year. This was the last year. Guys, our exam year is which year? 23, 24. So is this already lapsed? So we'll just write a note on this, guys. This will already lapse. So I'm just writing here normal business, lapse, and working note. So that we don't forget, I'm just putting that working note there. So this is working note 1 and this is working note 2. Next, unabsorbed depreciation. Do I check the expiry? No, because it is IQ. How much is that, guys? 1 lakh. Just next to normal business profit, I'll write normal business UAD of 1 lakh. Don't forget this bracket. And last, guys, everyone watch this carefully. This is the one which is slightly tricky, but I'm sure you'll be able to understand, guys. Brought forward long-term capital loss. Is this a unique blood? Yes. Of how much, guys? 90,000 of which year? 18, 19. 18, 19, guys, for 8 years. Is it alive? Yes. But there's a problem, guys. In that year, return of income for that year was filed on 31st January 2019. Now, if you're confused, draw a diagram, guys. Everyone, please tell me, what is the assessment year? Assessment year 18, 19. That means previous year which one? 17, 18. You had a loss of how many thousand? 90,000. The government has made a small request that if you want this loss to be carried forward, please file your return on due date. On due date, John, July, October, or November. Guys, did you file by July? No. Did you file by October? Did you file by November? You filed in which month, guys? January. 1 minute, 1 minute. Which month? January. So, guys, this loss cannot be carried forward. Everyone has to be still clear about this concept. I'm changing it, guys. You filed it in June. Perfect. June is okay, guys. Anytime, of course, for individuals and all it's July, but these filed much later, guys. So this 90,000 unfortunately will not be carried forward. Guys, so everyone write long-term capital loss and working note 3. All right, now all the information has been downloaded. It's time to now start solving. Focus on profits or losses? Losses. Let's start, guys. Which is the first loss? House property. 2,50,000 minus 2 lakh. How much is the balance? 50,000. Which stamp? Quarantine stamp. From 3 lakh, can I minus 1 lakh? Yes. So 3 lakh minus 1 lakh is how much? 2 lakh. Always give it a name. What is this 2 lakh? Normal business. What about the speculative business? Carry forward. 2 lakh and 75. Can I set it off? Happily, guys. How much balance? 1 lakh 25. Name it, guys. What is the name? Short-term capital gain. And what about this 50,000? Carry forward. Continue, guys. What about this house property 50,000? But friendly but shy, no? Quarantine stamp. Excellent. So this is also quarantine stamp. This is also carried forward. This 2 lakh in a box. 40,000 carry forward. 1,25,000 in a box. Everyone total up the boxes. 3,25,000. That's my income. How many carry forward, guys? 3 carry forward. 50,000, 40,000 and 50,000. We can write one working note for that. So guys, this will be one working note and there are 3 other. There are totally 4 working notes. Let's start presenting, guys. We have 10 minutes to present this question. Keep this rough work on the side and let's start presenting. What will you write at the heading? Yes, computation of GTI of Mr. Joshi. Computation of GTI of Mr. Joshi for PY 23-24, EY 24-25. Particulars amount. Check, guys, your rough work. Which is the first head of income? House property, yes. So start with IFHP, underline semicolon. When you present, start with the profit. Income of previous year 23-24, 2 lakh. How much loss are you setting off? 2 lakh 50. But from 2 lakh, I cannot set off 2 lakh 50. From 2 lakh, I can only set off 2 lakh. The balance 50,000 working. Yes, everyone. Less brought forward loss of preceding year. So when you're presenting, guys, from 2 lakh, you can only minus 2 lakh. Next, guys, which is the next head of income? Check. PGBP. Please write PGBP. Non-speculative business, 3 lakh. From that 3 lakh, what are you minusing? UAD. So less UAD. One lakh, and outer column how much, guys? 2 lakh. A small pro tip: whatever you put in boxes will go in the outer column. Right? See, is 2 lakh in a box? Yes, it will go in the outer column. What about that speculative business loss? Working out. Yes, yeah, all the carry forwards are working notes. Next, capital gain. Short-term capital gain. 2 lakh. Less short-term capital loss. 75,000. Outer column 1,25,000. And in IFOS, we have another carry forward. OM race horses. In the exam, guys, you can't write OM and all that, guys. Yes, it's a religious word. Yes. Owning and maintaining race horses. Working note 1. Therefore, gross total income 3,25,000. Keep checking with your rough work, guys. It should match with your rough work, whatever you're doing. And don't do any fresh calculations. Whatever calculation done in your rough work, keep maintaining them Now, how many carry forwards are there, guys? Three. I'm going to combine. Of course, here I've written them all three different. But guys, you can also suggested answers have suggested that we can also combine all three. So we'll combine all three. I'll show you how to combine all three. Write working note one. Everyone, write working note one. The following losses, everyone. The following losses. So what is the intra-head adjustment for FHP limit for new scheme? In the new scheme, intra-head, there is no limit. Inter-head is not allowed only. It becomes non-friendly. Dhanush, I'll give you a small tip. Don't worry about the new scheme at all. The moment I open up new scheme, I'll teach you everything there is in the new scheme very easily and how to implement it also. So don't worry about it. You might get confused. That's my only worry. Otherwise, it's all good. The following losses cannot be set off against other incomes and hence will be carried forward. A. Loss from house property 50,000. B. Speculation business loss. Can someone tell me how much is the speculation business loss? 40,000. Loss from OM horses. How much is that amount, guys? 50,000. Then, guys, if you remember, there was one loss which had been lapsed. So we'll write a note on that. Business loss from AY 13-14, that is previous year 12-13, can only be carried forward for 8 years and hence the loss has lapsed. So you don't have to check for every loss. Only if there's a lot of gap, check for if it's lapsed. This working note 3 is amazing. This is testing our knowledge very well. So this is an important note. The long-term capital loss of 90,000 cannot be carried forward since return of income was filed after due date. Avoid using John in the exam. Yes. And last, guys, why was the income of major child not clubbed? Because income of which child is clubbed, guys? Minor child. Yes. So income of major child will not be clubbed. So then who will pay the tax on that, guys? A major child. Yes. So right now, guys, I'm telling you today, if you're a major and you guys are all majors above 18, your parents can transfer all their wealth to you, but it will not go back to them. Who will be taxed? You. Yes. But in reality, people don't do that because they feel if if you are young, they give you so much wealth, you might misuse it, trust issues, etc. Otherwise, people can actually manipulate and save tax there. Once we finish writing this working note, we'll take stock of how much time it took us to do this sum. Yes, so it's 403. We had expected anywhere between 4 to 4:05 we should have finished it. And this is after explanation, me explaining to you about that, we drawing a rough work. So guys, in the exam, also make a rough work, then convert it here. You'll spend 2 minutes more, but you'll get an accurate answer. Yes. So this is question number 4A, May 24, ending this year. Yes, any doubts? Okay, all right. Guys, do it again. This was a D question, definitely. I'm going to the next paper already. Here is it, guys, the next paper. This is also a very good question. This is from November 23. And this has even more weightage, guys. This is 7 marks. Here we go. I sometimes set off chapter comes for even more marks than PGBP overall. Yes, so 7 marks question on set off. Let's try and see it again. This is J. That question was how many marks? 6 marks. Sorry, that was 6 marks. This is 7 marks. Again, a question that we have to solve, and then we'll also look at it at fair. Yes, can we start right now? Please write question number 4A. This is November 23 ICI paper. Yes, here we go. Question number 4A, November 23. You know the trend, guys. This is a person called Jay. So make 5 arrows just like last time. If we are comfortable, then we might not solve it in fair because we've just seen a presentation already. Let's start. Taking the first income from activity of owning and maintaining race horses, 40,000. It's not a loss, it's a profit of 40,000. Go to IFOS, OM horses, 40,000. Sorry, it's not a loss, it's a profit, 40,000. Next, income from crossword puzzle solving, 30,000. Is this casual income? Yes, I'll leave some space after OM horses, so I'll write casual income, 30,000. And I'm already putting it in a box because no one can touch this, no set off allowed here. Income from agriculture land is exempt in India, so this is not taxable. And if there's a loss, we could not set that off also. Dividend income is how much, guys? 15,000. Here we go. Please write dividend. 15,000. Now, expenditure incurred in collecting the aforesaid dividend. We haven't discussed IFOs, but I'll just tell you something about dividend, guys. I'm sitting here right now, it's 4:07. Suddenly, a company can declare dividend and I'll earn it. So, do I spend money to collect dividend, guys? No. So, the government has made a rule that if you earn dividend, which income? Dividend, you won't get any deduction except one. What is the only deduction? I'm teaching you something from IFOS now. That if I've bought the shares by taking a loan, right? If I bought the shares by taking a loan, and on that loan, if I'm paying interest, then only that deduction is allowed. That to up to 20% of the income. So, example, my income is 1 lakh from dividend. How much is my income, guys? 1 lakh. To collect that dividend, I spend some money. Can I take a deduction? Only on what? Interest, and that too up to 20,000. What if I pay 22,000? No, you pay, but you'll get deduction only of 20. What if I paid interest of 18? 18. So 20 is the cap. Are we okay? So guys, this 2,500, you get nothing. You can spend money, you won't get any deduction. This is covered in IFOS. When you go to IFOS, we'll see it there as well. Income from cycling business. What kind of business is this, guys? Normal business. So cycling business is normal business. I'm writing a normal business. 1,50,000. This is income, so positive. All right, loss from warehousing facility for storage of edible oil stock. Guys, there is a list of specified business. Everyone, there's a list of specified business. Now, what is specified business? I'll give you a nutshell. I'll give you a little idea. It's from PGBP, but I'm telling you right now. Guys, I can do many multiple business. Start Zomato, start Swiggy, start a cafe, etc. Start Vandala. But if I start something which is good for the economy, good for the society, the government calls it specified business. There's a list, and the list has a shortcut also. It's in my QuickBook also. And there are about 10 or 13 of such specified businesses. What is the advantage of specified business? That if you start that business, any capital expenditure, repeat, any capital expenditure, I don't get depreciation, I get 100% reduction. Yes, we'll talk more about specified business in PGBP, but there's a list and I'll make you by heart that list. But right now, guys, this business is not there in that list. So this is not a specified business. This is which business now? Normal business. How much is the loss? 1 lakh. So go to normal business and minus 1 lakh. Yes. Share of loss from a partnership firm, stop. And share of profit from a partnership firm is exempt. No, share of profit is exempt. So if profit is exempt, even loss have to ignore. So what happens to this loss, guys? Ignore. Yes. Convinced with this, everyone, everyone. Moving ahead. The following items have been brought forward. So which stamp will you put?
Correct.
Let's start, guys. Brought forward loss from house property. Yes. Anything you want me to repeat, I can. That PR associates, I'm repeating again, guys. Is it a partnership firm? What are you getting from it? Share of loss. If loss confuses you, think of profit. If you get profit, it was exempt. So loss also you can't set off. This 1 lakh I've taken care. Next, loss from owning and maintaining race horses, guys. There's a loss of 37. So everyone, OM horses. There are two symbols. You will tell me the two symbols, guys. Star mark also and quarantine stamp also. Loss from gambling. Ignore, guys. This is a loss from gambling. If this was income from gambling, then it's different. Otherwise, you have to ignore it. Unabsorbed depreciation, guys. Where will it go? PGPP. And will I put a quarantine stamp here? No. So I'm just going here. Unabsorbed depreciation. 15,000. Next, speculation loss. Guys, here I'll leave some space. I'll write speculation business loss. 20,000. And there are two symbols here. Guys, one is unique blur. And is it being brought forward? So quarantine stamp. Yes, everyone. Okay till here? Yes. Okay. Now, there's one point on the next page for which I want to teach you something from clubbing of income chapter. Everyone. Yes. Till here, everyone comfortable? Just one more thing I want to add. But before that, guys, Starbucks has given all of you guys a voucher that you can have a free coffee from there. Yes. So let's say these are two friends, or let's say it's me and my spouse. Both of us have a coffee voucher from Starbucks. I can take any coffee from Starbucks. She can also take any coffee from Starbucks. But she's not using. She doesn't like coffee. Then what do? I'll tell her, listen, yeah, you have a voucher. No? Just get it. Give it to me. So guys, will we let the voucher go waste? No. Same thing happens in income tax, guys. Watch. There's a point from clubbing of income, but it is used ahead in the next point. So I'm preparing you. This is a husband, and this is the spouse, the wife. Everyone. The husband is paying very high taxes. Example, how much percent, guys? 30%. And the spouse has a basic exemption limit up to how many lakh? 2.5, and rebate up to how many lakh? 5 lakh, which is right now getting wasted because she has no income. Just example, she has no income. So he makes a very amazing plan, guys. Watch. He is a partner in a partnership firm. What is he? Partner in a partnership firm. Or he has any company in which he has control. Guys, these entities, I'll call this entity, guys. What is this in the middle? Entity in which over which he has control. Everyone, over which he has control. Everyone, what is the word? Control. So he calls up that entity and he tells an entity, listen, yeah, do me one favor. Right now, go to your banking app and transfer 3 lakh rupees to my spouse. How much? 3 lakh, and just call it salary. Just call it what? Salary. Or remuneration or commission. Everyone. Who is the person planning this? Husband. He called up whom? The entity over which he has control. Everyone, over which he has control. And he told the entity to pay how many lakh? 3 lakh as what? Salary, remuneration and commission, even though the spouse is not doing anything. But guys, the entity has to oblige because he has control over it. So now please tell me, guys, how much is the spouse earning? 3 lakh. And will she pay any tax from this? No. So the government says you cannot forcibly use their basic exemption limit like this. And hence the government has made a rule that if you do this, and this is called CN, guys. What is the shortcut? CN. Everyone, you have the shortcut very well. C means first you should have control. Everyone, what is C? Control. Does the husband have control? Yes. Control means 20% or more shareholding. Everyone, what does control mean? 20% or more shareholding. It's called substantial interest. What does it call? Substantial. So you should have substantial interest, basically means control. And this salary should not be linked. Everyone, what is it? Not be linked. Basically, she should not be deserving this salary. Guys, please tell me, here are both these conditions fulfilled?
Yes.
Does he have control? Yes. Control means 20%. Either shareholding or 20% of your profit or more. And what is N? Not linked. Guys, are both conditions fulfilled? Yes. And the government says, listen, this 3 lakh rupees will not be taxed in the hands of the spouse. This one will go back to whom, guys? Husband. This is clubbing. If you didn't know it, now you know it. And I'm going to recap by changing. Guys, the spouse actually worked for the entity and she deserved 3 lakh. Then, guys, will the income go back? No. Then who will be taxed? The spouse. And whatever way, if she's not paying tax, she's not paying tax. But guys, only C N has to be fulfilled. What is C? Control. And N is not linked. Both, if they are fulfilled, only then will the income come back. Are we clear with this, guys? So what is control?
20%.
20%. Another word for control is substantial interest. And N is not linked. They have made a small amendment here. The husband, guys, how much control he should have? 20. The husband, along with his relatives can also control. Not just individual control, along with the relative. Husband 18%. Husband's real brother 5%. 18 plus 5? 23. Are we getting this, guys? So this is something that we'll use here. Of course, this we'll do today in clubbing of income also, guys. One thing already done from there. But I'm just going to read the next line. Everyone watch very carefully. Mrs. J. Guys, whose question are we looking at? J. Yes, his wife of Mr. J, got a salary of how much? 1,20,000 from which company? PR Associates during the year 22-23. She is not qualified for the job. Everyone. Here is who? J. Here is who? PR Associates. And here is who, guys? Wife. Everyone watch very carefully. And you have to tell me, guys, whether CN is being fulfilled. What is N for? Not linked. Guys, is this 1,20,000 linked? No. What is the word? Not qualified. So one condition is fulfilled, guys. Next condition is control. Let's check, guys. PR Associates. How much control does J have? Share of loss from PR Associates is a firm having how many partners? 4 equal partners. Guys, if it's 4 equal partners, each person will have. So does J have 25%, guys? So does he have control also? Yes. So now, guys, please tell me this salary which the wife got, will she be taxed on this? No. It'll go back to whom, guys? J. But guys, all calculation we can do. We can compute standard deduction and all we can minus. So you have to minus, the final number will go back. So in salaries, guys, how much standard deduction? 50,000. What is the balance? 70. This 70,000 will go back in the hands of Mr. J. Are we okay with this, guys? Yes. So the government is basically blocking you from forcibly using someone's basic exemption. Are we okay with this, guys? Here, everyone CN? Control and not. Yes. So this 70,000, everyone, I'm going back to our diagram. You can also go back to your diagram, guys. Everyone, write salary here. Of course, we'll write a working note. And how much will be the salary, guys? 70,000. All right. Now let's solve, guys. Target the losses. Hit the losses first. Which is the first loss you can see? House property. But can it go outside? Super. Why not? Quality exam. So more or less it will be carried forward. You can already mark it carry forward. Next, guys, can I minus 15? 1,50,000 minus 1 lakh minus 15. Yes, please do the maths. 35,000. What about speculation loss? Carry forward. Can I minus 40 and 37? Yes, what is the balance? 3,000. Give it a name. OM horses. Is it a loss or a profit, guys? Profit. Everyone now check which other losses remaining, guys. Nothing. So let's put all the boxes. 70,000 in a box. 35,000 in a box. 3,000 in a box. 15,000 in a box. Please total up. Yes, I'm waiting for all the people to calculate. 1,53,000. 1,53,000 is the total income. And how many carry forwards, guys? 1, 2. 2 carry forwards. Yes. So what did we learn new from this chapter or this sum, guys? First is CN. But of course, that's not from this. Actually, we learn it in clubbing of income today. So that is something new we learned. We also learned something new, which is that's it about. I think that's about it. Yeah. We could attempt to write this, especially because that's CN working note. Let's write this and let this be the last fair question that we write from this chapter. Yes. Everyone, let's start writing. This is November 23, question number 4A. Yes. Have you written this already? No, right? Okay. And if you feel you don't want to write this entire, okay, once again, just asking you guys, was it difficult, easy? What kind of sum was this? Easy. So can we avoid just write this working note at the end? Yes. So what we can do is in that rough work only at the bottom, guys, we can write this working note. Oh, sorry, not this working note. I'll show you on the next page is a working note. May 23 part 2. Yes. We can write this one working note because this is the one that is important. This is that CN part. Okay. Yes, so this is ideally where I would like to end. There's one question number 4 which I want to discuss after this. It's a very simple question actually, but it's not from this chapter, hence I wanted to do right in the end. So ending this here, if everyone's done writing. Yes. All right, and then I'll check that question number 8 which you had some doubt around it, and we'll discuss that later. But right now I'm looking at question number 4. Here guys, this is question number 4. It is something that you will probably know from PGVP, but we'll discuss it first and we'll see how that works. Here is a question guys on the screen. It will be also in your book. This is question number 4 of your set off and carry forward. Guys, on Google Map, you want to go to a particular place. Can you have 2 ways of going to that place? Yes. And which one will you take? The shorter one. Yes, the shorter one. Same thing happening here, guys. Watch out. I'll just need your calculators. So just make sure your calculators are out. Discuss it while I discuss it here, and then we'll write. Mr. A furnishes the following information for the year ended 23-24, guys. Let's see what is happening in Mr. A's life. He has one business of plying of vehicles, that is basically as goods vehicles. Which vehicles, guys? Goods vehicles. So it GTA, guys. What is GTA? Goods transport agent. Yes, no problem, guys. He's a goods transporter, and he's earned how much money from that? 3,20,000. Guys, has he maintained books of accounts for that? Yes, computed as per books. Everyone. That's one business from which he's earning an income of 3,20,000. What's the second income, guys? What is the second income? Retail trade of garments. Basically, he sells shirts, trousers, etc. Retail trade. And how much has he earned from that, guys? 7 lakh 50. Again, guys, how do we know he's earned this? Computed as per books. So 3 lakh 20 from one, 7 lakh 50 from one. This is his income. And then he has some brought forward depreciation. What do we call brought forward depreciation? Unabsorbed depreciation. Can I minus it, guys? Yes, I can minus it from any head. I can, of course, minus from here. So let's do the mathematics, guys. Everyone on the calculator. 3 lakh 20 plus 7 lakh 50 minus 1 lakh. 9 lakh. 9 lakh, everyone, confidently, guys. 9 lakh 70,000. This is his income from his books of accounts when he's maintaining his books of accounts. Then suddenly we told him, listen here, Mr. A, while books of accounts is great, why don't you follow presumptive income? Which income? He says, what is presumptive income? I don't know. So we'll teach him what is presumptive income. We say that if you're a goods transporter, who are you? There is a section called 44AE. Everyone, what is a section called 44AE? When we do PGBP, maybe tomorrow, guys, we'll look at AE. But just in a brief, I'll tell you guys, what is AE? This is for people who are driving which vehicle? Goods vehicle. Like all these goods transporters, we have a section for them. The shortcut is always on the expressway. What is the shortcut, guys? Always on the expressway. And guys, they don't have to actually maintain books of accounts. All they need to do is every truck is assuming or presumed to earn a profit of 7,500 per month. Everyone. Every truck is presumed to earn how much? 7,500. And this I'll teach you in PGBP, but this can be used only by GTS who are small, who have up to 10 trucks. Who have up to how many trucks? So let's see, guys, how many trucks does he have? 5. And light and medium, so 7,500 per month. Into, guys, everyone take a calculator. Each truck is expected to earn 7,500 into 12 months into 5 trucks. Guys, how much is that? 4 lakh 50. So if he followed presumptive tax or presumptive income, his income from this business would be 4 lakh 50. Everyone okay? Now, guys, this is 44A. What is the section? The government says we are assuming 7,500 to be earned from. And after that, we'll not give you any more expenses. We've assumed all your expenses. If you don't understand this, you'll understand the next one. The next one is retail trade of garments. Is it a business? Again, guys, government says small businessmen. You have a section called 44AD. What is the section, guys? 44AD. Where everyone hear me out first. Where the government says, you tell me your turnover. You tell me what? Turnover. And for small businesses, turnover up to 2 crore. Turnover up to how many crore? You tell us your turnover and we'll assume your profit to be 8%. What percent? Not tax. Your profit will be what percent, guys? 8. Example, guys. My turnover in business is 1 crore. How much is my turnover? 1 crore. Into 8%. 8 lakh. Government says 8 lakh is your profit. Don't calculate. Don't maintain any books of accounts. Just 8 lakh. Guys, on 8 lakh, guys, that's my profit. I have to pay my tax on that. Now tell me, guys, the government says I have assumed 8 lakh to be what? Your profit. After that, I will not give you any more deduction. That means after 8 lakh, if I want some more depreciation, no. Some repair, no. Guys, the shortcut is the PGBP shop is closed after that. Which shop is closed? So from PGBP, you will not no further deduction. And that 8% has been reduced, if you are aware, guys, to 6% if the money in your business is coming into your bank account. So bank account, 6%. Other than bank account, 8%. Yes. Now let's see what is his business, guys. He's a retail trader and his sales turnover is how much, guys? 1 crore 35 lakh 70,000. Mr. A had declared income on presumptive basis under section 4480 last year. We'll talk about that later. He had already declared last year, but this year, let's see how it works. Assume 10% of the turnover is received in cash. Guys, can we do the cash percentage? Everyone on your calculators, everyone. 1 crore 35 lakh 70,000 into how much is received in cash? 10% into 10% into 8%. How much is that, guys? 1 lakh 8,000. Guys, that means on the percentage that he's got in cash, 10% is got in cash. Out of that, how much is the presumed profit? 8%. Are we okay with this? Yes. And now again take the same number, guys. 1 crore 35 lakh 70,000 into 90% into 6%. 7 lakh 7 lakh, sorry, 32,000. Guys, now what is this? This is the other 90% which you've received in which account? Bank. We'll take how much percent there, guys? 6%. Guys, more details in BGBP, but right now briefly telling you that this is one option you can take. But now which shop is closed? Can I take any further deduction in PGBP? He wants to take unabsorbed depreciation. Guys, unabsorbed depreciation comes from PGBP. Where does it come from, guys? Do you remember set of Where does UAD go? PGBP. They say PGBP shop is closed. Other losses you can take, but UAD you can't take. So can I minus 1 lakh, guys? No. So everyone please add 4 lakh 50 plus 1 lakh 8, 560 plus 7 lakh 32, 780. 12 lakh 91, 340. Now guys, if he maintains his books of account, what is the income? 9 lakh 70. If he follows presumptive income, what is the income? 12 lakh 95. Which one would you suggest him to do, guys? Google Maps. 9 lakh 70. Guys, whichever is lower. Yes. Are we okay? More on this when we come to PGPP. But guys, just like Google Maps has two ways to go to the place. Here also there are two ways. Take whichever one is cheaper. Which is cheaper, guys? 9 lakh. Because lower the income on paper, lower the tax. Are we okay with this, guys? Everyone. Guys, I have solved this. I'll show you where I've solved it. Everyone, just watch. This is set of chapter. I'll put this handwritten notes also for your reference. This is question number 5 of my set of chapter. Here we go. Just check. Guys, did we also get 12 lakh 91 340? This is as per which basis? Presumptive. Did we also get 9 lakh 70? This is which basis? Books of accounts. How many ways you have, guys? 2. Books of accounts and presumptive. But this is only for small business. If Reliance wants to do presumptive, they can't do. Adani can't do. Mahindra can't do. This is only for which businessmen? Small businesses always have two options: either presumptive or as per books of accounts. You'll take whichever is lower. In real life, guys, you should have a little flavor of real life also. In real life, lots of businessmen use presumptive income. They don't even maintain books of accounts. You just need to know your turnover. What you need to know? Turnover. Into what percent? 6%, 8%. That's your profit. PGBP over. They don't even maintain books of accounts. That's a very easy way for small businessmen to do business. They can focus on business, not focus on tax so much. Are we okay with this? But in the exam, I don't think this is a very important question. But there are two ways if it comes in the exam. Yes, everyone. All right. Now, while we are discussing this in set off, I think this sum is from PGBP because more concepts of PGBP, but still we managed to finish it. Guys, what I can do is, this is a question from there. It's also in my Yeshas book, so I have also solved it here. You can read it from here. Otherwise, you can read the explanation also. These handwritten notes I'll also plug into the drive for fast track batch, so you can also go and have a look at this. Should we write this? Should we not write this? You guys decide. Let me know. Okay, not writing it, guys. Everyone. So, guys, what if this comes in the exam? You'll have two tables. First, computation of income on which basis? Presumptive. You'll get 12 lakh 91. Then computation of income as per books of accounts. How much will you get? 9 lakh 70. And Mr. A would choose as per books of accounts. Yes, to everyone okay with this? More on presumptive taxation, guys, in PGBP. Yes, all right. So with that, guys, this is the question number 4. Honestly, I'm not a big fan of this question here, and that's why I try to do it in the end. Set off is very clear, guys. They will give you a set of incomes always, and in those set of incomes, guys, you have to set off like usual. That rough work, that is the kind of question expected. People giving the Jan exam here, of course, all of us. I'm expecting set off to be in your exam. How many marks is DT? 50. How many marks is practical and theory question? Out of 35, guys, 7 marks. That means 20% of your portion comes from just this one chapter. So people chasing PGBP, people chasing other chapters, first chase this. Get this, knock it off first. If this chapter is done, 5, 6, 7 marks are reserved. There are sums where 10 marks has come from this sum. There are papers where 8 marks has come from this chapter. So this is that one hidden gem, guys, which you have to, unhide it, remove it, solve it well, and go to the exam. Yes. Can I wrap this chapter here, guys? Are we confident of this chapter? Everyone. Good. The revision video is already there. Now, guys, let's say it's the 2nd of Jan or it's the 28th of December, and you're thinking of revising this chapter. How will you revise this chapter? You'll watch the revision video first. Yes, it's already there, 10-15 minutes. Then you'll read my handwritten notes. They're also there, or the quick book, any one of them. And then you'll solve the sums. Which one, guys? The D ones. You're prepared. Yes. And if you have more time, then look at some RTP question, MTP question. But RTP, MTP, the problem is they solve it, they make it very difficult. RTP, MTP. The paper isn't that difficult. RTP, MTP sometimes are very difficult. Yes. So you can practice more sums, but these sums at least you practice. Everyone okay with this? All right. Taking like 2-3 minutes away. You guys can also relax 2-3 minutes. We'll start off with residential status in 2-3 minutes. Our first break is at 5:30, and then we'll end by about 8:15. People online also, if you have any doubts, guys, plug them in on the chat box. I'll correct. I'll check it. I'll clarify. All right, looking to start a new chapter, guys. First, conceptually, let's get a strong hold on the chapter, and once it's done, we will then move to the sums. Yes, I don't think there is any difficulty. In fact, for Jan paper, there is something that has been removed by ICI from this portion, so you'll know about it. But something that is good, because anything that is removed is always nice, guys, in the portion. So I'll tell you about it when we start studying. This chapter's name is what, guys? Residential status and scope of income. Yes. Um, we will start with scope of income first, and then we'll go to residential status. Yes. So I'm starting the first part, which is scope of income. In a nutshell, guys, what is scope of income? Those incomes which will be taxed where? In India. And somewhere, guys, the Indian government is logical here. You have to start thinking like the government. The Indian government has one logical thing. They say that if you come to my kitchen and you make some dish, then I'll have to get a bite of it. Guys, you have to pay some tax. If you are making some money out from which country? India. So they have divided the people into three categories. First two categories, guys. One of them is called NR. What is this called, guys? Roughly speaking, someone who does not stay in India too long is an NR. And then there is someone who's a resident who stays more often in India is called a resident. In resident, they've made two categories further, guys. One is called resident and ordinary resident, and one is called resident and not ordinary resident. In residence, guys, the people who stay lots of days in India are ROR. The people who don't stay too long in India, guys, are NOR. So technically there are two, but actually there are three kinds of people: a non-resident, RNOR, and ROR. Let's talk to all three of them of how they are taxed in India, which of the incomes are taxed in India. So I'm just going to make two arrows here, guys. So this one and these two. Now let's talk to first a non-resident, guys. That listen, non-resident, yeah, why are you so happy in India? Why are you so not bothered about India tax? He says that Indian government is very good. They don't bother me at all unless I earn four incomes. How many incomes, guys? Four. And the non-resident makes a shortcut called DEAR income, guys. What is the shortcut? DEAR. Everyone. DEAR. How many incomes? Four. And the non-resident says, I'm very happy. I may have 400 incomes, but the government taxes me only on four. So we ask him, what are these four incomes that you are taxed in India? He says, if I receive some income in India, receive where? In India. Is there an India connection? Yes. If I earn some income where? In India. If some income accrues in India, what is earned, what is accrued, I'll teach you. But right now, guys, all these have which connection? India connection. All the incomes are deemed to accrue rise where, guys? In India. So how many incomes? Four. Received, we know what is received. Earned, we know, guys. What is accruing? I'll teach you, guys. You make an FD of 1 year. How much? When will you get the interest? After 1 year. But after 9 months, 6 months, 8 months, guys, is interest accruing to you? Yes. It is payable but not paid. That is called accruing. You work in a job till 20th of November, guys, for 20 days. When will you get a salary? After 30 days, guys. But 20 days salary, is it accruing to you? Yes. So accruing is at one stage before it's earned. Yes. In any way, guys, all these four have their connection where? In India. So Indian government taxes. I'm giving you an example. Let's take an example of Sundar Pichai, who is an Indian who has gone abroad and now he stays in the US. His salary in the US, can we tax it in India? Why? No India connection. No India connection. Salary abroad received in India. Yes, because received where? House abroad given on rent. No, because which connection is not there? India. House in Bangalore given on rent. Yes. So guys, they are taxed only on how many incomes, guys? Four. Everyone okay? So I'm writing DEAR income here, and you should know what is this DEAR. Everyone okay? These shortcuts you will find in the quick book very easily. Now, next. You're a resident and not ordinary resident. Means, are you a resident? Yes, but what kinds? Not ordinary. So the government asks him also, guys, you look also happy. Why are you so happy? He says, I am also very happy because I can have 500 incomes in the world. But the Indian government only taxes me on 5 incomes. How many, guys? We ask him which 5. He says 4 you already know. DEAR plus 1, guys, which is the one? Plus 1. So we ask him, okay, DEAR we already know. Received, earned, accruing, and deemed where? In India. So we ask him, what is this plus 1 income? So he's saying that I may have some income earned abroad. I may have some income earned where? Abroad. Income is earned in Singapore. But that income is controlled. Guys, what is word? Controlled or managed or set up. CMS. What is the word? CMS. Controlled, managed or set up from India. If that is the case, then Indian government taxes everyone. What is this plus 1? Income earned abroad but controlled, managed or set up from which country, guys? India. So guys, NR is taxed on how many incomes? 4. RNOR is taxed on 5. One extra income, guys. Yes. And guys, ROR is very unhappy, guys, because he is in a very big fix. Indian incomes, of course, are taxed in India, but foreign incomes, guys. This ROR has a house in London, given on rent in London to a person in London. Everything is happening where? London. Who is taxing him first?
Government.
UK. Guys, who's taxing him first? UK. But Indian government says, listen, you are my person. You are who? ROR. You are my person. So I also will tax you. So he's paying taxes how many times, guys? Twice. It's almost like you give the JAN paper, you clear the exam, ICS says give it again. Painful. Yes. So this is double taxation, guys. Very painful. Of course, we gave him relief, guys. Very easy relief we give him, but at CA finally we learned the double taxation. All right. So, guys, this is called global income, which is this global income. And by the way, if you don't know, guys, all of us sitting in this room, we are ROR. Yes, but we are not crying right now because we don't have foreign income. The moment we start having foreign incomes, we'll also pay how many taxes, guys? Twice. But we'll get relief. There is way to get relief. The Indian government, foreign government, they've joined hands. They have come DTAs, which you will study at CA final. Some part we'll leave for final also. Yes. All right. So this is how scope of income is. The section is section 5. What is the section? 5. First, determine what kind of person there is, then you tax it. Let's talk about ROR, guys. I'm giving you 3-4 income. You tell me, will they be taxed in India? Income earned in the UK. Yes. Income earned in Bangalore.
Yes.
Income earned in Sri Lanka. Yes. Every income? Yes. RNOR. Income earned in Sri Lanka, received there, everything there. No. Income earned in Sri Lanka, controlled from India. Yes. Set up from India. Yes. And for NR, business in Singapore, everything in Singapore. No. Income in Singapore, received in India. Yes. So are you getting the India connection? So guys, for NR, you need which connection?
India.
India. RNOR, you need which connection? India. But here we don't need any such connection. Are we okay with this, guys? Yes. Now, two things you should be careful while you're doing this, guys, while you're attempting scope of income, is if I earn, let's say I'm a ROR. Who am I? ROR. And I have some income earned in the UK. Guys, which country? UK. Will India tax me? Yes, tax. Now that money, let's say 10 lakh is in UK bank account. This morning I transferred it from my UK bank account to my Bombay bank account. Will it be taxed again? No, that's called remittance. What is it called, guys? Remittance. Remittance means second, third, fourth receipt is called remittance. So the government only looks at which receipt, guys? First. Again, a client of mine has paid me in Mumbai. Will it be taxable? Yes. I take that money and give some part of it to my mom. Will it be taxed again? No, that is called remittance. What is it called, guys? If you or your family members are taking that money out, guys, that's called remittance. It's not taxed again. So you look at only which receipt, guys? First receipt. Everyone, so what do you do with remittance, guys? You ignore remittance. What do you do, guys? You ignore remittance. Giving you another example. You are a non-resident. Who are you? You have an income in London. Can India tax it? No. Let's exempt 10 lakhs. Income where? London. Can India tax it? No. Why not? Because no India connection. You take that money from 10 lakh from London and you pass it to an Indian bank account of yours. No. Again, guys, it's still remittance. It is still, guys, it's not the first receipt. First receipt was where? London. So, guys, a pro tip, only look at which receipt? First receipt. If it's taxable, tax it. If it's not taxable, let it go. Only look at which receipt, guys, first. Guys, you are a RNOR. Who are you? RNOR. You have an income in Sri Lanka controlled from India. Is it taxable? Yes. Then you passed it again to India. No, because that is called remittance. Everyone, that is called what, guys? Remittance. Are you understanding the difference? So you will ignore what? Remittance. And one more thing you will ignore is past years. Which years, guys? Past years. Let me explain what I mean by this. I'm a ROR. Who am I? ROR. I earned some income abroad in the last years, previous years, which was untaxed. Which was, why, sir, untaxed? Because, guys, see, in India, agriculture income, except it's untaxed. So every country will have their own rules, and maybe their income earlier years was untaxed. Now I'm bringing it to India. Will you tax it? No, because it's which year? Past year. Which years, guys? So, guys, two things you have to ignore blindly. You have to ignore remittance. Repeat with me. Ignore and ignore past years. I call it RP. What do I call it, guys? RP. Remittance and past years you have to ignore. Are we okay? Guys, this is section 5. This is called scope of income. Guys, key things to remember. Dear. Dear plus 1. Do you remember CMS? Control, manage, set up. Global income, there's nothing to remember. And you have to ignore two things. Remittance and Past. When we solve sums, you'll be looking at this practically, and we'll see more of this. What is the D part? I'm not discussing right now, guys. That deemed income I'll discuss right in the end. Everyone, comfortable till here, guys. This is called scope of income. Now we come to the second part, which is called residential status. Everyone. Now, residential status means how do you become a non-resident? How do you become a resident? Like here in this classroom, guys, most of us stay where? In India. So we are what? ROR. Guys, ROR. We might travel abroad for a holiday, but we are more or less in India. Guys, someone who is only abroad, like my sister, she's only abroad, she comes to India for 10 days. Then what does she become? Because she doesn't stay too. But guys, confusion is when there's a pilot who travels abroad, India, abroad, India, abroad. So how do you figure out? We take help of a section called section 6.1. What is the section, guys? 6.1. This is residential status of whose, guys? Individual. I'm not discussing HUF. I'm not discussing company. I'm not discussing others because they never come in the exam. You can refer it from whichever book you're referring to. But I'm only focusing my energies on the section which comes in the exam. What is the section? 6.1 says residential status of you and me. We are who, guys? Individuals. For that, guys, they have set some conditions, and let's talk about the conditional, guys. So the first thing they say is that let's talk about some people, guys. Let's talk about a cricketer Virat Kohli. Then let's talk about let's say some minister Smriti Irani, and then let's talk about someone else. Let's talk about me, SM. So let's talk about 2-3 people and let's figure the residential status. The government says doesn't matter who it is, cricketer, pilot, it could be the prime minister. The first question you need to ask them that in this year, which year? This year. This year means which year, guys? Previous year. Your exam previous year is 23-24. In this year, have you stayed in India? What is SI? Stayed in India for at least 182 days. So what is this golden number, guys? 182. I call it Lakshman Rekha. What do I call it, guys? The moment you cross this Lakshman Rekha, 182 or more, you suddenly become a resident. What do you become? Not ROR, only resident. This Lakshman Rekha is only to make you a resident. So everyone, let's talk to Virat Kohli. Virat Kohli says for some reason I spent 200 days. How much? So guys, what will he become? Resident. Smriti Irani says I spent 300 days in India. Then what does she become? Resident. I say I spent 330 days in India. So what do I also become? Resident. Yes. Now let's talk to some IPL cricketer guys. Which cricketer? IPL. He says no, yeah, I didn't stay for 182 days. I only stayed for 50 days. How many days in India? Then we say which condition is not applying to you? The first one. We call it basic condition 1 as a shortcut, guys. What is it called? Basic condition 1. This is only a shortcut. Now, the first Lakshman Rekha is not crossing because he stayed in India for how many days, guys? 50 days. So we tell him, listen, if you don't cross the first Lakshman Rekha, we have another Lakshman Rekha called basic condition 2. Here we check in this year, that is 23-24, did you stay in India for at least 60 days? And in the preceding 4 years, which years, guys? Preceding means what? Not this year, guys. Before this, how many years? 4 years. So everyone, what is your exam year? 23-24. Can you tell me the 4 years before that? 22-23, 21-22, 20-21, and 19-20. In these last 4 years, total it up. And have you stayed in India for at least 365 days? So in this second condition, guys, they go to 2 parts. One is this year and one last 4 years. Basically, in a nutshell, they are just checking, are you in India very often? This year, how many days? 60. Last 4 years, how many days? That means you're spending a lot of time in India. If you cross this Lakshman Rekha, also you become what, guys? Listen. Guys, this IPL cricketer has come to India for how many days? 50. So has he crossed 60 days? No. So you don't worry, you're not crossing any Lakshman Rekha. If you don't cross any Lakshman Rekha, you become what, guys? So everyone, how many Lakshman Rekhas? 2. Do I need to cross both? No. Guys, ever played Kabaddi or ever watched Kabaddi? Guys, there are 2 lines. You have to touch even one, you're out. Are we okay with this? So same way, guys, how many conditions are there? 2. You cross even one resident, everyone. You don't cross any non-resident. Are we okay with this? Now, guys, this is 182 days. This is how many days? 60. This is how much? 365. Are we okay with the numbers here? Everyone. I'm giving you an example, guys. I crossed the first Lakshman Rekha. Resident. I crossed the second Lakshman Rekha. I crossed both. Why did you check for both? You have to only check for one. Even one you cross, you don't have to check the second. I didn't cross any Lakshman. Non-resident. Are we okay? This is the condition under which section 6.1, and this is only to figure whether you're a non-resident or a resident. Non-resident, don't bother them ever again in this year. They are a non-resident, they will remain non-resident. No further classification. But this resident can further be classified into what, guys? ROR or RNOR. We will talk about that also, but in 2 minutes from now. So right now, how many conditions? 2. We don't call them basic conditions, guys. In the exam, you write condition under section 6.1. Now, we'll take a small detour and we'll see how do you calculate this number of days. Guys, what is today's date? 20th November. Let's say I'm going abroad today, guys, 20th November. Right now, I'll go to the airport, take a flight and go abroad, let's say to Dubai. Now, the government says the day you fly out, the day you go out, that day we have to include in India. Everyone. So in November, 20th November, I'm leaving India. So how many days of November? 20 or 19? 20. The day you leave, everyone, the day you leave has to be included where? India. And let's say I come back on the 5th December. When do I come back? 5th. So do I include 5th December? Yes. Guys, the government is very smart. Every time you leave, 1 minute, every time you leave and every time you come back, how many extra days? 2. And with that 2 extra days, you'll become a resident. The government gets more taxes. Yes, think of it like this. Everyone repeating. The day I leave India, everyone repeat. The day I leave India and the day I come back, will it be added? Yes. So let's see how we calculate days, guys. I'm leaving India today. What is today's date? 20th November. And I come back on 5th December. When am I coming back, guys? 5th December. Guys, everyone take your calculators. We'll calculate number of days. It should be accurate, not even 1 day here and there. Yes. Guys, I'm leaving on which month? November. So April was a year. Take on your calculator, guys. April, May, June, July, August, September, October, and stop. How many days till here? 2, 1, 4. Now this is till October. Let's move ahead, guys. November. Everyone stop and to be very careful now. November, how many days? 19 or 20? Excellent, guys. So November, how many days? 20 days. December, guys, everyone, hear my calculation first and then you do the calculation. When did I come back? 5th. So now I'll tell you how to do the calculation, guys. How many days in December? 31. Don't calculate, guys. First hear me out. How many days in December? 31. Minus 5. Minus, because 5 days you were not there. But I need to include which day? 5th. So plus 1. Why am I doing this complicated thing? Because GST also requires the same calculation. So everyone, guys, I'm changing this. You came back on 16 December. Now tell me, guys. How many days in December? 31 minus 16 plus 1. Can you do this math, guys? 31 minus 16 plus 1. 16 days. So November 20, December 16, Jan how many days? 31. Feb how many days? 29. And March how many days, guys? 31. Please calculate these days also. How much? 341 days. Yes, people give me 2 numbers. You can't have 2 numbers, guys. You have to have only 1 number. Yes. Guys, avoid any mistakes in the exam because exam asks you 181 days. The last paper, guys, has asked 181. All these in the calculations in the air will cost you 1 attempt. I'm promising you. They always ask 60, 59 days, 60 days, 181 days. So make sure you're calculating very accurately. Yes. People who are still calculating, don't worry, but calculate accurately the first time only. Don't take any chances. No calculation on the fingers and in the mind. No Vedic maths, guys. Only calculator maths. Yes. All right. So this is the number of days. So please repeat, guys. The day you leave India and the day you come back will be included. Yes. Now, only for a person who's working on a ship, let's say I work on a ship and I am going from Mumbai to Singapore, coming back from Singapore, the government has made only one exception. That guy, we will not include which day? The date of leaving and the date of coming back. So example, same example, but if he's working on the ship, then in November, I will not take 20 days. I will take how many days, guys? 19. Everyone okay? In December, guys, 31 minus 16, but I will not add 1 plus 1. So repeating, everyone, please, this calculation, you're taking it lightly, but don't take it lightly. The day you leave India and the day you come back has to be added, except person who's working on the ship. Everyone clear? All right. Next, now comes the additional conditions, guys. So let's recap. Which is the condition under section 6.1? I just want the numbers, guys. In the previous year, 182 days. That's one condition. What is the second condition, guys? In the previous year, how many days? 60 days. And in the last 4 years, 365 days. And if you fulfill any Lakshman Rekha, resident. If you don't fulfill any, non-resident. Are we okay? Now, guys, let's go to the next conditions whereby a resident will become ROR or RNOR. These are called condition under section 6.6. What is the section, guys? 6.6. This basically we will only ask to residents. Whom will we ask this? So that they become ROR or RNOR. Are we okay? Now let's see what are these conditions, guys. I call it flashback. I call it which mode, guys? You tell me, guys, if I tell you last 10 years, which country do you see? India. Last 7 years, which country do you see? India. But if I say Elon Musk, last 10 years, which country? US. Last 7 years, which country? So answer is very easy. You don't have to do accurate calculations here, guys. Watch my shortcut. They say that in the last 7 years, guys, which years? Last 7 means, which is this year? 23, 24, your exam year. Before that, how many years? 7 years. Have you stayed in India for at least 730 days? Everyone. How many years last? 7 years. You stayed in India for at least 730 days. And next is in the last 10 years. Everyone. Last how many years? Last means before this year. Will you include 23, 24? Before that, how many years, guys? 10 years. Were you a resident in at least 2 years? Let me elaborate, guys. First, I'll give you a shortcut. This looks scary, but it's super simple. Guys, Virat Kohli, in the last 7 years, which country is he seeing? India. In the last 10 years, India. So both these conditions are yes without even checking. Narendra Modi, last 7 years and 10 years, which country? India. So guys, this is called flashback mode. In the exam, don't do accurate calculations. You get your answer instantly first. Now that you have the answer, you can go into details, but get your answer first very easily. Elon Musk. Yes. So what is the answer? No. As even one of them is no, you will become RNOR. If both of them are yes, what do you become? ROR. This may be a shortcut, I'll tell you. As even one of them is N, even one of them is what? N, you'll become RN. Not ordinary. Even one of them. So guys, what if the first one is N? Will I check the second one? No, you become what, guys? RNOR. So repeating, guys, both have to be yes, only then you become ROR. Now, guys, how do you check in detail? I'll tell you, guys. This is very simple. How many years? 7 years. How many days? 730. Exam question: a person is coming to India every year for 100 days. 100 into 7. 700. He is saying no to this question. Will I even go to the next question? No. Now, how do you, sir, figure the next question? I'll tell you, guys. In the last how many years? 10. No, second one. In the last how many years? What is this resident in 2 years? I'll explain, guys. Watch and hear me carefully. In the last how many years? 10. Everyone. In the last how many years? You are a resident for at least 2 years. Basically means, have you crossed any Lakshman Rekha? At least twice. Have you crossed any Lakshman Rekha? At least twice. So guys, this is your year. Which is your year? In the last how many years? 10 years. You have to cross Lakshman Rekha only twice. Any 2 years. And then you'll fulfill this. Guys, what is Lakshman Rekha? 182 also is Lakshman Rekha. 63, 65 is also Lakshman. Yes, that means you don't have to be a ROR or RNOR. You just have to be a resident. Yes, everyone. And I'm telling you guys, 99.99% you won't have to calculate this also. I'll tell you how. Mr. A is leaving India for the first time. Mr. A is leaving India for the which country does he see in flashback? India. Don't calculate. Yes, yes. Mr. C has visited India after 15 years. RNO. Guys, getting the answer. Mr. B is coming from Bangladesh after 1990. RNO. Because which country does he see? Bangladesh. Mr. P has never gone abroad and is going for the first time. RO. Are you getting the point? You'll get the answer immediately if you look at flashback. Everyone okay with this? More or less, guys, you never have to calculate this. If you have to, then you know how to calculate, guys. Last 7 years, 730. And the last 10 years, resident in at least 2. Means Lakshman Rekha has to be crossed at least twice. Everyone okay? So this is called additional conditions, but I never call it additional, guys. These are conditions under which section 6.6. Everyone is making good progress. While all this is happening, guys, remember basic condition 2 and basic condition 1. Can you repeat basic condition 1? Greater than or equal to 182 days. And do you remember basic condition 2? Which is that, guys? 60 days and 365 days. Now, the government is making a small exception. They are saying that there are two people called EV. Guys, who are these two people? EV, everyone. What's the new shortcut, guys? EV. And these two people, the government simply loves them. And government loves them so much that they say that listen, yeah, these two people, who are they people? EV. For both of you, we will only check one Lakshman Rekha. Which one? First. So which one will not apply to them? Second. Who are these two special people, guys? Let's hear them out. What is E and what is V? There is a guy who's leaving India for employment. Everyone, there's a guy leaving India for what purpose? He's an Indian citizen. Who is he? Sir, what is an Indian citizen? Your passport is Indian. Right? What is Indian citizen? Your passport is. You are leaving India for what purpose? Employment. Guys, you're a CA. You got your degree in India. You're getting a job in Dubai. You're leaving India. But why is the government loving you so much, guys? In Dubai, what will you earn? Money, dirhams, and you'll spend it in India. In US, you'll earn what? Dollars, and you'll send it to your mother in India. So, guys, the government loves you because you're earning what? Dollars, foreign currency. So, everyone, please repeat, guys. What is E? Employment. This is an Indian citizen who's leaving India for employment. For this guy, which condition will we check? Only one. If he crosses 182, resident. If it's less than that, non-resident. Don't even go to the second condition for him. And what is this V? Guys, visit. Again, guys, he's an Indian citizen. Who is he? Or someone whose origins are Indian, guys. Everyone. Indian citizen or someone whose origins are Indian. Guys, Indian citizen, the best example for this one is Priyanka Chopra. She has an Indian passport, but now she stays where? In the US. Does she visit India? And every time she visits India, she spends in dollars, guys. Buys a house, buys a new car, hires people. So everyone, who is this guy? Indian citizen or PIO, person of Indian origin. I'll tell you what is PIO meaning. But guys, they are doing what? Visiting which country? India. And why do we like them? They will spend what? Dollars. One is earning dollars, one is spending dollars. And hence both these people, guys, we say that we will only apply one Lakshman Rekha to you, which is how much? 182. You cross that? Resident. You don't cross that? So Priyanka Chopra, every time she comes to India, she has to just make sure she does not stay in India for 182. Because only one Lakshman Rekha applies. Are we okay, everyone? Everyone, what is E and what is V? Main word. E is you are employed abroad. And V, visiting. You're visiting India. Both these people, only one Lakshman Rekha applies. Which one, guys? First one. Everyone. You know Indian citizen. What is PIO? Your origins are from India. Guys, you were born abroad. You've never come to India, but your parents were born where? India. Mom, dad, or dad. Mom or dad. Grandmother, grandfather. Nana, nani, dada, dadi. Any one, even one seed is from where? India, you're a PIO. Are we okay? So I'm giving you examples. You tell me PIO or not. Siddharth Malia, son of Vijay Malia.
Yes.
Is he a PIO? Because Vijay Malia was born where, guys? India. Yes. Sundar Pichai's son in the US. Yes, because Sundar Pichai was born where, guys? India. Are we okay with this, guys? Yes. So we understood some concepts. 182, 60, 365. Calculating number of days, you understood that. Person working on a ship, you understood that. Additional conditions, how many years? Last 7 years, last 10 years. Pro tip, calculate 7 first. Very easy. And if that is N, don't even go to the second because that person becomes RN. And EV, employment and visiting, only check for which Lakshman Rekha first. Are we okay, everyone? All right. And now time for an amendment. Everyone, small amendment here. Watch very carefully, but very important nowadays for the exam question. Yes, everyone, doing very well. We're almost on the border of completing this discussion. And guys, concept, let it be just 20%. We'll spend 80% of our time doing sums. You'll see yourself getting better. Yes. All right. Now, guys, there is a person. Let's call him Mr. A, guys. Who is this person? Mr. A. And for this year, he's happily becoming a non-resident, guys. What is he becoming? So he will be taxed on 4 incomes. Can you tell me the 4 incomes? Dear. He is very happy because he's only taxed on 4 incomes. But the government has some other plans. The government wants to build a new airport in Bangalore. They need money. They want to build new metros, new bridges. They want what? Money. So they say, listen here, Mr. A, who are you right now? Non-resident. Can we try? We'll not force you, but can we try to convert you? From a non-resident, can we convert you to what, guys? Resident. He's like, how can you do that? I am happy being a non-resident. We say, listen, we'll not make you ROR. We'll make you only what? RNOR. And basically, this is called tax conversion. Very unlike a religious conversion. Yes. So this is tax conversion. Again, we're not forcing you. We're just trying you to convert from where, guys? NR. You right now who? Non-resident. We are happy that you're non-resident, but we'll try to convert you to what? RNOR if possible. If possible. Everyone watch very carefully. Something very important. Amendment. Now he says, okay, government, if you want, check. Because here the government gets how many incomes? 4. Here they'll get how many? 5. So the government to earn that extra income is trying this conversion. Let's see how you can convert. So this conversion works when you fulfill 3 conditions called A, I, C, 1. What are the 3 conditions, guys? A, I, C, 1. Who are you? What are we trying to convert you? How many conditions you have to fulfill? 3. If you fulfill all 3, RNOR. Even if you don't fulfill one, we'll let you remain as non-resident. We won't bother you. First, guys, this conversion only applies to Indian citizens. Which citizens, guys? So Mr. A should be Indian citizen. Everyone. Next, this conversion only applies if you are Indian income. What is I for? Indian income. Repeat, guys. Which is this? Indian income if it's more than 15 lakhs. That means, guys, you should be earning good amount of money in India. You should be rich. Shortcut is you should be rich. You are earning 2 lakhs in India. How much? Then you stay non-resident. We don't want it. We want to convert only which people, guys, who are rich, so that we can get more money from them. Yes, everyone. Yes. So what is A for? Applicable. It is applicable only to Indian citizens. Only those whose Indian income is more than 15 lakhs. Everyone okay? Yes. Indian income 2 lakh. Don't even bother. Indian income 20 lakh. Yes. Now we are interested in you. We might convert. And last, guys, this condition. If the exam says that Mr. A is someone who is not being taxed in any country as a resident, guys, let's say he is in Dubai. Does Dubai tax you as a resident? So in the exam question, will be very particular. He is not being taxed in any country as what, guys? Resident. And we tell Mr. A, no country is taxing you as resident. You might be feeling bad, but we'll tax you as a resident. Everyone, AIC1 has to be really strong. Please tell me AIC1. Only to Indian citizen. Mr. A is an American citizen. You stay as a NR. Mr. A's income is 2 lakh. NR. So all the 3 conditions are to be fulfilled. Can you repeat the C1? Condition 1. You can be taxed, but not as a, and if no country is taxing you as a resident, I will tax you as a RNOR. Are we okay with this? So AIC1, guys, let's say he fulfills all the 3 conditions. Congratulations to India. What does he become? RNOR. And this is called deemed resident. What is it called? Actually is who? Resident. Sorry, actually is who? Non-resident. But we are assuming him to be what, guys? Resident. So this very important concept now is called deemed resident. What is it called, guys? Deemed resident. If it's confusing, I'll give you a pro tip in the exam. How do you figure this? In the exam, if Mr. A is a ROR, who is he? Will you check for this amendment? Not at all. If he is a RNOR, will you check for this amendment? No. Only if he is what? NR, and that to a rich NR. So we are only targeting which people, guys? Rich NRs. And we are only going to convert them. So in the exam, your answer is ROR. Will you apply this amendment? No. RNOR? No. Only NR, which are rich. Everyone. Now, for some reason, guys, this AIC1 is not getting fulfilled. So then we tell him, listen, we won't give up. We want to convert you to what? RNOR. We'll try for AIC2. Everyone. AIC1 or AIC2. Same, guys, same. Here also it is applicable. This conversion we will apply only if you're a Indian citizen or PIO. Is your Indian citizen. Here So AIC2 applies to two people, Indian citizen also, PI also. If your Indian income is more than 15 lakhs, same. And this condition, we say everyone watch out. AIC2 now, everyone. What is it? Applicable to Indian citizens and PIO. What is I? Indian income more than 15 lakhs. And we'll ask him this one condition, which is similar to basic condition, which is similar to what? It is not basic condition, it's similar to that. That in this year, how many days? And the last 4 years, how many days? 365. If you fulfill this, only thing 60 has been replaced by 120. That's why I'm saying it's similar to which condition? Basic condition 2. This year, 120. So guys, let's go. Everyone forget AIC1 for the next 2 minutes. Let's talk to Mr. A. Mr. A, are you an Indian citizen or a PIO? He says yes. Mr. A, are you rich? How rich? More than 15 lakh. He says yes. Mr. A, this year have you stayed for 120 days? He's like, no, 20 days. Then you remain NR. We will only convert you if you stay in India a lot. More than how many days? 120 or more. And last 4 years, 365. Are we okay? Everyone dividing the class AIC1, AIC2. What is A? Indian citizen. Indian citizen or PIO. Indian income? More than, not more than equal to, more than 15 lakhs. Same. Condition? You should be taxed, but not as a resident in any country. Condition 120, 364. If you fulfill AIC1, will I check for AIC2? No. But if I don't fulfill AIC1, I will check for AIC2. In the exam, pro tip. If he's a rich NR, everyone, if he's a only then, otherwise don't even look at the conversion. Guys. Only if you're a rich NR, I'll try and convert you. Exam question, NR, 3 lakhs income.
No.
Remain NR only. We are not interested only in such NRs, guys. Literally, guys, we are not interested in such NRs. Yes. But a rich NR? Yes. Now, only point is, sir, what is Indian income? Everyone, what is Indian income? Yes. You want some coffee? I have some here. Yes. No, that guy is sleepy the guy behind you. Not behind you, in the middle only. Yeah. I can understand afternoon time, but yes, try and be awake. Now, what is Indian income, guys? Everyone, what are you trying to convert? NR to what? RNOR. And guys, so we are trying to bring him to RNOR, and RNOR is taxed on which income? DR plus 1. So this Indian income is DR plus 1. Everyone. Just repeating. Guys, Indian income should be more than how many lakh? Everything you understood. Only one thing is a gap, maybe, that what is Indian income? And if you're ever confused, we are trying to convert NR into RNOR. So we take RNOR's income, DR plus 1. Are we okay with this, guys? Yes. Guys, this is the chapter except the deemed income part. I think we're done with all of it. Yes. But I'm going to recap. You tell me if you understand the concept, right? Section 6.1 is for residential status of individuals. This year, 182. If I cross it, resident. If I don't cross it, wait. Next Lakshman Rekha. 60, 365. If I cross that, resident. If I don't cross any Lakshman Rekha and non-resident, we won't bother you the entire year. Don't worry about it. Next, if you're a resident, I'll bother you again. ROR, RNOR. Based on which mode? Flashback. If you see India, ROR. If you don't see India, RNOR. How many years? 7 years and 10 years. 7 years, 730 days, and 10 years, resident at least 2 years. If both are yes, ROR. Even if one of them is no, RNOR. And while calculating number of days, when you go and you come back, +1, +1. Ship? No. So basically, ship people will lag behind by how many days? 2 days for every trip they make. Yes. So if you and me, you are all on working and not in ships days, then let's say your calculation is 200 days. If I am on the ship, my calculation will be 198. Yes, 2 days less. Yes. And last, guys, I'll try to convert you from an NR into RNOR, but only if you fulfill AIC1 or AIC2. Everyone. And what is I in that? Indian income. What is Indian income? DR plus 1. Everyone okay with this, guys? But sir, he's a NR. No, why are you calculating DR plus 1? Because we're trying to make him what, guys? R. Everyone okay with this? If he does not fulfill AIC1, AIC2, that also does not fulfill, then NR, remain NR, don't worry. So basically, guys, over a nutshell, macro, guys, why are we doing this conversion? One extra income. That income which is controlled, managed, or set up from India, the government wants to tax that. And hence, this concept is called deemed resident. What is it called, guys? deemed resident. The section is 61A. What is the section? 61A. If you want to ever do the similar recap, watch that video. We've done the same recap in that video also. Everyone okay? Okay. All right. Now it's 5:20. For the next 10 minutes, let's look at the deemed income, those income, and then we take a break. We come back fresh and we solve sums. Yes. All right. Now, while all this is great, guys, please tell me what is dear? Reverse. Reverse. R is received. A is accruing. E is and D is deemed. Now, I just want to talk about the deemed income, guys. So, I'll talk about deemed income. But what is deemed? I'll tell you. There are 8 incomes, everyone. How many incomes? 8. Where the Indian government felt that there is some Indian connection. Which connection? Some small Indian connection is there. And the government says, listen here, I can sense an Indian connection. So these 8 incomes earned by a non-resident, everyone. On the screen only, please. Yes. Who is this person? Non-resident. And this non-resident is earning how many incomes, guys? 8, which have which connection? India. So then the government says, listen here, this has an India connection, we will tax it. And your job in the next 10 minutes is just wherever I explain, you have to spot the India connection. When you spot the India connection, then you give up, no problem. After that, you don't have to understand. Guys, there are 8 incomes. I'll just list them down here, guys. The shortcut is ISSD. Everyone, repeat the shortcut with me. ISSD IRF gifts. Guys, everyone, can we repeat the shortcut again? ISSD IRF gifts. How many? 8. 1, 2, 3, 4, 5, 6, 7, 8. All these 8 incomes, don't worry. I'll explain to you very briefly. All you need to understand is which connection? India. The moment you see India connection, it will be taxed. And very justifiably, guys. Someone is coming to India making some money. Why shouldn't we tax it? Yes. All right. Guys, taking all these incomes from whose perspective? Non-resident. So let's assume there's a non-resident. Let's call him Mr. A. Who is this person? Mr. A. And let's assume he is abroad, guys. Where is he? And all these incomes have some connection with India. Let's see if you can spot the India connection. Let's first talk about D. Dividend. What is D for? There is a company in India, let's say Zomato. What is the company? Zomato. And Mr. A is having shares in Zomato. Why does he have shares in Zomato? And Zomato has paying dividend, guys, everyone. This is dividend of 10 lakh rupees. Let's consider the amount is 10 lakh. Guys, please tell me this dividend is coming from which company? Indian company. Do you see a India connection? Yes. So should we tax it? Yes. Who's earning it? Mr. A. He will be taxed on the 10 lakh because the dividend from which connection? India. Are we okay with this? Next. Salary. Everyone, what is this? Salary. Mr. A. Forgetting Zomato now, but same person, guys. We'll give the same person. Mr. A is from Japan. Where is he from? Japan. And he's an expert. He's a PhD holder in making metro trains. Which trains? And he's being invited by Bangalore to make Bangalore's metro. He has helped make the Bangalore metro. Some designs he did from Japan, some he did from India, and he's being paid for his services, guys. 10 lakh rupees. How much? Please tell me, guys. Where is this person? Japan. Everything. Let's say he designed all of this in Japan, but the services were rendered where? In India. Is there an India connection? Yes. So this 10 lakh, guys, services rendered where? India. Dividend received from Indian companies. Do you see an India connection? Yes. Next. I'm just changing Mr. A. Here, guys, let's call him again Mr. A only. He's a non-resident. And he's given a loan, guys. What is he given? Loan. Let's say he's given a loan to a company, let's say Geo. It's everyone. There is Mr. A abroad. He's given what? Loan. To whom? Geo. Geo wants to build new telecom towers, so they've taken a loan from Mr. A, and Geo is paying him interest of 10 lakhs. How much? 10 lakhs. Everyone. Is this interest? Where is it being earned? India. No. Actually, he's saying it's US. But we say, listen, yeah. We asked Geo, yeah, did you borrow money from me? He said, yes. I said, for what purpose? He said, I used it for a business in India. Guys, where is the use? Business. In India. Everyone. Used in India. Guys, again, I repeat. What did A give Geo? Loan. And that loan was used where? In India, guys. So we have to check usage, guys. Used where? In India. If it's used in India, then Geo is paying interest of how much? 10 lakh. That interest will be taxed in India. Yes. Everyone, I'm going to repeat this so that you get clarity. There are two things. Loan also, interest also. Loan is never taxed, guys. Loan is That's not an income. You will pay it back. But the interest shouldn't be taxed in India. The word is used in India. Same but different. Loan was taken by whom? Geo. But they used it for telecom towers in Sri Lanka. No. Then India government cannot tax because it was not used where. So usage has to be in India. Only if it's used in India that money can be taxed. So what is I for? Interest. The loan has to be used in India. Same R, same F, guys. Watch out. Only thing is now Geo is not taking money, but Geo is taking a patent. Guys, everyone. What is A giving Geo? Patent. Repeat, guys. What is they giving? Patent. And for that, Geo is paying what, guys? Royalty. Everyone. What is this? Royalty of 10 lakh rupees. Everyone. Same concept. I was interest. R is. We asked Geo, the Geo, yeah, what did you take from Mr. A? He said, I took a patent. For what? To used in a business in India. If it's used in India, this royalty will be taxed where, guys? In India. Usage in India. Can we repeat? Usage? But Geo says, no, sorry, I forgot. I used it in Sri Lanka. Then no. It has to be used where, guys? In India. Next. Fees for technical service. What is F? Fees for technical services. Again, who is the person? A. This time Geo said that, listen, A, I heard you make a very good app. He said, yes, I make a very good app in 10 days. Can you make the new Geo app? He said, yes. And he's making what for Geo, guys? App. For which Geo is paying him how much, guys? 10 lakhs. This is fees for technical services. Can we repeat? Fees for technical service. I know this sounds confusing, all this, but just, guys, see the India connection. We asked Geo, what are you taking? He said, technical services. For what purpose? To develop an app in India. This is an India connection. So this 10 lakh will be taxed where, guys? In India. Oh no, sorry, I forgot. I used it for making an app in Bangladesh. No. It has to be used where? In India. So repeat, guys. I for interest. R for F for FTS. All these three incomes. Why are we so interested for someone who's sitting abroad? Because the money or the patent or the technical services were used in India. This usage we will only check when it's Geo, Adani, etc. But what if all this was used by government of India? Then if it's government of India, we will not check usage because who is using? So we will not check usage. Yes. Everyone. Geo, will we check usage? Yes. But for government of India, we will not check. Everyone. I know this might sound a little complicated till you get the sums, guys. Then it will be okay. Can you repeat the 8 income, guys? I, S, S, D, I, R, F, gifts. F, fees for technical services. R, I, interest. D, dividend. And S, services rendered where, guys? In India, used in India, received from Indian companies. Which connection? India. Next, guys, last two or last three. Very quickly, let's have a look at them. Gifts. I'm a resident in India, guys. Where am I? Resident. I'm in Jayanagar. I'm in Bangalore. I'm a resident. And I have some good amount of money, but I don't want to pay tax. I have a sister, brother, cousin, guys. Let's say I have a cousin in UAE, guys. Where is my cousin? UAE. I call her up and I say, listen, yeah, you're my cousin for so many years. Rakhi gift I have not sent you. This year I'm sending you 50 lakh rupees, guys. How much? 50 lakh. Straight Rakhi gift of 50 lakh. It's a fake gift. You tell her, listen, it's not a gift. You invest where? In UAE. Earn income where? UAE. What is the tax? 0. When you come back to India, wear a nice gold chain, give it to me. So people plan it, guys, like this. People are very creative. So the government got this, that people are giving gifts abroad just for the heck of it. And from there, they're earning what? Income. Guys, find the loophole. There is no loophole. I'm sending how many lakhs? 50 lakhs as a gift to my cousin. Now she is invested in Dubai and she's earning tax-free income there. And when she comes to India, she'll wear what? Gold chain. She'll just pass the gold chain to me. I've earned the income without any tax. So the government made it very clear. You want to gift an iPhone? Give. You want to give a nice Gucci bag? Give. You want to give anything? Give. But if you give in terms of money, if you give in terms of money, if you give more than 50,000, how much? More than 50, we will not tax you. We'll tax your sister. So guys, the punishment is not on you. The punishment is on the non-resident abroad. So next time when you want to send her a gift, she'll block you. She'll say, I don't want a gift because I'll be taxed. Everyone. So please tell me, gifts more than how much, guys? From an exam perspective, let's see, guys. Who is paying? Resident. Everyone. Who's paying? Resident. To whom? Non-resident. Gift of more than 50,000. Entire amount will be taxed. Not in your hand. Not taxed. Are we okay with this? Everyone. Next, S and I. Don't worry, guys. This all theoretically sounds very complicated. In the exam, it's very simple. There is a Mr. Thomas who's in Japan. Everyone, Mr. Thomas sitting in, he's earning royalty from a patent used in India. But he's in Japan, no? Using it. It's very simple from an exam perspective. When you learn it, theoretically, it sounds complicated. Yes, everyone. S. Guys, there is a government of India. Who is this? Government of India. And did you know, and I'm sure you do because you study tax, that they have people who work for government of India abroad in the embassies. Where, guys? So there is an embassy in France, guys. Where is the embassy? France. This is which embassy? Indian embassy. Who works there? People like you from government of India, they get employed there. So let's call him Mr. A, guys. Who is this? Mr. A. He is an Indian. But working in France. For whom? Not Reliance, not Kotak, not Mahindra. He's working for government of India. Now, government of India has a pact with foreign governments, guys, that when I pay their salary, where is the salary being received? France. Where is it being earned? France. Everything is happening in France, but the government has a pact with them called We Tax Our People. So everyone who working abroad for whom? Not for Infosys, not for Wipro, but for government of India. Everyone, let's take an example, guys. The salary is 10 lakh. Everyone, how much is the salary? Please tell me where is it received? France. Earned, France. Spent, France. Everything, France. But it will be taxed where, guys? In India. So Mr. A, you are only because he's working for the government. Guys, what if I change it to Wipro? Then, guys, where will he be taxed? France. So again, I'm changing it, guys. He's working for whom? Government of India. How much is he earning? 10 lakh. Will he be taxed? In which country? India. We tax our people. Repeat the shortcut. We tax all the shortcuts in the quick book, guys. Now, guys, in 10 lakh rupees in France, nothing happens. France is very expensive. So we pay him 10 lakh salary, but we say, listen, yeah, sorry, 10 lakh, nothing will happen. We'll pay you some extra allowances. We'll pay you some rental allowance, petrol allowance, food allowance, and we pay him some 7 lakh extra allowances. Guys, what are these? Allowances. These allowances are exempt. India will not tax it under section 10(7). Guys, what is the section? I know it is complicated. That's why I'm doing this part right in the end. But don't worry, in the exam question, you'll get it right. There is a person working for the government of India in Bangladesh. In Bangladesh. He is earning salary. Tax where? We tax our people. He is also getting 6 allowances, 7 allowances, 8 allowances. Not tax. Exempt. Are we okay with this, guys? Yes. And the last is I, and then we can take a break. Guys, I is a very funny income which is earned by foreign companies. Which companies? Foreign companies. Example, OnePlus China. Is which company is this? OnePlus China. Beautiful phones they make in OnePlus. Sometimes green line also comes in. Yes. But otherwise the phones are very good. Where are the phones made? China. By which company? OnePlus China. Chinese company. In India, there is no OnePlus India. They don't set up a company where? In India to avoid tax. Guys, they are sitting comfortably where? In China. Shanghai office. Make phones, they sell it and they ship it to India. And they ship it to what's her name? Samrit. Guys, Samrit is in Bangalore. And he is a mega distributor of mobile phones in India. He knows every Sangeeta mobile. He knows every Chroma. He knows every Reliance Digital. So, guys, OnePlus China does not have a company in India. They sell it to whom, guys? Samrit. He holds the stock. He sends the goods to Sangeeta Mobile, Chroma, Reliance Digital, and he sells phones worth 100 crores. Guys, how much? But whose sales is this? OnePlus China. How many crores? 100 crores. And Samrit for that, Samrit, right? Yes, for that he getting a commission of 80 lakhs. How much commission? Samrit in India pays tax on this 80 lakhs. So he is very clean. But the government says, where is the tax on? 100 crores. That should go in PGBP. They go to Samrit. Samrit says, go to China. China says, we don't know. He sold the phones. So guys, there is a confusion. Lots of people would do that. They would sit abroad. Everyone. They would sit and they would run their businesses in India through an agent. Everyone through a agent. The government realizes, where are you sitting? Abroad. No existence in India. But in India, you have a agent. This agent from now onwards will be called a business connection. What is this agent called, guys? And the government has made a rule that, listen, from the business connection, whatever income you're earning, how many crores? They will tax you in which country? India. So Samrit will not be taxed. Who will be taxed? OnePlus China. But guys, don't get me wrong. I'll not tax 100 crore. 100 crores my income. Can I minus expenses? Yes. And the net profit is 10 crore that I will tax. Are we okay, everyone? So I is what? Income. Repeat. I is what? Income from a business connection. Repeat. Income from a business connection in India. Now repeating all the keywords of ISS, the IRF gives. The section is 9.1, guys. What is the section? 9.1. And 9.1, this is 9.1.1. What is this? 9.1.2. What is this? 9.1.3. 9.1.4, 5, 6, 7, 8. You can quote it in the exam also. Yes. So recapping the section, guys. Section 9.1 is all about deemed income. Deemed means which connection? India. How many? 8. I'm telling you, tell me the India connection. Income from business connection in which country? India. Salary received paid by which government of India? We tax our people. Services rendered in India. Dividend from Indian companies. Interest, royalty, fees for technical services. All three used in India. Money used in India. Patent used in um, technical services used in India. And gifts given by a resident in India more than 5,000. 10,000, 50,000. Are we okay with this? And all these incomes, guys, who's earning? Someone sitting abroad. But there is which connection? India. So Indian government telling them, listen, all these 8 incomes you might earn wherever, but I see which connection? India, so I'll tax it. Only one thing we missed out. In I, there's an exception, but I don't want to teach you right now, guys. When we come back from the break, I'll teach you the exception. Yes. So right now it's 5:35. When we come back from the break at about 6-ish, we'll look at sums. I'll teach you the exception also. Back to back sums we'll do. And once we are comfortable, only then we'll move ahead. Yes, everyone okay? Yes. All these, whatever we discussed, is first in the revision video and second in the quick. Yes. And I'll also upload the handwritten notes for you to refer in case you want. Yes. All right. I'll see you guys back at 6, guys. Thank you. People online also, I'll see you guys back at 6, stopping the recording here. All right, back again, guys. After an interesting discussion on residential status and scope of income, one question is asked, which is pretty interesting here. He's saying, Dhanush, is if you go out of India on one particular day, example in the morning, guys, you take the flight and you go to Dubai and you come back on the same day, what happens about that day? Now, whenever I come across something like this, I start thinking like the government, guys. Yes. Have you left in the morning? And have you come back? Yes. So will you include that day? Of course you will. So you will add how many days, guys? 1. Of course, you don't add 2 days then. You'll add only 1. So Dhanush, I hope that question is answered. Good question there. Yes. Now we move ahead. We've discussed almost everything except that one there's an exception. So I want to talk about that. It'll take us just 2-3 minutes to discuss it before we can move to questions. Guys, can you tell me the 8 deemed incomes? ISSD, IRF gives. Yes, in that, guys, this exception is only for I for interest. So in the exam, if there is a question on interest, only then this exception will apply. Let me tell you a little about this. There is non-resident one, guys. Who is this? Non-resident one. He is where? In which country, guys? Abroad. Where is he? Abroad. Who is he? Non-resident one. He is giving a loan to non-resident 2. Everyone. Non-resident 1 is giving what? Loan to whom? Non-resident 2, and for that non-resident 2 is paying what? Interest. Now both of them are where? Abroad. Then he is earning interest of 10 lakh. If both of them are abroad, then why is the Indian government so interested in taxing them? The Indian government says, don't worry, I will not tax this money unless this money has been used where? In India. Are we aware of this concept till here, guys? Yes. I'll tell you the exception right now, but this concept is because the money was used where? In India, the Indian government can tax it. Used in India for what purpose? It can be used for a purpose of business. Example, Yeshas Academy, Geo, etc. It can be used for the purpose of profession, like CA, firm, doctor, etc. Or it can be used for any income generating activity. What is I for? Income generating activity, like buying shares, etc. Now, the government now wants actually people abroad to invest in India, Indian shares. So the government has said that we'll make an exception. If it's used in India for business purpose, which purpose? Business, then we'll still tax this. If it's used in India for professional purposes, then we will also tax it. But if this money, example 1 crore, how much is this money, guys? 1 crore. If it's used to invest in the Indian share market, debenture market, bond market, that is income generating activity. Which activity? Then in that case, this income generating activity, are you using it in India? Yes. Still the government does not tax it. So what are the 3 cases uses, guys? Used for business, used for profession, used for income generating activity. Business, no change. Used in India, taxed. Profession, used in India, taxed. But income generating activity, if it's used, it will not be tax. So example guys, non-resident 1, non-resident 2. Use the money to buy shares in Indian stock market. Will the interest that goes out, will it be taxed? No. They use it to expand geo network in India. Yes. They set up dental chains across India. Yes. Only for income generating activity. What this does is this encourages foreign investors, FIIs, to invest where? In India. And even if they use borrowed money, then interest we will not tax. Are we okay? That basically gives a certain push to the Indian stock markets. Yes. The logic. Alright. Of course, the exam will not ask the logic. They will just. And how will you identify this exception is there? Interest. Only which one? Interest. This does not apply to any others but to interest. And it is between two NRs. Yes, two NRs. Everyone okay? Alright, so this is the chapter. Now back to back, guys, we look at questions. Everyone, we'll discuss all and then we'll solve a few. Yes. So taking us to the drive. Here is the drive. Here are the ICA material. Here are the Word documents. This is residential status and scope of income. You should have your ICA material open. You should have a calculator handy and let's discuss these questions. If it's easy, mark E, otherwise mark D. Let's first go to the questions here. Yes. Dividend will be charged. But you know, dividends is a very small part of FII's income. FIIs mainly buy shares, sell shares, and they make that income. So, example, let's say you are an FII and she's an FII. You all both are in US. She's given you a loan and you invested that money in India and you bought Zomato shares. Now, have you used it in India? When you pay her interest, we won't tax it. But when the Zomato shares are sold, we'll tax you. No. Okay, there are 2-3 transactions. You're looking at all of them together. Guys, good question. Hear me out. Both of them are where? US. She's given him a loan of let's say 100 crores, bigger numbers, 100 crores, and he's used that 100 crores to invest in which market? Indian market. Yes, he's bought Zomato shares. Now, is it used in India? Yes. So he'll be paying her on the loan interest. That interest we are not bothered with because it was used for income generating activity. But guys, he's bought which shares in India with 100 crores? Zomato. If he sells it for 105 crores, how much profit has he made? That will tax. Dividend also will tax, but only the interest element will not tax. Are we getting it, guys? Everyone. Only which part we are not taxing? Interest. Yes, getting it? She won't be taxed. Yes. She won't be taxed. Absolutely. Alright, so here we go, guys. Everyone, let's start looking at the questions. About 1, 2, 3, 4, 5 questions here, and then we'll do the illustrations as well. Let's do this quickly. If it's a difficult one, we'll mark D and we'll practice a few as well. Let's start immediately, guys. Mr. Ram, an Indian citizen, left India on which date? 22nd September 2023 for the first time, guys, in his flashback mode. Which country? India. So if he becomes, I'm not saying he will, if he becomes a resident, he will be ROR. To work as an officer of a company in which country, guys? Germany. Determine residential status of Mr. Ram. Guys, Aman, yeah, of course. But guys, no. ROR is wrong answer. If he becomes a resident, he'll be ROR. Yes, guys, 1 minute. We are jumping to additional conditions. Yeah, we have to first check basic condition, guys. Please tell me the first condition. 182 days. Let's check for 182 days, guys. Everyone, start and go till 22nd September. April, May, June, July, August, 22nd days of September. How many days, guys? 175. Is he fulfilling this condition? No. What's the second Lakshman Rekha?
60 days.
But that will not apply to him because EV. Guys, what is EV? Employment. Is he someone who's going abroad for employment in this year? Then this will not apply. So guys, none of the basic conditions. So he's becoming what? NR. ROR was a wrong answer. By chance he became a resident. Then ROR. He's not become a resident only. Guys. Everyone okay with this? Yes, yes, yes. So that is question number 1. I will mark this D. I'll do this once again. Now, how do you present this question in the exam? Guys, I have a formula of FLC. First the facts, then the law, and then the conclusion. Everyone, facts, law, conclusion. Let's try and attempt. If you are supposed to write this question in the exam, what are the facts? Mr. Ram is a Indian citizen who has left for employment abroad. He has spent during the year 23-24. He has spent how many days in India? 175 days. That's a fact. Next paragraph, law. As per section 6.1, he does not stay in India for 182 days or more. The second condition under section 6.1 does not apply to him. He is an Indian citizen leaving India for employment. Since he does not fulfill any of the above conditions, he will be considered as a non-resident. Conclusion: thus, Mr. Ram will be considered as a non-resident for AY 24-25. Can someone still confirm why is he not a ROR? Because the ROR, first he has to become what? Resident. He is not fulfilling, he is not crossing any Lakshman Rekha. Are we okay? Yes, okay, yes, okay, okay. Everyone there, at the back run off, okay. Alright. Guys, let's look at the next question. Mr. Day, residing in US since which year? 1990. Stop. Just asking you. In his flashback mode, guys, which country will he see? US. So in case, 1 minute, I'm not saying it is always, in case he's a resident, he will be RNOR. In case he's a resident. Alright. Guys, he visits India for how many days? 30 days every year. He came back to India on 1st April 2022 for permanent settlement. What will be his residential status for previous year 23-24? Guys, what is the first condition? 182 days. Let's check, guys. In this year, is he here for 182 days? Yes. Guys, he came last year on 1st April. Then he's here only. So is he fulfilling the condition? Yes. So what does he become? And now that he's a resident, guys, he will definitely become RNOR. I'll check also. But right now, guys, which country in this flashback? US. Now let's check. Everyone with me. Let's check. In the last how many years? 7 years. And in the last how many years? 10 years. Stop. Last means what?
Previous.
Yes, last means preceding. Last means before which year? 23-24. Which was the year before that? 22-23. How many days he came? Full year. So how many days? 365. Has he crossed 730 days? No, guys. Only how many days? 365. That is N. Will I check the second one? No. I'm telling you guys, all this, don't waste your time. Just ask yourself one thing. Which country is he seeing in flashback mode? US. Is he seeing India? No. So RNOR. How will you present this? Guys, tell me the facts. Mr. Day visits India for how many years? 30 days every year. In the previous year, 23-24, he has stayed for 366 days. Next. He is fulfilling the condition of 182 days and hence he will become a resident. However, he does not fulfill the conditions under section 6.6 and hence he will be considered as a resident but not ordinary resident. Are we okay with this, guys? Yes. Everyone. And if the marks are many, you can write the additional condition also. In the last how many years? 7 years. And in the last how many years? 10 years. And he's not fulfilling those conditions. Yes. As you can go in detail also, but you'll be wasting your time. Go into flashback mode, will save you a lot of trauma. Otherwise, guys, this 7 years and 10 years will take you a lot of time. It will bother you unnecessarily. Yes. Alright. Yes. Guys, going to question number 3. We'll do this question in the end, guys, because see how many incomes are there. Okay, only 10. We can do it now only. Yes. Yeah. Leave it. We'll move ahead. Fast track. So we'll come back. If you have a doubt, I'm here after class, guys. Mark it. We get back after class. Don't miss on the next question. Yes. All right. And if you have a major doubt, ask me right now. Yes. So what's your doubt?
You're thinking of since he has visited 30 days every year.
Yes.
Does the aggregate cross?
It doesn't. Yeah.
So
More marks than you have to show the working also.
Yeah, we can show the working. So I'm not against showing the working, but even if you show the working, you'll get the same answer. What I'm trying to tell you. So let's show the working, guys. In the last how many years? 7 years. Guys, last year how many days? 365 plus how many? 30. Even if you show, guys, he has to cross how many days? And even if he crosses that, forget, even if he crosses that, guys, then in the last how many years? 10 years, he has to cross the Lakshman Rekha in how many years? 2 years. He is not crossing the Lakshman Rekha because there is Lakshman Rekha, first Lakshman Rekha, 182. Second Lakshman Rekha, 60. He is not crossing it. In 2 years, he has to cross it. Yes, I'm telling you guys, you are going in a different direction. This will confuse you. Yes, more than showing the right answer, first get the right answer. If you go into this kind of detail right now, you'll confuse yourself. Ask yourself first, are you understanding flashback mode? Yes, everyone, I want answers. Are you understanding flashback mode? Mr. Day, which country is he seeing in flashback mode? US. Is he a resident? Yes. What kind of resident then? RNOR. Get your marks. Now, if you want to explain, go into one day also, no problem. But the moment you go into one days and you don't get the right answer, I have a problem. Yes, everyone okay? So you have to first get the right answer and then support it with your explanation. All right. Now, guys, there's the next person or next sum. There are two people here, Suresh and Ramesh. Read the question. Guys, who is in India? Suresh. He's settled where, guys? In Delhi. Let's talk about first Suresh, guys. He's a ROR. Who is he, guys? Only your eyes should be on Suresh and his incomes. ROR is taxed on which income, guys? All. So I'm going to read. You tell me which incomes will be taxed on first. Interest on Canada Development Bonds. How much, guys? 40. Dividend from British company. 20. Profits from a business in Nagpur. 1,40,000. I want more confident answers, guys. Which income is taxed for ROR? All. Then why aren't you saying all? Guys, everyone, please keep repeating with me. Short-term capital gain, 90. Great. Income from business in Chennai, 70. The next one is not there. Interest on saving, 12. Agriculture income? No. Excellent. Exempt because it's land in India. Rent received in respect of house property at Bhopal, how much? 60. But guys, if it's rent received, no, you always give a standard deduction of 30. Unless they say computed. So 60,000 minus 30%, give me the final number, guys. 42. So 42 will be taxed. And I'm not doing LIC premium because I'm not discussing deductions. Guys, these are the incomes. Don't even bother adding them. Yes, I know you want to, but guys, it's so simple. ROR is very simple in the exam. We'll instead do the next one and we'll add those incomes. Everyone okay till now? All right. Guys, who's the one in Canada? Ramesh. So he'll be considered as what, guys? Non-resident. So now all eyes on Ramesh's income. And as and when I read, guys, you will see which connection.
Yeah.
India. Only if there's an India connection you tax him, otherwise we'll not tax him. Yes. Remember, dear income. Which income, guys? Dear. Interest on Canada development bonds, 50% received in India. Guys, how much? Not 35,000, 17,500. Next, dividend from a British company received in London. Why? Because no India connection. Superb, guys. Profits from a business in Nagpur. Guys, once you see the India connection, don't even read ahead. Guys, so even if it's managed from London, guys, is there India connection? Yes. So how much, guys? 1 lakh. Short-term capital gain on sale of shares of Indian company. Yes. Is there India connection? Yes. Income from a business in Chennai. Yes. Fees for technical services rendered where? In India. Is it used in India? Yes. Interest on savings bank in UCO Bank, Delhi. Yes. Agriculture income from a land in no. This is exempt. Excellent. And last, rent from a house in Bhopal. Yes. I will not take 1 lakh. I will take 70,000. Everyone, can you add this income? This is really a good thing to practice. Everyone, please add. Yes. I'll wait for everyone patiently. No problem. Guys, you should get 4 lakh 34 500. Guys, I am only going to gross total income because I haven't done chapter of deductions yet. Everyone okay with this? Yes. So which connection will you see, guys? India. Guys, I have a very interesting question to ask you. Hear me out. Income earned in London 1 lakh, received in India 40,000. 40. Income or RNOR, guys. I'm looking for which one? RNOR. I'm asking you something very interesting here. RNOR is taxed on which income? Dear plus 1. Income in Sri Lanka 5 lakh. Income in Sri Lanka 5 lakh controlled from India. Because plus 1 is how much? 5 lakh. Yes. Now guys, wait for the twist. Income in Sri Lanka controlled from India 5 lakh. Received in India 3 lakh. So guys, watch what happens here is the same income. Where is the income? Sri Lanka. Is it controlled from India? So in this plus 1, how much will I add? 5 lakh. And received, how much will I add? 3 lakh. When is the same income is in 2 letters, you will take whichever is higher. Guys, if you didn't understand, I'll explain again once. Income in Dubai managed from India 10 lakh. Managed from India. So is it plus 1? How much? 10 lakh. But received in India only 4 lakh. Then 10 lakh. So the same income, if there are 2 letters, you'll take whichever is higher. All right. Next, guys, let's take the fourth one. Fourth we'll not do right now, guys. Third we've done. Fourth, fifth. Examine whether the following transactions attract income tax in the hands of the recipient. Guys, you will read and you will try and see whether there's an India connection. If there's an India connection, write T, that is taxable. If there is no India connection, write NT, not taxable. Yes.
That M3.
M3.
Whether it got 43 M3
M?
3 43 M 43V.
Yeah, okay, the way you pronounce it. Difficult shortcut, but
No, but it
43P M
3
3. 43.
3. It's 3.
Yeah, 3. Yeah, okay. Good. Thanks. Very creative. Yes. The first one, guys. Who is John? He's a citizen of India. Working for whom, guys? Central government. Where is he working? Outside India. Stop, guys. Anyone working outside India for the government of India, guys? We tax. So will he be taxed in India? Yes. Pays tax as per provision. This right now we'll not see because it's the new scheme. But anyways, we tax our people. Next one, guys. Is it interest for business where, guys? In India. Is it being used in India? So will it be taxed again? Yes. Post office saving bank interest of how much, guys? 19,000. Guys, we have not discussed exemption chapter. I'm hoping you do the exemption chapter on your own. It's very simple. But in exemptions, guys, if you deposit money in which account? Post office, then you get an exemption of 3,500. And if it's a joint account, 7,000. So guys, if your interest is 19,000, they will tax you 19,000 minus 3,500. That is how much, guys? 15,500. If you don't know what I'm talking about, watch a revision video. I have a revision video in that folder on exempt income. Watch it. Read my handwritten notes. You'll be well versed. Exempt income, guys, is something that small exemption. Agriculture is one exemption. Here, how much exemption do you get? 3,500. Like that, there are exemptions. If you have difficulty in a particular exemption, reach out to me. I'll explain it. Yes. All right. Royalty paid by a resident to a non-resident in respect of a business carried on outside India. Taxable? No. Why not? Outside India. So this is not taxable. And legal charges, 5 lakh paid to a lawyer of UK. Is it taxable in India? Yes. Because the services are given where, guys? India. Guys, all you need to find out is an Indian connection. So is it taxable in India? Yes. All right. Now, guys, while these are done, we'll go back to the illustrations and we'll start looking at the illustrations also. This illustration number 8 is never ending, guys. Have a look at it. So many of them. Yes. So again, this is a question that you will do at home. Tomorrow we'll be discussing it so that we can have a faster and better discussion. But just for trial, we'll do the first 5 incomes. How many incomes? 5. You're a non-resident. Just talking about the first 5 incomes to get you going so that you can do the remaining at home. I'm reading, you tell me the India connection. Interest on UK development bonds, 50% interest received in India. Excellent, guys. Very simple. I don't think you'll have any problem here, guys. Income from a business in Chennai, 50% received in India. Full, guys, because business is where? Chennai. So how much? 20,000. I'll choose the 5, guys. Yes, this one, guys. Income from a house property in London. Everyone, he's an NR, guys. He's who? Non-resident. Income from a business from a house property in London, deposited in a bank in London, brought to India. If this is confusing, let me help you, guys. Ignore remittance. That means don't ignore the entire sentence. Only ignore the part that is remittance. Which is the part that is remittance? Brought to India. I'm literally cancelling it, guys. Now read the sentence again. Income from a house where? London. Deposit in a bank in London. Who are you? Will it be taxed? No. Because no India connection. Yes, everyone. And literally, guys, in the exam, if you get confused, the remittance line, ignore it. Cancel it and read it again. Guys, same question for ROR. Yes, 1 minute. Same question for ROR. Read the line again. Will it be taxed? Yes. Same question for RNOR. No, because for NR and RNOR, which connection do we want? India connection. Are we okay? Yes. Guys, read this and tell me I'm an NR. Past foreign untaxed income. Guys, I told you to ignore two things. Past years and remittance. But sir, this is untaxed. Guys, there are many income which are untaxed. In India, agriculture income is untaxed. Are you having a problem with that? No. Then why are you having a problem with this? So guys, ignore which years? Past years. So this is not taxable for anyone. All right. Look at the next income for non-resident. Guys, read the next one and tell me which part is remittance. And then brought to India. So I'm cancelling, guys, and then brought to India because I'm ignoring remittance. Now read it again for a non-resident. Where is agriculture land? Nepal. Where is it received? Nepal. Any India connection? No. So guys, simple. When you ignore remittance, don't ignore the entire sentence. Only ignore remittance part. Yes. As everyone, illustration number 8 is something that you will read at home fully, solve it, and then we can discuss it. Let's go to illustration number 7. We'll take 2-3 questions in the end and write it also to practice. But right now, illustration number 7. Very interesting, but very simple question, guys. Read the first 2-3 lines and tell me who's earning the income, guys. Everyone read and tell me who's earning the income. Yes, guys, who's earning the income? Yes, so I'm calling him Mr. K for easy pronunciation. Yes, so he's Mr. K. He's a management consultant practicing where? Colombo, guys. He's not in India. Where is he? Abroad. So I'm putting K abroad. Why is India so bothered to tax someone sitting in Colombo? Let's check. Guys, Vivita is paying him how much? 5,000 USD. Why is the payment made? The payment was made in Colombo, but why is the reason, guys? The consultancy is related to a project in India. Everyone, guys. If you're getting confused, let me help you. Where is this Mr. K? Everything is happening in Colombo, but why are you paying him? For some services in India. Everyone used in India. So please tell me, guys, can I tax this? Yes, this is called deemed income. Everyone, what is this called? Deemed income. There is section 9(1). ISSDIRF. That F is for technical services. Guys, in a nutshell, anyone sitting in Colombo also, Singapore also, Dubai also, guys, Paris also, can India tax them? Yes. If the interest or royalty or technical services are used where? In India. You use it in India and we can tax it. Are we okay? All right. Now, guys, is the payment chargeable to tax in India in the hands of Mr. K? Yes, since the services are used where? In India. How will you present this, guys? FLC. Everyone, FLC. Tell me the facts from this question. Mr. K is a non-resident staying in Colombo. He has rendered services to Miss Vivita and earned fees for technical services of 5,000 USD. I am not explaining this. This is from the sum. The examiner will read this and they'll know you know your stuff. So he's a non-resident staying in Colombo. You can word it in your way. He's earning how much? 5,000 USD from whom? Miss Vivita for providing services in India. That's facts. Next. As per section 9(1), since the technical services were used in India, the said income will be considered to be deemed to accrue or arise in India. Last conclusion. Since the services were used in India, Mr. K will be taxed on US dollar 5,000 in India. Are we okay? Facts, law, conclusion. Everyone, FLC. Facts, law, and conclusion. This is how you get your marks. Yes. Don't jumble it up. in the exam have a method to your madness. The person who's checking you, what are they reading first? Facts, and you'll never go wrong on facts because from the question. So when they start reading something right, they might mentally think that, oh, you know your stuff. And then you go to law where you impress them with a section. And then you conclude the answer and you underline the conclusion well and you get your marks. Everyone okay? All right. Illustration number 6. Okay, by the way, please mark this as D. Question number 8 also has D. In the questions, I don't know if you mark. The first one was D. The second one also D. The third one, I found it E, so easy. Fourth one, guys, is NA, not applicable only. And the fifth one is E. Actually, fifth one you can mark as D. Fourth one we'll discuss. I'll tell you what is in the fourth one, but right now it's NA, not important. Okay, guys, this is illustration number 7. Let's go to illustration number 6. Very simple question, guys. Very simple. Everyone, start reading the first few lines and tell me non-resident RNOR NR, who is he? Guys, there's a line, he did not visit India anytime. 1 second, stop. I want to understand what this line means, guys. He did not visit India anytime. Stay in India, 0. 182, 60. So directly he's a, guys, anyone who does not come to India at all, we don't consider him resident. We consider him directly as what, guys? NR. Everyone. So who is Mr. David? NR. Everyone okay with this? Sir, you did not check these, guys. You don't have to check. 0 days means 182 not fulfilled. 60 not fulfilled. Simply he's what, guys? NR. But sir, RNOR, ROR. Guys, if ROR, RNOR, some of you guys are looking at me like I'm talking some different language, guys. ROR, RNOR is only when he's a resident. He's a non-resident, so we're not checking all of that. Yes. So guys, be clear. These are hints in the exam. If he does not come to India, means number of days is 0. How many Lakshman Rekhas will he cross? Nothing. NR. All right. Now, guys, as an NR, which are the incomes that can be taxed in India? Dear. Let's see the India connection. Salary, how many lakh? 5 lakh. Guys, where does he work? He's working in Canada, but for whom? Government, guys. We tax our people. So will this 5 lakh be taxed? Yes. But the allowances, guys, will they be taxed? No. Interest on FD? Yes. Which connection? India connection. Income from agriculture in Nepal? No, because no India connection. Income from house property in Nepal? No. This same sum, earlier they had made it different. This house property was in Pakistan. Yeah, literally. Because I picked up this question and put it in my book. Then they changed it. Pakistan, they removed it only, guys. Now Nepal, everything is in Nepal. But guys, why are we not taxing him in India? For these income, because there is no India connection. How will you write that there is no India connection, guys? You will say that it is not within the scope of income. Repeat, it is not within the scope. You cannot write India connection in the exam. So you will write it's not within the scope of income. When you practice 1-2 questions, I'll make you write that line also. So any income which are not taxed in India, the reason you can give is collectively, you can say these incomes are not within the scope of income as per section 5. All right. As we look at question number 4, illustration number 4. Oh, sorry, 5. Yes, there is a person called Anirudh. There is Anirudh here also. There is Anirudh. Yes. Now, guys, we have to take the income as a ROR, RNOR, and NR. Which is the easiest one, guys? ROR. So we'll avoid it, guys. We'll save time. This is unnecessary ROR. But RNOR and NR, yes, let's do that. First, everyone, let's focus on RNOR. I'm reading the income. You tell me, is there an India connection? Short-term capital gain on sale of shares of an Indian company. Yes. Next, dividend from a Japanese company received in Japan. No. Rent from a property in London, deposited in a bank in London, later on remitted to India through approved banking channels. You tell me what to cancel. Guys, I'm cancelling this. Later on remitted to India through approved banking channel. Now read it again. Rent where? London. Everything where? London. So can we tax it? No. Dividend from an Indian company? Yes. Agriculture income in Gujarat? No. So 6,000 and 15,000. What is the income guys? 21,000. Now guys, while he's an RNOR and I'm very tempted to look at NR also, guys, what's the difference? Plus one. Can you tell me plus one? Control, manage, setup. Is there any income like that here, guys? No. If there's nothing, then RNOR is equal to, है ना? Same. Yes. Everyone. So I'm not wasting my time, but we'll waste our time for ROR. Yes. Everyone. 15,000. Yes. 10,000. Yes. 75,000. Yes. 6,000. Yes. 25,000. No. Exactly. Yes. All right. That's question number 5. I think you can mark it as E safely. Illustration number 4. Like this is for HUF. Guys, HUF, I'm not revising also, not important also. You go back home, yes, watch the video, you read the notes. Tomorrow I'm right here, you're right here. If you have any doubts on HUF, you can ask me, I'll help you out with that. But HUF not discussing at all. Yes, illustration number 3. Interesting question. Lots of days and all. Let's see how we can do this. Yes, everyone. I want with the section guys. Mr. B is which citizen? Canadian. So if you see his passport, will it be Satyamev Jayate and all? No. Some maple leaf, yes, all that. He comes to India for the first time. Stop. First time means what? Guys, in his flashback mode, he's seeing all snow. Yes, all Canada he's seeing. Yes. Does he see India? No. So in case, yeah, Khalista. In case he becomes a resident, he will be considered as a RNOR. In case, yes, all right. During the year 1920, he comes to India for the first time, and the last 1, 2, 3, 4, 5 years they've given a stay in India. But don't get bothered with 5 years, guys. First, focus on 1 year. Guys, what is the first condition? 182. Check the Lakshman Rekha, guys. In the year 23-24, has he spent 182 days? I want more answers, guys. No. So is he crossing this Lakshman Rekha? No. What is the next Lakshman Rekha? 60 days and 365. Check for 60. Yes. And guys, last 4 years, take your calculators. 150 plus 90 plus 60 plus 55. How many days? 350. See, I'm telling you guys, they love all these very borderline numbers. So you will calculate it 3 times again in the exam. Yes. So is he fulfilling this Lakshman Rekha? No. So Mr. B is what in India, guys? Non-resident. Are we okay, everyone? Now I want you to tell me how will you present this question. First fact. Mr. B is a Canadian citizen, came to India for the first time in 1920. His stay in India during the previous year 23-24 is 70 days, and the preceding 4 years is 355 days. First, that's your calculation, that's your facts. Next, as per section 6.1, since his stay in India during the year is not greater than or equal to 182, or in the last 4 years greater than or equal to 365 days, he does not fulfill the conditions, and hence he will be considered as a non-resident. Conclusion. Yeah, no, but with the year and all, thus Mr. B will be considered as a non-resident for assessment year 24-25. And underline it, guys, they should have a clear answer at the bottom. So if the examiner, guys, these examiners are humans. We have not reached AI level. Yes, I've seen I've met people who correct papers. They are like you and me. Sometimes they're also frustrated. So they don't want to read the entire. Imagine, guys, it's the most boring job in the world. And you've corrected 100 papers, which are all badly written papers. And now they come to 101st paper, which is yours. They are bored to death. They don't want to read the full thing. What will they will read, guys? Last. So make sure your conclusion, no matter how much repetition it sounds like, but make sure every answer which is theoretical has a conclusion. Practical, particulars amount doesn't have to be. But if it's theoretical, it has to have a conclusion at the bottom, guys, which is underlined nicely. Yes, everyone? Okay. All right. Question number 3. I don't know. I felt it easy, guys. What did you feel? Easy? Okay. So we can mark it as E. What we can do is we can save time here. We can do the questions here and then we can go to exam questions also. There, guys, that AIC1, AIC2 is tested, so we'll check that also. Illustration number 2. Yes, one question at a time. First, find out his residential status. Guys, who is he? Australian cricketer, visits India for how many days? 100 days. This is in practice for the last 10 years. Everyone, don't fall in this trap of 10 years and all. Go 1 year at a time. What is this year's Lakshman Rekha? 182. Is he crossing that? No. What is the next Lakshman Rekha? 60 days. Is he crossing that? Yes. And the last 4 years? 365. Is he crossing that? Yes. So guys, what does he become? Resident. Congratulations. Now, ROR, RNOR. Everyone, last how many years? 7 years. Last how many years? 10 years. Which is the easier one? Always 7 years is much easier. So solve that first. If it's N, RNOR. So in the last 7 years, guys, into 100 days, 700. Is he meeting that condition? No. So he's a RNOR. Yes. Is very good. I'm very happy with the way you're answering, and this will reflect in the marks because this is very highly probable in your exam. It's very common question in the exam is this. Now, would your answer change if the above facts relate to whom? Srinath, an Indian citizen. Stop. Guys, if he's not Bradley but Srinath, then which condition does not apply, guys? Or which one only applies? 182. Is he fulfilling that? No. Then, guys, what does he become? Non-resident. Everyone, I'm repeating. Guys, the moment you make him an Indian citizen visiting India, then which condition will only apply? 182. If he's not in India for 182 or more, he's a non-resident. Are we okay, everyone? And last, what would be your answer if Srinath, guys, what is Srinath's answer? NR. What would be your answer if Srinath had visited India for how many days? 120 days. Everyone, still your answer would be the same. Because okay, recap. No, 1 minute. Guys, this is a continuation of which question? B. In B, what was your answer? No, I want more answers, guys. In B, what was your answer? Because which Lakshman Rekha? First one. Did he fulfill it? No. Is your answer changing? Let's see what has changed. Guys, Srinath is staying in India for how many days? 120 days. So ignore the 100 days and again check the condition. He's staying for how many days? 120. First Lakshman Rekha? 182. Is he fulfilling that? No. Second Lakshman Rekha? Does not apply only. No? Why are you applying? Guys, he's an Indian citizen. So again, he's a non-resident. I'm changing the question. What is stayed in India for 190 days? Yes, because only one Lakshman Rekha, guys. Which one? 182. Yes. But for amendment, we'll want his income, no? If they say, then I can. See, we don't assume that. Because why unnecessary add burden? So and if they want you to check that, they will definitely tell you about the Indian income. Yes. Everyone. Yes. Look a little confused. Yes. Okay. Guys, can someone repeat and tell me why in the second and third, both the cases, I did not apply the second Lakshman Rekha? Because he's an Indian citizen visiting India. So which Lakshman Rekha? 182. Here he was how many days? 100. Here is how many days? 120. So he's not crossing 182 or more. Yes, everyone. Guys, please mark D so you can try this once again. Illustration number 1, Mr. Anand. This guy is working where, guys? Check. Crew on a ship. So when he's leaving India and when he's coming back, will you include it? No. And if this confuses you, I'll tell you a pro tip. Solve normally and minus 2 days per trip. If he takes a trip twice, 4 days. If you are getting confused, I don't think you will. So let's calculate the number of days together. Guys, when did he leave India? 6 June. So April 30. May 31. April, May. June, how many days? 5 days. Absolutely right. July, August, September, October, November, he was not here. December, he came back on which day? Guys, read. Tell me which day he came back. 9. So 31 minus 9. How much is that? 22. Guys, why did I not add plus 1?
Because
Ship. Yes. January, how many days? 31. March, sorry, Feb. 29. March, 31. Add all these days, guys. 179. I'm telling you guys, they will always put you at the bottom. You will get confused, but be confident of your answer. If you want, you can calculate one more time in the exam, but don't calculate more than that. 179 days. Everyone stop. What is the first Lakshman Rekha? 182. Is he crossing that? No. I stop. Second Lakshman Rekha is how many days? 60 and 365. But stop. Is he EV?
Yes.
How is he EV? Can someone explain? Yes, answer is right, but how is he EV? Yes, guys, working on a ship abroad is also employment. Employment does not always mean on land, it can also be on a ship. So, why is he EV, guys? Employment. And which Lakshman Rekha? Only 182. Are we okay? I can repeat. Everyone, please tell me number of days in India. 179. Is everyone clear with this? How many Lakshman Rekha? Why not second one? EV. Because EV. What is the first Lakshman Rekha? 182. Is he fulfilling that? No. So he becomes a non-resident. Now, sir, why are we checking for AIC1, AIC2? Because they've not given his income. Guys, pro tip, which non-residents? Rich. Is he rich or not? We don't know. Exam will tell you. I will solve those questions also, but exam will tell you if he's rich or not. Only then convert. Are we okay with it? Please mark a D to this one as well. So we successfully managed to do all illustrations also and all sums also. We haven't written even one yet, but no problem, guys. We will write and we'll try and do exam questions now. Yes, everyone confident? Yes. So putting this to an end, looking at exam question, more or less, guys, every year there has been an exam question on this chapter. Yes, let's start. We'll start with backwards. We'll go to November 23 paper. And November 23 question number 2A and 2B, both guys. Yes, so two questions from this, very interesting. 2A and 2B. Here we go. Yes, 2A. I thought it's an amazing question. You have to just write what? Yes or no. Yes. You will read 6 questions. You will tell me if it's taxable or not. Sixth one we haven't discussed IFO, so you can avoid the sixth one. Guys, the first one. Yes, because used where, guys? Situated in India. So is it taxable? Yes. Second one. Guys, second one now has been removed, guys. These were exceptions. I told you some part has been removed. These exceptions to deemed income has been removed now. So don't worry about that. Third one. Where is the house property? In India. Is there an India connection? So will you tax it? Yes. Next. I thought we tax our people. No? Super. This is what, guys? Allowance. So this is not taxing. What if this was salary? Yes. Next. Yes. Very nice. Confident answer. Pass. Past is gone, guys. Don't look at it. Yes. So this is no. And last, I can't discuss. I know this is wedding, but I can't discuss this because right now we've not done. Yes. Yeah. Which one? Gift received by no. Yeah, but we'll not talk about it because we'll wait for IFOs. Just wait for the IFOs thing and then we'll talk about it. So we're done with 5 of them here, guys. Sixth one. Guys, the next one is what I'm looking at. I don't think you'll have any problem. I'm going to divide this entire class into 2 parts. Yes, people in the middle, you can choose where you want to be. But half the class, RNOR is what is he? RNOR. That side of the class, NR. Read the incomes. This side of the class will tell me RNOR, what is the income, and that side of the class will tell me NR, what is the income. Over to you all, this is RNOR. And right hand side, this is NR. Yeah, no, you have to calculate. Finally, you have to tell me the number. 1/3, yes, 1/3. Even more not visible now. People switching sides. This side RNOR, this side NR. You people you can decide where you're on. You're on both sides. So that means you're confused because then it'll be confusion. NR. Okay. All right. Let's see, guys. Everyone. This side, we're first talking to you guys. You tell me the answer, guys. Interest on England development bonds. How much? 20,000. Next, 5. Because it is used in India, guys. Used in India. So how much, guys? 5,000. Next, royalty. No. Why not? Outside India. And last one.
25.
25 or 15? But only 15 is received, no? Yes, guys. Plus 1 is 25. So here it is 25. So what is the total amount, guys? 50,000. Same thing now for NR, guys. Everyone there, please answer. The first one, 20,000. The next one, 5 because used where? In India. Next, third one, nothing. Fourth one, 25, no? Yes, guys, there is no plus 1 for you all. So it is only received. And how much is received in India, guys? 50. So please add them up and tell me 40, 40,000. Are we okay? So what is the difference? Mainly was in fourth one, guys. Where for y'all it was plus 1, so y'all took 25. Here it is not plus 1, so you take only 15. And that's why the government wants to convert y'all to RNOR to get 50. Yes. All right. So this is question number 2 and 2B. Now, guys, how do you recognize these kind of questions, guys? So as a habit, when you finish revising chapters and when you're mostly done with all the chapters, try looking at ICI papers and solving these kind of questions. Yes. If you look at my papers, except this because it's a PDF, next to the question I've written also which chapter it belongs to. Yes. So just I'm giving you a little example here. If you see this paper, May 23, the first sum is from which chapter? Computation. The if you see the next one, it will be from a different chapter. Like this is residential status and scope of. So like that, we can keep solving questions. We'll come to this one also. Actually, this is the question we have to solve anyway. All right. This is question number 2A. Jay Chand. Interesting question. This one you will not do the second part right now. You will only do the first part. In fact, I'm removing the second part. Guys, start reading. I'm zooming in. This is a 3-mark question, so it's not too detailed. Just by the way, the previous year here is 22-23. What is the previous year? 22-23. Getting confused? Stop. I'll tell you some pro tip, guys. Everyone stop. In a question like this, when there are so many details, guys, avoid reading the entire question. First, tell me what have they asked you. Residential status of judge. So forget all the details. 1 minute. Forget all the details. Can I help how to solve this question? Because guys, this is just one paragraph. They can give you 3 more paragraphs. I can promise you. But I'll give you clarity. Whenever they ask you residential status of individual, first start with 1 Lakshman Rekha, which is how many days?
182.
Guys, you can be the president of the country, 182 still applies to you. So everyone will check only for 182 days. Check, guys. This year, how many days did he come to India? He did not come to India at all. Guys, this is the line. Everyone. People still calculating days. You're missing the bus. I see I will confuse you in a roller coaster ride and throw you out. Yes. Guys, everyone, 1 minute. Don't go there. First, right now, how many days in India right now? Zero. So, guys, is he crossing this Lakshman Rekha? No. And guys, is he an Indian citizen?
Yes.
Visiting India. So, which Lakshman Rekha does not apply? Second. So, guys, ultimately, he is what? N. But is he a rich NR? Let's check. Income from a commercial building in Delhi, how many lakhs? 12 lakh. Income from a retail store, guys, 4 lakh 50. How much? 16, guys. These are the people we want to convert. Everyone, AIC1. Is he an Indian citizen? Yes. Is his Indian income more than 15 lakh? Yes. And is he not taxed as a, have they given that line? No. Yes. Yes. Country S does not tax any individual on their, yes. So guys, all three conditions fulfilled. What is he? RN. So guys, why even count those days of 120? So you know what you do in this kind of sums? Go to the questions and answer those questions. Yes. So is he fulfilling AIC1? Yes. So what does he become, guys? RN. But sir, how do you present this? I'll tell you how to present it. First, getting the right answer. Everyone getting the right answer. Here, here. Yes. Guys, people who are calculating all these days continuously 60 and all these guys don't do that. Follow the questions. First Lakshman Rekha, 182. Yes. Anyways, now how do you present? Final answer, RNOR. If it's an MCQ, you'll get it right. If it's a other question, guys, first facts, law, and conclusion. Tell me the facts. He's an Indian citizen working abroad. He did not visit India in on any days in the previous year 22, 23, and his income from Indian sources is 16 lakh 50,000. That's it. Next. Guys, now we don't have to first make him a non-resident then convert. That is only for understanding. We have to just discuss AIC1. Guys, 1 minute. First we made him NR. Then we converted into, we don't have to do that in the exam, guys. You have to go straight. Guys, AIC1. You tell me, guys. AIC1 is called deemed resident. What is it called? Section is 6(1)(a). Guys, the section is here. 6(1)(a). Now you tell me AIC1. He is a Indian citizen. Full stop. His Indian income during the year is 16 lakh 50,000 as under. And you'll make a table. First income, commercial building in Delhi, 12 lakh. Second income, retail store in Delhi, retail store 4 lakh 50. Total 16 lakh 50. Full stop. Next line. He is not taxed as a resident in any country in the world. Full stop. Therefore, he will be considered as a deemed resident, that is RNOR. And conclusion. Mr. Jajan will be considered as a RNOR for AY 23-24. Are we okay? Everyone doubts if any? Okay, so let's remove this line, guys. I'm removing this line now. So AIC1 will not apply. Yes. Then we'll check for AIC2. Let's check for AIC2. Is he an Indian citizen of PIO? Yes. Indian income more than 15 lakh. And now you have to check for 120 days. Guys, is he in India for 120 days? No. So guys, he will remain, NR will remain NR. Yes. But why did I not check for AIC2? Because AIC1 is fulfilled, no? Yes. Yeah.
These are not given as is not being taxed as a resident. Do we just assume that he's not taxed?
Oh, they will give you particular. These are exam questions. They are very particular exam questions. Because what happens is, if they don't give you details, no, you'll have 2-3 answers. And then which one to give right? I'll give one right, one wrong. That guy will protest. High court case and all. So ICA is very particular about the sums they're asking nowadays. Very particular. They don't leave anything for assumption. Yes, everyone. Now there was a small line next to it. I'm just going to reopen this page so that we can see the second part of this question also. Very simple. Yes. Will your answer change if he is a citizen of country X? Everyone. Nothing will change. I'll tell you guys. Even if he is a citizen of country X. Guys, how many days in India? This is what matters. Guys. Tell me the first Lakshman Rekha. Tell me the second Lakshman Rekha. What is he? Guys, you're not getting the point. If it's 0 days, everyone, if he's 0 days, he's always a non-resident. They're just trying to confuse you here. Yeah, 1 minute. So he's an NR right now. Now let's check for AIC1. AIC1, guys, is he an Indian citizen? No. Then check for AIC2. No. Then, guys, what will he become? NR. So will your answer change? Yes. But not because of number of days, because of AIC1, AIC2. Everyone okay with this? We'll write this because I felt this was a little tricky. Although 3 marks, but we'll still write. Everyone, let's start. This is May 23 paper.
That the visiting condition of EV should be in the previous year. Visiting should.
Yeah, visiting should be in this year. But if it does not visit, no, 0 days, NR. Yes. Guys, this chapter, no, the more you overthink, no, the more you'll confuse yourself. Yes, so just follow the questions, keep answering the questions, keep answering the Lakshman Rekhas, and that's how you'll get the right answer. Oh, sorry, this is Prashant one. I think it's a. Yeah, okay, I'll dictate it, you can write it, guys. This is question number 2A, first part. May 23 ICI paper. Yes. Let's quickly address the first part. Yes. Mr. Jayachand is an Indian citizen working abroad. He did not visit India anytime. Mr. Jayachand is an Indian citizen working abroad. Full stop. He did not visit India anytime during the previous year 22-23. Full stop. Next line. As per section 6(1)(a), A is capital. As per section 6(1)(a), since he is an Indian citizen, as per section 6, open bracket 1, capital A, close bracket, since he is an Indian citizen, having Indian income greater than 15 lakhs, open bracket 16,50,000. Since he is an Indian citizen, having Indian income greater than 15 lakhs, open bracket 16,50,000, close bracket, and is not being taxed in any country as a resident. And is not being taxed in any country as a resident. He will be considered as a RNOR. He will be considered as a RNOR, that is deemed resident. Because for 3 marks, guys, I'm not giving detailed calculations. Otherwise you'll not finish your paper. Yeah, only 3 marks. Next line. Thus he is a RNOR for EY 23-24. Yes. Will your answer change if he is a citizen of country X? Yes, you will have to write a direct answer, guys. For 3 marks, you will not be able to explain. You will write a direct answer. I'll show you indirectly how to explain. Next line, please write. In case he is a citizen of country X. In case he is a citizen of country X. The provisions of section 6(1)(a) deemed resident. In case he is a citizen of country X. The provisions of section 6(1)(a), that is deemed resident, will not apply. Thus, in this case, he will be considered as a non-resident. AIC too. But I'm telling you that, see, what happens is then your assumption is he's a PIO. But his assumptions, Pranav's assumption will be he's not a PIO. Both answers are right. Now, examiner will have an issue there. So ICI, what I've seen lately, guys, they are very particular about their questions. They don't leave too much for assumptions because they have a lot of pending cases against them. Yes, people ask for their scanned copies, revaluation, etc., and then they file a court case that listen, I gave the entire. Yeah, literally, there have been court cases where the answer is right, they've not got the marks because of some assumption, and then they've lost out, so they have to fight. So they are very particular now, very clear that all details will be given. Yes, all right. So this is May 23. In fact, there's another question in this, the second one. I want you all to time this, guys. Right now it's 7:11. You'll get the next 4 minutes, and you'll get the neighbors discussion also. Discuss with your neighbors. Find out residential status and compute his total income for AY 23-24. Slightly tricky. Be careful. You can also try. Very good question to try. Yes, Mr. Prashant. Don't read the entire question. Go step by step. Which is the first Lakshman Rekha? 182. So only look at that first and answer that question. He's crossing the Lakshman Rekha, guys. So don't even look at the second one. Are we okay? Yes. Everyone. Is he a resident at least? Everyone. Is he a resident at least? Yes. Now you see resident is ROR or RNOR. Why, guys? Yeah. ROR, he's fulfilling those conditions. Yes. We'll check in detail also, no problem. Mainly you'll be confused on those 10 years to, yes, we'll clarify that also. No worry. Yes. Confused? No, no problem, guys. I'm here. I'll help you. First, guys, I'm not looking at any question except the first Lakshman Rekha, which is how many days? 182. Tell me, has he crossed that Lakshman Rekha? Yes. So, guys, forget reading everything. He's crossed that Lakshman Rekha. What does he become? Resident. Everyone, what does he become? Resident. Now, guys, it's whether the additional conditions are fulfilled or not. One additional condition is very simple, guys. 7 years. Everyone, 7 years. Every year is coming for how many days? Please do 125 into 7. 875. Is he fulfilling this condition, guys? How many days? 730 is fulfilling this. Now, very patiently, guys, how many years back? 10. In 10 years, he has to 2 years cross Lakshman Rekha. Which Lakshman Rekha? Any. Guys, any Lakshman Rekha he has to cross. So everyone, I'm going the last 10 years. Be with me. I'll not be repeating this. How many years last? 10 years. He has to cross basic condition 1 or basic condition 2 for how many years? Twice. Anyone. Guys, basic condition 1 will never be fulfilled. Why? Because he's every year for 1 year. But basic condition 2, how many days? 60 days. Is that being fulfilled? Yes. And 365 guys, to 125 into 4 years. Is this also being fulfilled? Yes. So hazy crossing. Guys, people are only focused on first condition. Now, any Lakshman Rekha you cross, what do you become? President. So is he fulfilling 730 days also? And this also, what does he become, guys? ROR. Now, as a ROR, I'm reading the incomes. You tell me, guys. Income from a business in Australia, confirmed from Australia. Yes. Business in Sri Lanka. Short-term capital gain. Yes. Income from agricultural land in Australia. Yes. Everything, guys. Everyone, okay. Why? ROR. Yes, people overthinking ROR don't think at all. Everything taxable. Yes. Agriculture in Australia, no? Only in India. Feeding India. If you feed India, then we will not tax. Yes. If you feed Australians, we'll tax. Yes. All right. So that's it. We have to write this question, guys. Pretty interesting. Everyone start writing. This is how you'll present it. Only one fact I've given you guys, that he stayed in India for 200 days first. Difficult question, guys. I felt this was slightly tricky. So first only, guys, 182 days he's a resident, and then I've explained the two additional conditions here. Guys, mainly it is this one which will bother you. So revisit this condition. Last 10 years, huh? Remember, he has to be a resident in at least how many years? 2. That means he has to cross any of the Lakshman Rekhas in 2 years. Okay. In the interest of time, we will have to put an end to these questions. I think you are well versed because these are the most difficult questions, I think, which we've tried to answer. If you feel you want to do a little bit more, I'll tell you how to do this. Everyone, hoping you finished writing. Here is a handwritten folder, guys. Yes. So I'm just showing you how you reach here, guys. There is a folder called handwritten notes. In that, you choose your chapter. This chapter is essential status and scope of income. And in that, you will see questions here. Question number 2A from which? November 22 paper. Then question number 2A from which paper? December 20. So you can look at that paper and then you can come here because those papers might not be updated with amendments, etc. So I've solved it here with amendments. Yes. So you can look at the question, try solving it. If you want the solution, open this and check your solution. You'll get your answer, guys. Everyone okay? So you can do more because, guys, because I want to cover almost all the chapters here. I want to leave, and I have a sense that you are understanding things well. So on that note, guys, ending this here. Yes. And today you haven't asked me any questions, but if you are finding anything difficult, let's say you go through these questions and you find it difficult, happy to take all questions. In fact, tomorrow I'm here only in Shashadipuram in the morning, so we can start also a little early, and we can also have slightly more discussions as well. Yes. So tomorrow I end my class at 12:30. You tell me, guys, how early should we start? 1:30, is that a good thing? Yes, 1:30 if we start. We can also end early. We're starting about 2 hours early. We'll also end 2 hours early. Yes. Then it's 1:30 to 5 hours basically. 5.5 hours, half an hour break and 5 hours class. So we'll end also early. And this is the chapter for tomorrow. You have to look at this chapter question so that we can discuss. Of course, questions. Otherwise, we'll move to next chapters. In fact, we're moving to the next chapter now only. It's a very small chapter club. It'll get over in half an hour, and we'll discuss it. Questions tomorrow on club. Yes. 5 minutes for everyone right now. I'll share the drive link with you guys. I'll do it today. I have internet connection. Yes, I'll try and do it today. I need to know also. I'll share one drive link and it'll have GST, one folder, and one DP.
Six and nine. Nine one is
The deemed, only the deemed section.
and if you have one
Better universal.
six nine six and nine.
The presidency. And for property with four. Deduction. Yeah. Okay. We should be, what? Okay. basic condition. Okay, so 1 into 2 is not 60 days after discharge. Sorry. Whatever it is, doesn't matter. Yeah, what matters is how it is your basis.
Yes, yeah, all okay. So after that one slightly big chapter, which is residential status and scope of income, we are coming to a small chapter which is called clubbing of income. I don't think there'll be any problem after we discuss. Then tomorrow we'll go to sums of clubbing. Yes, so looking to start right now. Let's see how we tackle clubbing of income, guys. But first, just a basic understanding of clubbing. Um, why does clubbing happen in a country like India, or why? What is the concept of clubbing, guys? Yes. Let's say you live in a world. Thank you. Let's say you live in a world, guys, where there's no basic exemption. Everyone, whatever income they get taxed, they'll be paying tax at 15%. And what percent? 15%. So you also earn income. What will be taxed at? 15. Your spouse also earns income. What will be taxed at? 15. So will there be any temptation to transfer your income to someone else? No. Because you'll also be taxed at what? 15. They'll also be taxed at 15. But in India, we work slightly differently because, of course, we're a developing country. We can't tax everyone. So we have introduced a concept of BEL, basic exemption limit of how many lakhs? 2.5 lakh. And the government said if in India, if you earn up to 2.5 lakh, we won't tax you. And rebate 5 lakh. If you earn up to 5 lakh also, we'll not tax you. Now, while government gave this with a very nice, kind heart, people misused it. People said, I have 5 people in the family. How many? 5. One earning member. Right? How many earning member? 1. And 4 people are not earning. So their basic exemption limit, is it getting used? No. So what people used to do is, one person is earning the income, he would pass his income to another 4 or 5 lakh, and he would pass it in such a manner that he's earning the main income and he's passing 5 lakh to all the four. Now tell me guys, all the four have a rebate up to how many lakh? 5 lakh, and they're now earning up to how many lakh? 5 lakh. So what is the tax they'll pay? Zero. This same 5 lakh in the first person's hand would be taxed at what rate? 30. The government doesn't like this kind of planning, and people have created families with the intention that they will plan it like this. Yeah, husband wife will have 3 kids because planning, tax planning. Government knocked it off with one chapter called clubbing. They said, listen, this is not possible only. We have a concept of clubbing of income and it doesn't allow. And in a nutshell, clubbing of income, what the government has said, the dog will always go back to its owner. Let's take the same example. Let's say Mr. A passes income to how many other people? 4. All the 4 income will come back to him. Yes, because the dog always goes back to its owner. While clubbing and all is great on paper, but in reality, guys, you ask someone, just go a social experiment, guys. Ask someone that I don't have my wallet, can you lend me 100 rupees? Yes, see if people trust you. Yes, no, they say, no, no, this guy will have cigarettes and all. I don't think he'll have alcohol. People like this only ask money, don't give it. People in India have a lot of trust issues. And if you don't believe me, talk to your parents. Say, mom, dad, I'm grown up. We'll plan taxes. All your shares transfer in my name tomorrow morning. I'll do all the paperwork. All your gold, no, give it to me. Guys, we live in a world where we love each other, but we have trust issues. We love, but with trust, some issues. So while all this is great, the Indian government knows that you manipulate your taxes with 4 relations. How many relations? 4. They are close to you also, and they can be easily manipulated. One is your spouse. One is whom? Spouse. So in India, majority tax planning happens with the spouse, so the government has identified that relation. Second is minor child. Which children? Not major, only minor. Guys, major children, guys, it's a little tricky because major children now 18 plus. Yes, they will say, listen, now I have the asset, I can sell it and I can download Dream 11. Yes, so it's a risk. So people don't trust their major children, they'll trust their minor children because somewhere they are under their control. So one is spouse, one is minor children. Second, guys, in India, people also pass their income to an HUF because HUF also has what? Basic exemption. So 3 relationships covered. First, spouse. Second, minor child. Third, HUF. And fourth, I'll tell you in some time from now, guys. Yes, of course, that is son's wife, but I'll tell you why, etc. later. So the government says these 3 relations they're going to monitor. What about other relations? Example, if I transfer my income to my parents, example, I have 10 lakh worth of debentures. How many lakh worth of debentures? I make a gift deed and I give those debentures as a gift to my father. Now who's the owner? My father. Who will earn the interest? My father. Will that income come back to me? No. So they're only monitoring how many relations, guys? 4. So if you transfer to your father, to your mother, to your brother, sister, major children, the government says it will come back to you. No. But sir, will there be no tax on that? It will be taxed. If there is income, there will be tax, but it will not come back in your hands. Example, this income my father will be taxed on. Are we okay with this, guys? Yes. So guys, this is in a nutshell the chapter called clubbing of income. Clubbing basically means the income will come back to you. The dog always goes back to its owner. Let's start, everyone. The section is section 64. Here, guys, this is section 64 and we are talking about an individual, guys. Let's call him Mr. A, guys. Who is this individual? Mr. A. And they monitor how many relations, guys? 4. If you transfer income to whom? Spouse. If you transfer income to your minor child. If you transfer income to your HUF, and to the fourth one, which I will reveal very soon, and why also very soon. But in these 4 relations, if you transfer income, will the income come back? Yes. Let's tackle one by one. We'll talk about HUF first. Guys, this is A, and he has debentures worth 10 lakh. Everyone, we'll keep a standard number. Debentures worth how many lakh? 10 lakh. On that, interest you get is 2 lakh, guys. What is the interest? 2 lakh. Who's earning this money right now? A. And unfortunately, he is taxed at what rate? 30, because he has other incomes also. He is taxed at a very high rate. So he does a very smart plan, guys. He passes these to his HUF. He writes a letter that out of my love and affection towards my Hindu undivided family, I'm transferring these debentures to whom? HUF. Everyone. The government says I have no problem with the asset. I have no problem with the asset. Asset is no problem. But if there is income, guys, so now who's the owner of these debentures? HUF. They will earn income of how many lakh interest income? 2 lakh, and their basic exemption limit is how much, guys? 2.5. They will not pay any tax. How much, guys? 0. The government says, I cannot tolerate this imbalance. In your hands, this was taxed at 30%. There it's taxed at 0. The government doesn't like this. They say, listen, the dog always goes back to its. Will the asset go back? No. Only income. So what is the interest income? 2 lakh. Who's going to earn it? HUF. Guys, who's going to earn it? HUF. In whose bank account it will come? HUF. Everything will happen in whose hands? HUF. But while filing the tax return, Mr. A, in his IFOS income, he will have to show, guys, how much. Are we okay, everyone? Technically, guys, who's earning the income? HUF. And whose bank account? But only from tax purposes. When you file your return, you will show 2 lakh and you will pay the tax. So will HUF also pay the tax? No. Only one person. Who will pay the tax, guys? Mr. A. Because the dog always goes back to the simple. Just repeating. Will the asset go back or the income go back? Income. Yes.
So what if HUF, he transfers 10 lakh and then he shows income of HUF as 2 lakh.
Hmm.
Then he shows
How will you transfer 10 lakh?
HUF, regarding other asset.
Yeah, you're trying to evade it. You're trying to evade tax. Yes, you can do that. I'll give you the best option. Guys, what he's saying is, what if the HUF pays money? So let's talk about that also. Yes, if you're not understood, I'll explain how. First, let's not talk about evasion. Let's talk about legally. Yes, HUF says, listen, I don't want your free dividends. I don't want your. So the HUF pays you 10 lakh rupees. 1 minute. The HUF pays you how much? 10 lakh. Now tell me, guys, who's the real owner? HUF. Who is earning the income? HUF. Will it come back? No, because you bought it. No, you bought it. Yes. Now, how do you get that 10 lakhs? You can evade. You can in a bag give cash, they can deposit, they can send. But all that does not come from an exam perspective. So I'm not discussing it. Offline, we can discuss how we can. Yeah. But right now, guys, from an exam perspective, if the HUF pays you 10 lakh rupees for the debentures, then who's the owner? Then will clubbing apply? No. Then they are the real owners. Yes. But right now, guys, this is a gift. Everyone, this is what? Gift. Will the asset come back? No. The income will come back to whom, guys? Mr. A. Now going to the next level. Guys, Hindu undivided family sometimes gets separated. Sometimes gets separated. It's called partition. What is it called, guys? The brothers say, listen, we don't want to stay together, and they are separating. These are the 3 brothers, brother 1, brother 2, and brother 3. And these are what? Debentures. Worth how many lakh? 10 lakh. In the partition, guys, let's say these debentures go to brother 3. How many lakh of debentures? 10 lakh. Interest income? 2 lakh. Now tell me, guys, after partition, who's earning this income? Brother 3. But still the dog will go back to its owner. Who's the owner of these? A. So this interest will also go back to A. So whether it's partition or not partition, repeat, whether it's partition or not partition, the income will go back to the original transferor. Original transferor. Are we okay, everyone? Guys, partition means partial partition also, full partition also. If you didn't understand this, guys, this cup, if it has 1 crack, is it broken? If it has 3 cracks, also broken. So it doesn't matter what kind of partition in the exam. If they say partition, still it will go back to whom, guys? And if you're confused with all this, guys, remember, any asset you transfer to whom? HUF. Repeat, any asset you transfer to, the income will come back to you. Whether partition, whether not partition, the income will come back. Are we okay with this? Everyone. Alright, that's with the HUF. Questions, if any? Exam question. You transferred a house property to your HUF, rental income 3 lakh. Will it come back? Yes, but it will come back after computation. So from 3 lakh, you can take municipal tax, standard deduction, interest, whatever the final number will be clubbed, everyone. So first you compute, repeat, first you, and the final number will be clubbed. Everyone okay with this? All right. Yes.
During that computation, they
Yes.
also get a separate income tax if it's SOP.
Separate limits means you will also get, no, 2 lakh.
In the sense, I have the
Yeah, all the deductions. So you'll compute and final number. Yeah, you can do that. Yes, you can do that. They will get 2 lakh deduction on interest. LOP, they'll get unlimited deduction. And don't get confused with all this. First compute everyone. First, will they get the 3 reductions? Yes. The final number will be clear. Yes. All right. Good question though. Guys, now moving to the next relationship, which is spouse. Guys, this is the surgeon. He has debentures worth how many lakh? 10 lakh. Interest of how many lakh? 2 lakh. Does he want to pay 30% tax on this? No. So guys, he gives a gift to whom? Spouse. Everyone. Who? Spouse. Guys, this is a gift of debentures worth how many lakhs? Same answer, guys. No difference. Now who's going to earn the interest? Spouse. But the dog will go back to the owner. Yes. Guys, people who are surprised, guys, please just answer one question. Who's the real owner? Surgeon. So it will go back to the surgeon. Yes, you seem a little surprised. Understanding? Okay. So guys, who's earning the interest now? Spouse. How many lakh? 2 lakh. But it will be taxed in whose hand? Guys? Surgeon. Guys, what if they are separating? Guys, what if they are separating? Then it will not go back. Yes. And what if she pays adequate consideration? That means how much are the debentures worth? 10 lakh. She has paid how many lakh? 10 lakh. Now who's the real spouse? Yes. So if you give this directly or indirectly. Now I know who's monitoring government. So I give it to a third party, guys. I give it to whom? Everyone. Surgeon is transferring the debentures to whom? And third party is giving to spouse. The government is saying, what are you doing? Just by putting someone in the middle, guys, will we not do this? So still, guys, income will go back to whom, guys? Surgeon. It's very simple if you understand the shortcut. The dog always goes back to the owner. Yes, everyone. Simple. Find out who's the owner, give it back. Unless you pay. Unless you pay. Alright. This is for spouse. That's for HUF. Now we'll go to a very weird relationship. Yes, where also clubbing applies. Son's wife. Guys, what is it? Son's wife. Now, so funny. Out of all the relations, they've chosen son's wife for clubbing. Why? Yes. Guys, this is 1961 when the Income Tax Act was written. Where imagine a family. There is a father, the wife. They have a son, son's wife. Daughter is already married in some other house. Yes. So how many male members, guys? 2. Both of them earn income. How many women in the house? 2. Guys, the father knows that if he transfers income to his spouse, to his whose spouse, will it come back? Yes. So the next, he cannot transfer it to his son because son already has income. So the only person who's left is son's wife because the son can't transfer the income because for spouse it will come back. So they started doing this, guys. The father started transferring income to the son's wife. The government, of course, identified it. They included this also. In today's times, this relationship is very awkward, and son's wife also will have income, anyways. But from an exam perspective, guys, if you transfer an asset, debentures, as a gift, you're giving to whom? Son's wife, also called daughter-in-law. Also called, who's earning the interest? Daughter-in-law. Who's earning the interest now? Daughter-in-law. The dog will go back to the owner. Yes, everyone. Guys, don't complicate this. Very simple. How many relation? 4. First, spouse. Second, minor child. Third, HUF. Fourth, your asset is going there, income will come back. Which income? Final income. Yes, everyone. Guys, I want to talk about something slightly different here. This is the surgeon. Instead of transferring debentures, he transfers agriculture land, guys. Which land? Agriculture land to the spouse. And she from agriculture income has 5 lakh income. Guys, everyone, how much income? 5 lakh. Now please tell me, guys, will this go back? Will clubbing apply? Yes. As it is anyways exempt. So guys, clubbing does not apply to which income? Exempt. Exempt income. Guys, because of this exempt, there is no tax. And if there is no tax, there is no clubbing. So we've discussed 3 relations, guys. First relation we discussed was HUF. Second we discussed was spouse. Third we discussed was son's wife. And in a nutshell, if I have to summarize, any asset you transfer to them, will the asset come back? No. What will come back? Income. After all the calculations. Now, the one which is very common in the exam is minor child. So here we go, guys. This is the surgeon. And let's say he has a minor child, guys. Minor child means below how many years? 18. Let's say this son or daughter is 16 years old. And the surgeon gives some asset to the minor child. Let's say gives debentures to whom? Minor child. Now who's the owner? Minor child. Who will earn the interest, guys? Minor child. But this will also go back to whom, guys? Surgeon. But it works slightly differently. So I'm telling you, minor child, pay a little extra attention. Guys, for minor child, there is not this income, guys. Any income, guys. Repeat, which income? Any income. 1 minute. Which income? Any income. So first you tell me, guys, can a minor child have income? Yes. FD, interest, house, rent, shares, dividend. Grandfather gave some property, that also rent. Can he be a TikTok star? Yes. So he can have that. YouTube sensation. Yes. Can he work in ads? Johnson's baby. Can he be the baby, guys? Yes. So guys, a minor child can have different incomes. And I'm telling you a line which you have to by heart now, guys. Every income of minor child, repeat with me, guys. Every income of minor child will be clubbed in the hands of the parent. Everyone. Every income of minor child will be clubbed in the hands of the parent. So I'm giving you three incomes, guys. Grandfather made a FD in the minor child's name. Who made? Grandfather. Guys, every income of minor child will be clubbed in the hands of the grandfather. No. So even if the gift is from whom? Grandfather, and the interest is earned, guys, the income will go for the parent. So I'm writing this, guys. Every income of which child, minor child, will be taxed in the hands of the parent. Now, which parent, guys? Mom, dad. The government is very smart. They say first calculate the father's income. Let's say 10 lakh rupees. How much is the father's income? 10 lakh. Mother's income? 2 lakh. So very smart, guys. They say where is more beneficial for the government? Father, because he'll be taxed at higher rate. So guys, it is not any parent, guys. It is the higher parent. Higher means not any other high, guys. Higher means higher income parent. So everyone, any income of minor child, repeat with me, guys. Any income of minor child will be clubbed in the hands of the higher parent. Shortcut, guys. In the hands of the. So here, guys, father or mother? Mother. Father. Yes. 12 lakh. Mother. Will you check this every year? No. Only first time when you take it, you will check father or mother. So here, guys, father or mother? Mother. Next year, mother. Next year, till he becomes a major. After major, he will be taxed on his own income. Everyone okay? So please repeat. Every income of minor child will be clubbed in the hands of the higher parent. So as a parent, first find out your incomes and then take the minor child's income and add it. Now, very probable question. Sir, what if he has only one parent? Then only that parent. What if they are separated? Then whoever takes care of. Whatever he does not have parent, then as a government will find a way to tax you. Yes. Yeah, because guardians. And ultimately, guys, if you can earn income, you can also pay tax. So somewhere they'll recover the tax. Are we okay with this, guys? Yes. Now, guys, let's take an example. The minor child has income of how much, guys? 2 lakh. It will be taxed in the hands of the higher parent. But when you take that income, guys, the government is very generous. It gives you a very nice exemption, guys, of 1,500 per child. Guys, 1,500. So they will not club 2 lakh. Don't worry, they'll not club 2 lakh. They'll only club 1 lakh 98,500 per child. How much? 1,500. Guys, what if you have two children? Two. What if you have three? Three. How many of our children whose income is clubbed? Yes, everyone. But don't worry, guys. For 1,500 rupees, you will not have children, guys. Yes. If you're thinking like that, your tax planning is very wrong. Family planning is worse. Yes. So everyone, for per child whose income is clubbed, I'm asking you a question. Four children, but only one child's income is clubbed. 1,000 per child whose income is clubbed. You will get an exemption of how much, guys? 1,500. This is under a section called 1032. What is the section, guys? All right. Next, guys, everyone. There are two exceptions to this rule, guys. The first exception is if there is any sim income. Guys, everyone, if there is any sim income, that means the minor child has earned the income using his skill. S for or his intelligence or manual work. Everyone, skill, intelligence, manual work. Example, guys, the kid guys sings really well. He went to Indian Idol. He won 10 lakh rupees. Is it a skill? Yes. So, guys, that amount will not be clubbed, but will it be taxed? Yes. If there is income, there will be tax. See think like the government, guys. It's not exempt, but it will not be clubbed. Guys, which income? Sim income. So I'm giving you some examples. You tell me with sim income. He won India's chess tournament and won 5 lakh. Sim income. He worked in an ad work, won to sim. He won a singing competition. Sim. He won Kaun Banega Crorepati 7 crore rupees. Sim. Because he won Kaun Banega Crorepati 7 crore, the parents threw a party. And in that party, he got cash gift of 51,000. Sim income. Why not sim income? Guys, this is indirect. This is indirect. He won Big Boss. Because we won Big Boss, parents throw a party and got gift. No, that is not sim. Everyone. So which income is sim? Only direct. Only direct. Everyone okay? So please tell me, sim income, will it be clubbed? No. But will it be taxed? Yes. Guys, if there is income, there will be tax. Everyone okay? That's the first exception. I'll take questions, but I'll answer mostly all questions here only. Don't worry. So, guys, sim income will not be clubbed. That's the first exception. Now, I'm giving you an example, guys. The child won Sony Indian Idol 10 lakh rupees. Will it be clubbed? No. With that 10 lakh, he made an FD and he's earning interest income. every income, repeat, every income of minor child will be clubbed in the hands of the higher parent. So guys, that sim 10 lakh Sony Indian Idol will not be taxed. But from the 10 lakh, what did he make? FD. From the FD is getting interest. That will be clubbed. Are we okay, everyone? Giving you another example. Kaun banega crorepati? 1 crore. No. Guys, it will not be clubbed because which income? Sim. With 1 crore he bought shares. And from shares he has dividend. Yes, because guys, every income you check, every income of a child, minor child, will be clubbed in the hands of the higher, except sim income. And next, guys, if it's a disabled child, which child, unfortunately, if the minor child is disabled, the government said, listen, we will not apply clubbing at all. That means disabled child FD interest, no clubbing. Shares dividend, no clubbing. Rental income, no clubbing. Everyone, I want more answers. For a disabled child, there is no. That means, guys, disabled child, his income will be taxed in his own hands. You can take rebate, you can take basic exemption, everything. That's a gesture from the government. Thank you and sorry because disabled child. Are we okay? Everyone, I want the two exceptions. Sim income will never be club. Will never be club. And disabled child, any income will never be club. I'll give you a pro tip. In the exam, if this disabled, no, ignore clubbing only. And in the exam, if it is same income, for that income, ignore clubbing. Yes, everyone, okay. I'm giving you some examples. He won KBC Junior 5 lakhs. Same income. Will it be club? No. That money he bought gold, sold gold, made 50,000. Yes, that will be clubbed in the hands of the parent. But these same two incomes for disabled child, no clubbing at all. For disabled, ignore clubbing. Everyone okay? All right. Hey, there is a concept of minor married daughter. Minor married daughter, illegal, purely illegal. I'm not even saying this is legal, but this happens. Yes, in Rajasthan, yeah, it happens. I'm from Rajasthan. I have seen it also happening. My mom was married the day she turned 18. The next week she got married. Yes, she was 18 when she got married. Yes. So because in Rajasthan, guys, they get married very early, and sometimes even before 18, and they don't even complain. They're happy. Yes, yeah. So you ask them, you're happy. They're very happy to get married at 17 also. Yes. All right. Anyways, yeah, please, yeah. Expert comments later. So, guys, this minor married daughter, if in the exam they say minor married daughter has some income, you will ignore minor married daughter and cancel it. In your mind, what will you write? Minor child. So, guys, minor married daughter will have the same provisions as minor child. So, I'm giving an example. Your minor married daughter has FD interest of 75,000. Ignore minor married daughter, minor child. Every income will be clubbed in the hands of the higher parent. Are we okay with this, guys? Yes. All right. Anything else I want to teach you? Yes. Guys, I gave my spouse debentures worth 10 lakh. Debentures worth interest income 2 lakh. Will it come back to me? Yes. Now with that 2 lakh rupees, she bought shares and she earned dividend of 20,000. Guys, stop. First, debentures. Interest income 2 lakh. Is that the first level of income? It will come back to me. With that 2 lakh, she bought shares and she earned dividend of 20,000. Will that come back to me? No, because clubbing only happens to the first level of income. Repeat with me, guys. Clubbing only happens to the first level. The second level, third level, it's called accretion. What is the word called? Accretion is never clubbed. Can we repeat, guys? Accretion is never clubbed. So which first level? Repeat, first level. But for minor child, because they don't have their own mind, they don't have their own brain, every level is clubbed. Confused? I'll help you with the confusion, guys. I'll remove the confusion. Guys, only club which level? First. Everyone, only club which level, guys? First. But for minor child, which level? All level. I'm giving an example, guys. Same debentures, 10 lakh transferred to minor child, interest 2 lakh. Club. With that interest, he bought shares, dividend 20,000. Club. With the 20,000 FD, interest 2,000. Club. Every income. Of which? But otherwise, only first level. Spouse, my son's wife, HF, only first level. Are we okay? Anything else in minor child? Yes, now sections. Guys, when you talk about HUF, the section is 64.2. What is the section? When you talk about minor child, guys, because they are special, A1, section is 64.1A. Because minor children are A1. That's a shortcut. And guys, how many spouse will you have in life? 1 because section 64 1. Yes. Technically, guys, generally 1. Yes. And son's wife also, guys. How many wife will the son have? Also 1. So section 64 1. Yes. All right. So section 64 1 is for spouse, son's wife. 64 1A, minor child. 64 2, H. Wherever I can, I'll plug in section ways because they are helpful. This chapter is also pretty common. Now, in the exam, no, guys, these questions are pretty simple. I'll tell you how these questions are asked. There is Mr. A, Mrs. A. Guys, who is it? Mr. A, Mrs. A, and a minor child. I'm giving you some incomes. You tell me who will be taxed. Mr. A, income from business 10 lakh. Mr. A. Mrs. A, wife. I'll talk about wife. Salary income 7 lakh. Mrs. A. Minor child, income from FD 3 lakh. Who's the higher one? Father. It will go, but you will minus 1,500. Yes. The husband transferred in the wife's name some gold and she's made some income. It'll go back because the dog goes back to the owner. So basically we'll make 3 columns and whichever column who will be taxed, we'll put the numbers in that column. Yes. So presentation wise, this chapter is very smooth. Only understanding how to get a good grip on that. Now some additional points, guys. Very important additional points. One of them you already know. So everyone watch this very, very, very carefully. I have only capacity to explain it once. Yes. Guys, here is the husband. Who is this? Husband. And there is an entity. You already know this, guys. There is a entity over which the husband has control. Yes, over which he has control means substantial. That means 20% or more. Basically, either shares he owns or profits he has 20% or more. He tells his entity that listen, your entity, can you pay some salary or remuneration or commission? Repeat, salary, remuneration or commission to my wife. Even though it is not linked, everyone, the shortcut is CN. Please tell me what is CN. Is there control? And it is not linked. And the wife got salary of 5 lakh. The government says, listen, I know what you're trying to do. So this 5 lakh will go back to whom, guys? Husband. This is called CN. What is C? Control. N is not linked. I'm changing it, guys. What if she worked? Then who will be taxed? Wife. Because if there is income, there will be tax. All right. So this is again, guys, with spouse only. The section remains the same. What is the section? 64 1. Only thing in the exam, check for CN. Pretty common in the exam, guys. What is C? And what is N? Not linked. Control is not just you along with your relatives, guys. You along with your relatives. Sir, what is relatives? I have so many cousins. I call my best friend also bro. So what is relative, guys? I'll tell you what is relative, guys. In tax, there are 2 relatives definition. How many relatives definition? 2. The most common one is this, which I'm teaching you here, guys. It's called clock. What is it called, guys? Clock. You are in the middle. Next to you, spouse. This side, siblings. Everyone. This side, spouse. This side, siblings. Children. Parents. Guys, do you see a clock? Everyone. This side, spouse. This side, sibling. Sibling means brother and sister. Real ones. Yes. Here, parents. Here, children. Guys, no grandchildren. No spouse, brother and all. Only simple clock, guys. Everyone, can we repeat the definition of relative? This is used everywhere except IFOS gift tax. There's a different definition. So whenever I say relative, that means clock. This side, spouse, siblings, parents, children. Then they added grandparents also. Yes. So this is the clock. I'm telling you, you tell me, is it a relative? Your child. Your child's child. No. Your spouse. Your spouse's brother. No. Your real brother. Yes. Your real sister. Your third cousin. No. Parents. Yes. Spouse's parent. No. Only your clock. Everyone okay with this, guys? Yes. So this is called CL. This is called relatives definition. Now something slightly tricky again, guys. Everyone. I just recapping. 4 relations: minor child, HUF, spouse, son's wife. Son's wife, very simple. Spouse, simple. HUF, simple. Minor child. Every income of minor child will be clubbed in the hands of the higher parent. Do you remember SIM? Do you remember disabled? Which level is always clubbed? First. But for minor child, all. Do you remember 1500? And if you see minor married daughter, minor child, and call the police. Yes. Yes. Okay, now guys, the next and I think the last point, which is here, no, I think 2 points, yes. Guys, Bangalore is very famous for a couple, slightly older couple, Sudha Murthy and Narayan Murthy. Yes. Guys, what did they start? Infosys. Same way, guys, let's say there's a couple, this is a husband and this is a wife. And guys, they started a partnership. Which firm, guys? She holds more than 20%, he also holds, she also holds more than how much, guys? Basically, both of them are controlling. Both of them are, I call this a butterfly, watch it. Everyone, very carefully. Husband and wife have started which firm? Partnership firm. He also has control, she also has control. What is control? 20% or more. Husband, guys, besides his partnership firm, he's a very rich guy, he has a lot of income. His income is 40 lakh rupees. How much? Wife is also rich, guys. She also has income. Let's say not so much income this year. Let's say she has 8 lakh every. Besides his partnership, husband has, wife has 8 lakh. Everyone okay? Now this partnership firm is paying salary, remuneration, commission. What is it paying? Salary, remuneration, commission to the husband also and to the wife also. Let's take the number of 5 lakhs. How many lakhs, guys? 5 lakhs. Very simple, guys. First, husband, wife, both started what? They both have what? Control. Everyone, both have what? And this partnership firm is paying them what, guys? Salary, remuneration, commission of how many lakhs, guys? 5 lakhs. Now, guys, answer simple questions first. Is there income? If there is income, there will be tax. Simple, guys. If there is income, there will be. So this 5 lakh will be taxed in whose hands? Husband. This 5 lakh will be taxed in whose hand? Wife. Now, for some reason, which I'll tell you the logic later, the government says that do you spot a butterfly? Guys, this is a butterfly only. Guys, do you spot a butterfly? Yes. In this case, the government has made a rule. I'll tell you the logic later, guys. Don't ask me the logic right now. I'll tell you the logic maybe tomorrow. But government says, guys, if there is a husband-wife, only husband-wife, and both of them have what? Control. Individually, both should have how much percent? 20%. Then the salary, remuneration, commission, whether linked or not linked, doesn't matter, guys. In CN, linked. Here there's no CN. Here only C. Guys, in that case, whether it's linked or not linked, this 5 lakh and this 5 lakh, will it be taxed? Yes, but not in two hands, only in one hand. Guys, not in, see, guys, logic. Is this 5 lakh taxable? Yes. Is this 5 lakh taxable? Yes. But instead of taxing in two hands, they'll tax it in one hand. Now you tell me, think like the government. Guys, husband or wife? Why? Higher. Guys, 4 lakh, 18 lakh. So, sir, how will I identify the exam? Guys, butterfly. What is the shortcut? Guys, everyone in the exam, if the husband and the wife both have control, everyone both have. Sir, together? No, not together. Alone. This guy also, this guy, this girl, lady also, and both of them are getting what? Salary, remuneration, commission. Nothing else, not dividend, etc. Salary, remuneration, commission. Then, guys, will that amount be taxed? Yes, but not in two hands. One hand. It's simple, guys. You and your friend are going for a movie. How many tickets? Two. Instead of both of you are paying 1%. Same way. This has to be taxed, but instead of 1%, two people paying tax, only 1%. Logic tomorrow, guys. Yes, right now, butterfly. So one shortcut, CL. What is CL? Control and not linked. Then, guys, it will come back. And what is butterfly? Both of them, guys, only control, whether linked or not linked. I call this a butterfly. I call that CL. Yes, everyone. And the last concept, after which, guys, we'll end clubbing discussion. Tomorrow we'll do the sums on this. Yes. What's the time? Anyway, 8 o'clock. Very simple concept, guys. There are two partners, guys, A and B. Everyone. Nothing to do with clubbing, to do with partnership firm. How many partners? Two. Both have equal share in a partnership firm. The partnership firm has a made up profit of 8 lakhs. Everyone. A and B. How many partners? Two. Partnership firm has made a profit of how many lakhs, guys? 8 lakhs. Please tell me, partner A will be taxed on how much? 1 second. Ashish lecture call you at 8:30. Yeah, okay. Yes. So 1 minute. Sorry, wrong question. A and B have started what firm? Partnership firm. Two partners, 50-50% share. How much is the profit? This profit will belong 4 lakh to whom? A, and 4 lakh to whom? B. Both of them will belong how much? 4 lakh. Same concept, but not a partnership firm. Watch what is happening here, guys. This is a husband. Who is this? And this is the wife. Everyone, husband, wife. Wife tells her husband, guys, over dinner that listen, yeah, I want to start a new business of jewelry. Which business? I already have gold worth 10 lakh rupees. How much lakh? 10 lakh. I want to start a business of jewelry. He says, listen, yeah, great idea. But why just 10 lakh? I also have some gold. I'll gift it to you. So, guys, he is gifting what? Gold. What? 20 lakh. What? How many lakh? 20 lakh. And so now, guys, she has gold of husband. How much? 20 lakh. Plus her herself gold of how much? 10 lakh. So basically, she has how much worth of gold now? 30. And with 30 lakh, guys, she starts a business. Great. Who's starting the business? Wife. It's not a part. It's similar to partnership. But who's doing the hard work? Wife. She has started a business with how much lakh? 30 lakh. And this year, congratulate her, guys. She has a profit of 9 lakhs. Guys. How much is the profit? 9 lakh every month. Very simple. Who's doing the work? Wife. Who's getting the profit? Wife. But the government says, listen, yeah, this 9 lakh does not only belong to you. How much husband has given you gold? 20. Out of how much? 30. So the husband's proportion is 2 by 3. Wife's proportion is 1 by 3. So out of 9 lakh, wife, you will be taxed on 3 lakh and 6 lakh will be clubbed in the hands of the husband. This is called clubbing. So repeat with me, guys. What did the husband give? Gold. When you gift an asset, everyone, when you gift a asset, and that asset is used for the purpose of a business, everyone, when you gift a and the asset is used for the purpose of a business, then out of that also the proportion will come back to you, everyone. Asset does not have to be gold, it can even be cash. Wife wants to start a travel agency. Which agency? She has 10 lakhs of her own. Husband is giving how much? 20 lakh. Total how much? 30 lakh. The travel agency made a profit of 3 lakh. Who made the profit? Wife. But it will be clubbed 1 lakh in the wife's name. 2 lakh will go in the hands of the husband. That's called clubbing. Same way. Loss also same proportion. Guys, if you're thinking about this, think it of like a part similar to a partnership and split the profits. And if you don't know the splitting, guys, I'll tell you. 2-3 friends go for dinner today. One order a lot of food, one only order Nimu Pani, guys. And when the bill comes, you'll see how splitting works. You'll know exactly what I'm talking about, guys. Yes, we know this so well, we only act like we don't know it. Yes, and we know it well, guys. Oh, I didn't have this, but I took only a bite. Yes, but you had a bite, you have to take proportion. So this is just proportion, guys. Only thing, the proportion has to be seen on the 1st April of the year. On which day? 1st April. Everyone, here is the catch. What if the husband gave how much cash? 20 lakh on the 10th of April, guys. Which day? 10th April. Everyone watch very carefully, guys. If it's on the 10th of April, how much money? 20 plus 10. How much money? 30. She started a business and earned 3 lakh. And earned how much, guys? Guys, in this year, there will be no clubbing. The entire 3 lakh will be taxed in her hands because, tell me the proportion on 1st April. 0. Husband has contributed? 0. Entire contribution is of wife. So entire amount will be in wife's hands. Next year, guys, on the 1st April, will there be a proportion? Yes. Changing the date, guys. The husband gave this amount on the 1st April. So please tell me, when will you see this proportion? On the 1st of April. Guys, what if the husband gifted on today, 20th November? Then this year, there will be no clubbing. Next year? Yes. Sir, what if the business only starts on the 5th September? Then only for that year, you will see the proportion on 5th September. Everyone. Guys, generally, when will you see the proportion? 1st April. But if the business only starts on 1st May, then that year you will see on 1st May. Next year, 1st April. After that, 1st April. Everyone. Guys, repeating this with a concept here. Husband, wife. I'll take my example. Let's say today, 20th November, I gave my wife shares worth 10 lakh. How much? 10 lakh. She herself has shares worth 10 lakh and she starts a business. Guys, today. But the business was started on 1st April, guys. What is my proportion on 1st April? 0. What is my wife's proportion? 100%. So this year, whatever is the profit or loss will go to whom? Wife. Next year, proportion. Are we okay with this, guys? So proportion has to be seen on which day, guys? 1st April. I'm cutting now another story. I gave my wife shares today 10 lakh. She started the business today with her shares also of 10 lakh. Then 50-50. Even this year clubbing will happen. Yes. So only in the year you start the business on that day. Otherwise, you'll take the proportion of 1st April. Summarizing the chapter, guys, please tell me the 4 relations. Spouse, son's wife, HUF, minor child. Spouse, great. Do you know CN? Do you know butterfly? In butterfly, linked or not linked? The salary remuneration commission is earned in how many hands? Two, but will be taxed in one. Next, if you transfer any asset, cash, debentures, shares, gold, and that asset is used in a business, same proportion like which partnership firm, but on which date? First date. Son's wife, no problem. HUF, whether partition or not, the dog will go back to its owner. And minor child, guys, doesn't matter who has given, neighbor, uncle, grandfather, but every income of minor child will be clubbed in the hands of the higher parent. Guys, their uncle has given an FD. Interest will go still go into whose hands, guys? Parents. So minor child will only be clubbed in the hands of the higher parent. 1,500. Do you remember SIM? What is full form of SIM? Skill, intelligence, manual work. Disabled child, no clubbing. Minor married daughter, minor child. Section also we covered. A small concept I want to cover on clubbing, which I will do tomorrow morning because it's a good break, and then we will start tomorrow's session. So, guys, everyone, I also want to prepare myself mentally, and you also have to prepare yourself while reading. You tell me, guys, tomorrow what chapter do we start? Okay, so we can do capital gain. I think capital gain we should wait for a little while. Any other chapters if you can suggest tomorrow?
Big chapter and small chapter.
Yeah, combination of big chapter small. You would suggest a big capital gain. I want to start after PGBP actually. So, can we do PGBP tomorrow? Yes. So let's do PGBP tomorrow. One big chapter, and along with that, TDS is also a big chapter. Along with that, return of income. Yes. So we'll do BGBP and then we'll do return of income. Now, what do you have to do since morning? I'll be taking a lecture, but you have that time on your own, guys. So with sums today, okay, at least try doing some clubbing of income sums. Where do you do ICI material, guys? Yeah, try looking at some clubbing of income sums. Then residential status and scope of income. If you want to do a little bit more, yes, you can do. Guys, do this before you come. And PGBP, if you can read whatever notes, because most of you guys have attended lectures, etc. Whatever notes, etc. you can read, you try and read on your own and come to class. I'll see you guys at 1:30 tomorrow, guys. Yes. In the meanwhile, I'm sharing the drive link right now, especially the DT link, and you can watch the revision videos, etc. Whatever you want. Yes. So tomorrow 1:30, I'm not putting on the group because everyone knows it now. Yes. People online as well. I'll see you guys tomorrow at 1:30 live here, and we are looking at PGBP tomorrow and a return of income. Thank you so much. Good night.